Good morning. What's going on? All right, let's see what we got today. So obviously NFP, a little different than normal. NFP will usually clear both sides of the liquidity. So we left the lows intact. Instead, this is more like a CPI type of movement. One-sided delivery. First presented from yesterday, and then last week, we delivered into that both, retrace, and now we've actually pushed above those levels. So if we're gonna maintain that, we'll see if we wanna actually clear yesterday's high up here. That was that data wick that we had. Yeah, price may be reaching for that. Just wanna see on NQ where we are. So kind of far away as well. Go to a higher time frame. Consolidation. Yeah, I wouldn't mind a high actually. Seems like we just want to keep seek and destroy right on a larger time frame now. So within this consolidation, we consolidate, we clear the high and low of the range. We fail to take out that high. We then slam back down into higher time frame discounts. And now we're coming back for those highs. So I think that's the objective here. Okay. Yeah, we'll see what the opening gives. Maybe if we can get a retracement back into first presented down here, and then a breakaway, we'll look to capitalize on that. The 5-minute fair value gap right here. That's what we held. So we just opened. Let's see if we want to go lower first. We're gonna have a huge opening range gap. So honestly, I would like to see, like, if we can clear buy side, and especially if we were to come up and clear yesterday's high before we go any lower. I like the idea of actually looking for shorts back into the range created off of NFP. Midpoint of our opening range gap is a new day gap as well, right here. So if we do want to fall, it would make sense. But for the time being, let's see if we want to get into first presented here. Oops. Equal lows. But yeah, we may hold from that. What up, Fisher? Good morning. Hot. There's a 5-minute right here. So yeah, if we can hold, accelerate into the buy side, clear that, break back down into the range, creating either an inversion or just a new PD array on the way down. We can try to target a run lower. The indicator, it's that all-in-one that I have. So that's a paid one, it's a premium indicator. But yeah, it has everything. the RTH gap. That's why I like it, because yeah, that way you don't have to switch back and forth. You could just pop it up and whenever you need. Okay, so yeah, I would expect if we are going to create kind of that buy to sell model we're speaking of, I'd actually try to leave all these lows behind. So going straight up off the opening first would be ideal, so we can clear some buy side while leaving lows behind, and then we could target those lows on the sell side curve. Kind of curious to see where today's first presented gets formed as well, so still waiting on that. I'd expect the 5 minute, right, with this kind of candlestick delivery, we're delivering into the 5 minute here and holding the body above the actual 5 minute here. So now I'll try to see if price wants to use that to accelerate it into the buy side. That's kind of my expectation, especially because this candlestick closed above this volume imbalance right here as well. So now it's kind of looking to see, right, in the short term, of these areas in price going to be the key sensitive points. I would expect they would to deliver into that buy side. So far it is kind of delivering like that. Just cleared the short term high, so we'll see if that's all we wanted to do. We got this high as well. So I'm actually, yeah, I'm favoring shorts. A little bit different. All week we've been looking for the longs, but today it'll be just flipped. Same idea. Want to see price go up first to clear buy side, and then we'll look for a run down. Because with it being Friday, NFP week, right, let's kind of zoom out. Let's go to a high time frame. Been consolidating. Do we have a chance of breaking highs and absolutely like printing higher prices? Yeah, but I think we just kind of remain within this range, if I'm being honest. On this daily. So if that's the case, after a quick sweep of liquidity, it makes sense to revert back into that range. What's the weekly candlestick looking like? Especially because, yeah, weekly candlestick all upward so far. So if we do get right high of day, that'll be a new high on the weekly stick. And then we could actually look for the retracement, right? The TGIF setup retracement back into the weekly range. So far, everything that I'm seeing makes me want to look for shorts rather than longs. If price just continues to rip higher and higher, we'll be fine sitting out. We don't need to be involved every day. Yes, that's where I went. My damn cat, sorry. God. One's bigger than the other, and he just be a bully as hell. Gotta break him up all the time. Cool, so far kind of delivering as we would expect. Volume balance holds after we tap that 5 minute, accelerate above the higher 5 minute. Buy side here. Looks like a market maker buy model. Yeah, up to go down. Well, it's always cyclical. buy to sell to buy, just moving in those cycles. So after we clear that, that's why I'd like to see, right, create the sell side, create the buy side, and then come back down, create the sell side again. Kind of like, let's see what day was that, Tuesday? Right, referencing previous part, yeah, something like this. Right, we were consolidating beforehand. We ran up first to clear the buy side, creating the buy side of the curve, and then target that sell side all the way down. This was so clean. I actually have a video coming out today about it. Just how we can use those when trading in consolidations. That should help a lot. So there's the buy side, cool. Where's the actual, as we said, yesterday's highs here. Oh, what happened to my indicator? There it is. So there's buy side already. Let's see if we can get yesterday's high. Ideally, we get yesterday's high before breaking lower. But if we actually want to maintain that, that'd still be fine. We'll see if we break here. Breaking this with a fair value gap would be ideal, because then it could actually be an inversion if we get back below that, and that's what we'd want to use. Right, we want to leave fair value gaps aligned with these areas. So we're coming for yesterday's high. Yeah, I think we can hit that. I almost want to turtle soup that. Where's the, is there any other, just hard because there's no really other price action near that. See on an hourly chart. Okay, so there's the first presented. So actually, yeah, if we do leave that open, clear the buy side up here, I'd look for the retracement. I almost want to soup that. Low risk. Let's see what's up here. We might actually try that. We're gonna try low risk turtle soup here. 0.25%. Because if we blast right through that, that'll give us a good indication as well that price may actually want to continue remaining bullish, and then we can change our objective to look for higher prices. But I feel like this whole run has been to get to yesterday's high, looking for a rejection off that, inverting first presented to trade back down into the opening range gap. So we're in right there. Let's see what we get. Turtle soup entry using yesterday's high. Would want rejection back underneath first presented, back underneath this buy side here. And then we may even be able to stack there if that holds, as we would expect to see it. So I like that rejection. Now I want to see, basically, right, for us to fall. We don't want to create a discount if we trade through that. That's kind of what I would not want to see for turtle soup entries. That's more bullish. We want to see price struggle to get above this and then fall out of bed. Clear all this up in here. First presented is what we're going to want to just have up. See if we retest that. And then we'll watch here. Oh, I want to keep those up. Hide indicators. That's the buy side right there. Just waiting to see what candlesticks do with the old buy side now. Cleared both areas. As we said, if we just kind of blast right through this, get stopped out, and then we may have to kind of reassess, because we may actually want to just continue bullish. So as we said, I don't expect full bullishness, but closures above swing points are kind of the market tipping its hand. So that's what we'd have to wait for. Got a few minutes until that happens. So far, right, the original wick was good, but now that we've pushed up and through like this, I don't like to see that because it looks like we're going to want to leave a discount here. We'll see if this candle can't reject. So far, just one-sided. Right, no, ever since the opening, or the NFP drop, excuse me, all one-sided. Did we clear? Yeah, we haven't cleared. Did we get these lows? Yeah, so we actually haven't cleared any lows. Equal lows there. Low intact. Low intact. Equal lows here. Equal lows here. Which is why I'd like to see kind of, not a short-term retracement, but now we're going to have to watch. Now that we've closed above the buy side, that will be an area of support, especially because of the volume imbalance. So if that does stay open, this one probably going to get stopped out, which is fine. As we said, very low risk with the turtle soup. Now, yeah, I think volume imbalance here will probably hold us. If it can give way, that'll be good. We need to see this become the swing point, or else this entry here will be in trouble. If this candlestick comes back down, taps the buy side, holds this volume imbalance, more than likely we run for the high, already kind of respecting that as a discount. So this is a case where I'd want to see this discount be invalidated. Don't want to see that be respected, because that's a bullish order flow. Instead, we want to see that give way. So far holding, we'll see if it can get below it. Okay, so yeah, respecting that. This is an immediate rebalance, so there's no fair value gap. That's why we're looking at the volume imbalance, because this is the only discount that is created as we break through this high. This candle here comes back down into this candle's high, immediately rebalancing. Yeah, so I think seeing that, more than likely this high here gets targeted now, which will probably get us stopped unless we can barely wick it. All right, just following the order flow, simple. If there's no inefficiency in here and instead we have the volume imbalance, price cannot get into the volume imbalance and hovers away from the body, next candle is going to accelerate into the swing high that we just created with the volume imbalance. It's a pretty simple order flow. Cool, and there's stop out right there. So fine with that. As we said, aggressive entry, so not even shaking up. We'll see if we can't still reverse, still favor shorts. Because at this point, if we're going to go long, right, we're not necessarily chasing, but we're at such a premium. Only way I'd feel comfortable is if we, let's go to a higher time frame real quick. Maybe if we close above and high and leave some type of inefficiency. But for the time being, we're just going to watch. If we keep running, as I said, we'll miss out on that. And I'm fine with that. This would be our next objective up here. This is an hourly swing point. So now if we're going to stay, we're just going to keep running highs. Yeah, NQ wasn't at its high as well. Right, that was another reason we were taking the turtle soup. Because if we're going to have SMT between the two, we're going to try to capitalize on that. Right, so NQ was all the way down here while ES was running the high. So we were trying to anticipate the SMT being formed, which is still May. We'll have to see. Could have just been a little too early. Yeah, it's bullish, right? Look at that. All upwards, all up close candles. No attempt to give any retracements. So yeah, we're going to watch for hourly swing point here. And what that is, let me just show you guys as well. It's this hourly high, which is and also an hourly fair value gap. Right, so we have an inefficiency in here. Just like this. Just like that. So we can actually move that level because it's the same high. So let's see if we can't get into that and then give us some type of bounce. Thanks, brother. Yeah, like I said, right, losing's part of it. Everything was aligning for here to meet, or for me to like trying to turtle soup that, so I have no hesitation doing it. Sometimes it's not going to work out, especially with turtle soups. Right, those are very high risk, high reward. Pretty much just trading the liquidity, not any type of market structure. So yeah, I'd look for 1 hour here. Now, if we were to blast through this 1 hour somehow, that may be kind of a flipping point for me, and we would potentially try to target maybe like the high in here. But we'll see. We have to get there first. Because yeah, so far, I mean, some type of retracement would be nice. Don't want to get too married to the idea, right? Price has its days, which is absolutely runs. But once again, let's go to that weekly candlestick, right? This weekly candlestick is all bullishness. So if we're going to create a wick on the weekly, like we would often see, right? That's kind of generic price deliveries creating a wick. We're going to look for some type of retracement here to close out the week. Maybe this is that, right, one time where it doesn't happen, but probabilities are in favor for that, so I'm going to stick with that. So if we can get something to where maybe slight consolidation in here. Oops, let's use this one. Slight consolidation. Trade into the 1 hour, maybe a few times, break away from it. And then try to capture the move down is what we'd be looking at. Oh, that's not a stick. Move that. Especially if NQ can hold its high. So just take a quick look here. Let's go to a 15. Ooh. 15 on this as well. All right, so if NQ can actually hold this fair value gap and ES rejects from this 1 hour, that'd be pretty nice. Because right, that's going to be pretty extreme SMT at the highs. That's this high to this high up here versus this high to this high. Run into the high. NQ is bearish. Oh, you mean bullish, right? Yeah, just the buy side of the run. But as we said, we could maintain bullishness. But if we're just going to consolidate, we'll get stuck here. Old liquidity. So that's going to be kind of my area of interest in NQ. I'll have that up just to see what we do there. This is a first presented fair value gap on the monthly sense. So this month's first presented, last month's first presented. I should forget what color that is. Hold on. That's our monthly. Okay. So the first monthly fair value gap is right there. Swing low in place. So I don't mind that, because then if we can run into this and break below, that'll give us a potential little shift in structure as well. Because we are so high above previous day's high, we may have a little issue where, right, even if we do start coming down, this could offer us some type of support. So if we do end up getting short, like off this 1 hour, we'll try to partial there. And then hopefully we can break below that as well. NQ looks bearish since yesterday, no liquidity. Yeah, I would agree. I mean, right, that's kind of my outlook as well. We are long-term bullish, which is why pretty much every trade we took this week has been longs and they've been playing out. But at this point, because we're at the extreme of the range, right? So if we're going to trade within the consolidations, that's what we're talking about. Trying to trade at the extremes of this range, looking for a reversion back into it. And especially because, right, today, just bullishness, so much bullishness. A lot of liquidity and inefficiencies that can be targeted here on the way down. Same for NQ. A little more consolidation, but still the same idea, right? Lows, lows, huge inefficiency. See what we get. So we are falling short at this point. I do like kind of creating another short-term swing low. So if we could actually trade back into this, hold, and then hit the hourly, I'd favor that a little bit more. Because yeah, this gives me just slight hesitation. If we break below yesterday's high, however, and then we can actually invert the first presented, that'll get me back in looking for shorts without having to see this 1 hour. So just giving a little if then, right? We like to get prepared so we're not surprised by price. My expectation is yesterday's high hold us. We try to run this high one more time where we can hit the hourly, hopefully, and then get a true break lower. If, however, we fall right through yesterday's high, we get back below that range, and then we, as we say, invert today's first presented, getting back below this buy side as well, then that may be a short. But for the time being, let's see if we can't hold yesterday's high. Give us one more bullish run, Short-term buy side just below a higher time frame inefficiency. What's your go-to coffee creamer flavor though? That's the real question. Oh, chill. Wrong chart. Okay, I like that. So let's see if we can't hold that. Want to see that. As we said, push through the high. Because now we'll have liquidity being cleared while also delivering into an inefficiency. That's textbook to look for reversals. Black? Chill. Black? Oh my. We got some savages. We got some grown men in here. Okay. My fault then. I guess I'm just a little sweet dude. I tried that, see, maybe more. I'm new to coffee though, so maybe that's why. I've only been drinking it like a year or two. So black to me, that's crazy. I need that. French vanilla. Was there a 2 minute? Ooh, there was a 2 minute. So that's even better actually. 2 minute fair value gap created there. So yeah, that should hold us. I mean, look at that beautiful delivery. Right into the high. Wick into it, bearish volume imbalance, candle refuses to get below it, acceleration through, small bearish fair value gap. We should invert that and then use it as support. So we do invert it, nice. And now as we said, we should probably use it as support. I think this high here is the objective for another run on stops. Yeah, let's get it. Yeah, I'm looking at the volume balance, but when I'm actually marking it, like the 2 minute, I just leave it. Right, that is how you're supposed to look at it, but I could see the volume imbalance. So I like these boxes to only be the actual fair value gaps itself. And then I'll use lines for the volume imbalance. Just personal preference. Like that. Right, because granted, like for me, when I'm seeing stuff like this, that's where I would expect that the bodies should respect the volume imbalance, but I'd want to see the wicks get into the fair value gap. And I'm also not mentioning that volume imbalance because yesterday's high to me is going to be more important than the actual volume imbalance. So that's, I'm seeing it and keying off of it, but yesterday's high is more important to me, which is why I just want that level more prominent than the actual volume imbalance, if that makes sense. Kind of filtering out, as we say, filtering out the actual PD rates being formed in the little price movements and instead relying on the higher time frame key areas of price. So we end up falling. Let's see if we can't hold from the actual 2 minute. Does its consequent encroachment. As long as the bodies respect this, as we say, wicks can do damage. As long as bodies are respecting previous day high, we should be able to maintain that. I want to see one more run on buy side before falling out of bed here. Especially if we're going to deliver like this, because now what are we doing? Right, we're leaving highs, lower highs, lower highs. So run out those, clear out that buy side. Boom. Get people thinking this is a breakout bull flag, and then max damage on them. We reverse for anyone that's long in here. Close below, back into. That'd be like my textbook price delivery. As we said, if we fall through here and actually get below first presented though, we're gonna have to try to reassess. Because to me, we may actually leave that 1 hour. And instead just use this as the high. Especially because we still will have SMT with NQ now. Yeah, it didn't even get into that fair value gap, no. Okay. So let's see what we do now that we've hit our first presented. Did we hit it? Just barely missed it. So we should get into that, waiting for that. Candle still held the 2, yeah, still held the 2 minute actually. So we're still watching that, still a chance. Original 50. Yeah, I would agree, right? I want to see just a pullback for sure. Like if we're just going to take, we'll take the most recent range. So the most recent swing low here up to that high. Looks like it'll probably align with first presented fair value gaps. Oh, I was like, why can I not see the template? There we go. It's right in between. Look at that. It's where its price consolidates at. That's hilarious. Directly in the center of that consolidation. So yeah, I mean, we favor that. As we say, we want shorts too. Just a matter of finding the setup. Watch this, potentially actually already short term. So is this gonna repel us into first presented? I just don't like that delivery, because that's setting up an easy run on this buy side liquidity here. We'll see though. Fall through this, we'll still respect that. I think we're going to try to use that with whatever gets left behind here. Easy trade into like these lows. First presented here maybe. But I'd still want to see us maybe bounce once and clear some type of high. I would just favor that. Yeah, we have one here. Right, in theory, but one thing that's kind of a caveat to these first presenteds, and it's things that, right, ICT is going to ramble about, which is why it's nice to listen to everything. He often says if these fair value gaps are less than basically a handle, how much is this one? Yeah, right, so if it's less than 4 ticks, he's going to kind of ignore that, which is why it actually pops up here. Because while technically, yes, right, this would be the first presented fair value gap from today, it's actually the original buy side. So I'm going to have that because it's already a key area. And I'd rather use this because this is a larger range, actual displacement. Whereas this one's so tiny. Cool. Okay, so I don't mind that actually. As we said, we're still holding the 2 minute that was created as we cleared yesterday's high. So as long as we can maintain that level, run out buy side. And I do like this because, right, we're now creating sell side. The fact that we fell short of that, to me, is not random. I think we're leaving that liquidity just above our first presented so we can target the liquidity and return into the first presented at the same time. Right, that's how I kind of see it. So I like that we did leave those lows actually. If we can still now hold yesterday's high, clear out buy side, hit the 1 hour, we'll still prime up to go short. So at this point, only looking for shorts. Filtering out the longs. If price continues to run long, won't be involved and we'll call it a day. Consolidation is going to be expected around previous day's high, however. So if we do get sloppy in here, that's also not surprising, especially because we've been very one-sided off the opening. So straight bullish delivery into higher time frame, key area in the form of yesterday's high. Consolidation will be expected after clearing areas like that. But for the time being, where's that first? This is our first presented. I want to keep that up. What's it at? There it is. And this is our 2 minutes. So we'd want to hold that in the short term. Come into first presented later with the sell side. Turtle soup number 2. Turtle soup number. I'm just in a soup mood today. I'm in some turtle soup mood today. I don't know why. I'm just feeling that. It's really because we've already moved so much. That's why, to be honest. I do know why I feel that way. It's because we've already moved so much. I'm not expecting bullish continuation. I'm instead expecting consolidation and trend reversal, which means buy side highs will be used as entry points. Smart money reversals. Especially if we leave this low. If we don't get into the first presented and we run here first, I will try to turtle soup that. Second turtle soup. We're going with soups today. Might get burnt again, who knows? But I like that idea. If we go first presented and then trade into that, we'll just wait for the classic kind of confirmation. So we'll have to wait for price to trade into it, show us a willingness to break away from it. Did we clear this high? Okay, so we did clear this short-term high. So now if we end up breaking below the first presented, as much as I want to see price get up here, we may use that still, because now this may have been all price needed to do. It picked up a form of liquidity, a short-term high. It's going to break back down below yesterday's high as well, especially if we close below the 2-minute. We have a 2-minute here, a 2-minute here, and a 2-minute here. Okay, let's see what we get. So there's the sell side. Maybe if we get a perfect tap of that and then run, that'd still be good actually, because then that's going to be another equal low. Let's see if that holds. You see, I wonder what turtles. That is a very good question, to be honest. Legitimate turtle soup. I feel like turtle meat would be like crab meat. That's just a wild guess, but who knows? They seem like they'd be a squishy type. 2-minute, got to rely on the 2-minute when looking at 2 minutes. We hold it. We have a bearish fair value up there. So this may be actually the start of the short. Let's just watch how this plays out. I'm just curious. No entry. I just want to try to get on side with order flow here as we start reading this. Because to me, if we respect this as an entry, midpoint of the 2-minute, after closing below its consequent encroachment and closing below yesterday's high, we would expect that to hold us as resistance to send us through the first presented. If we leave some type of premium as we trade through the first presented, inverting the original discount, that'll be another good continuation. And then we'll actually try to get short there. My only issue is, would we bounce back up into yesterday's high? And choppy price, yes we will. 5-minute. Do believe the move's done. NQ dollar. Two-minute actually hasn't closed below, however. So we're still waiting on the actual, right? No 2-minute closure below, simply below consequent encroachment. So this could be ugly, just painting outside the lines, as we say. Consolidation near previous day high expected. We did leave that low. Okay, so I still like that. Because now this low, we still haven't gotten into the first percentage. We've gotten right to it, but we have a perfect equal low there. We'll see if yesterday's high wants to offer us resistance. If we're going to start using that as resistance and breaking lower, we may get ready for the shorts. What time is it? 10:05. Okay, it's a little macro time frame. 2-minute, as we said, since we're going to close below consequent encroachment, I want to see if a body respects that level on a 2-minute. Instead, we go right back and close on previous day. Oh, we did. So look at that snap at the very last second. What's that look like on a 1-minute? If we break from here, actually, then we should continue to run, I feel like. This will all be balanced. There's no inefficiencies in here really anymore. From this fair value gap up to the high and back down, we've repriced into all the discounts. So those have been repriced into. From this high to low, we've hit all the premiums, right? So those have been repriced and balanced. Which makes me think if we were to break through lows, I would actually be okay trying to short, not wanting to see price come up into here. I'm curious, I'm real curious to see if we can continue to get stuck below previous day high. That'll give us a good indication of bearishness, right? If we can respect that level. Simply consolidating. Think you're, yeah, I like that a lot. Right, that would, that'd be like the textbook scenario. If we break through here, that's more of like trying to force the entry or having to recalculate, but for us, the best case scenario would be I clear out that buy side, boom, hit the higher time frame, leave the lows intact, target those later. Because now this is going to be like that false breakout, right? So we'll be able to create basically more stop losses underneath this low if we can break out through this high. Struggling though. Yesterday's high does not want to give way now. So let's see if we continue to respect that. As we said, we did clear a short-term high here, so that may be price, or that may be all price needed to do. We'll have to wait for more info. News was positive, so if I'm being honest, I don't really look at news at all. Besides like knowing what days to trade and avoid, I'm not really using them to gauge the fundamental interest in driving the market up or down. Because most of the time, it's already predetermined. Yeah, that was funny, bro. That's what I'm talking about with the Trump markets. It's hilarious. Just like a kid. It's like, why are we arguing with people on Twitter? Like, come on now. Regardless of your opinions, like, that's not high school drama right there. Arguing with men on Twitter. Nice. Okay. I like this. So let's get through that. We gotta get back above. Let's get that buy side. That's also why I do think we could dump, right? That's the only fundamental, I guess, we'll look at, is that there's so much uncertainty going on that the fact that stocks are still, right, refusing to fall just seems calculated to me. Or like if we run these highs, I think we're in danger. Like we'd run these highs and then goodbye. Down here type shit. Who knows though? That's just pure, right? That's just fun conversation. Yeah, 2-minute holding. Short-term low cleared inversion play. High frequency trading algorithm entries. Like this, 1-to-1s. Let's see what it does. Boom, we'd enter on yesterday's high. Stop loss below the candle just below it for an easy 1-to-1 targeting that candle's high. We are high frequency traders. Boom, out, easy. We come back into it. Second chance, you get long again, same level, boom. Stop underneath that candle, target this high, 1-to-1. That really is how some people be doing it, which, right, I guess that's valid. If you know what you're looking for. No patience. Maybe we try that one day. We give full, obviously, clarification, but just try to take every high frequency setup we see. That is like a practice that ICT used to recommend. It's something I used to do. I'd sit in front of the charts and basically every single setup that I thought was valid, I'd take. And that's what really kind of helped me filter out, right, the best setups versus the worst setups. So once again, still holding. Those first presented. Okay, so let's see what happens now. If we fall through that, I just don't like the price action leading up into that. I'd rather us hold this. I want to see bullish displacement from here. I want us to hold the first presented, clear these highs right here. This dollar's going lower as well, but so is NQ. We'll see. Closure below. We'll have to reassess, as we said. So far, that short-term high has been the catalyst to start sending price lower. We've displaced back under yesterday's high. Has the 2-minute, still gotta wait for the 2-minute. 2-minute has now just officially closed under this. So we've been using it. Now that we close under, may give us resistance. Let's see. Let's see if we leave a fair value gap there. Wouldn't mind a bounce. Quick bounce into buy side. Or another short-term high. Oops. Like that. Now we got to see. So we're retesting that 2 minute for the first time. I want to see what happens here. If we fall through this fair value gap, we may just have to trust that with this swing high right here to get into the. We'd go here probably. Just want one more run on stops ideally. If we can run out a high again and then break lower. Let's see, respecting the 2 minute. 2 minute being respected. Wick low, so we do have a wick low. If we wick through that wick low, it's gonna be a, oh, that wick is actually the same. Hold up. Okay, so it's not the same. Choppy, choppy. These lows are pretty clean right here. It's a 2 minute. It's also a 5 minute. So I really kind of want to, we're going to overlap the 5 minute as well. Because that's created as we actually break through the high. And it's a 2 and a 1. Okay, so I like that. So let's overlap these two. The first presented actual 1 minute and then overlap that with the 5 minute kind of first presented. In case we want to pan outside the line, so we could allow wicks into this low. As long as we can still hold bodies. Yeah, we'd favor a run on stops now at this point. Max Carnage, Max Carnage. Yeah, because that would be clean, right? People see this as like, what are they, the channel? Whatever retail calls it, the bull flag. Or I guess that wouldn't be a flag, more of a channel. But if we break out, right, we're going to get people to go long. We're going to bait people to try to start taking this long breakout. Then reverse on them, wipe them all out. This is actually kind of good too, because let's say people were trying to short here actually right now. So where people going short have stops probably above this high. So you can almost knock two people out. Knock out the shorts. Trap people trying to go long, then move lower, right? Keeping these people that were long trapped as well, taking out their stops next. Yeah, let's do that. Let's be the market maker here. So let's get above highs. Yesterday's high again. As we say, this is going to be key area. You always want to have your higher time frame reference points, and more importantly, daily high and low. Right, the open, the high, the low, and the close of the daily candlesticks. Those are like priority number one as far as price reactiveness. You're going to always want to have those levels. So at this point, if we keep rejecting this aggressively, we'd have to displace through the first presented. That is kind of what I'd be having to look for to trust a short. Because we are showing an unwillingness to want to really get back above yesterday's high. Right, the 2 minute has been holding us as an inversion. So yeah, if we do end up displacing, it'd need to be displacement. I don't want like a quick little run low to just sweep this low. Yeah, flush a dump would be nice, right? That's what we're wanting to see. It's prime right now to just dump. Just a matter of where. Do we want to get that one more? Right, pick up these stops. There's just a lot of stops. Phantom trend line on both sides. As we said, first presented 5 minute, 2 minutes. So being stuck between these two PD arrays because it's also the previous day high. That's another way to kind of use little consolidations like this, is you want to anchor the PD arrays that are formed right near the previous day high and low. That's often what we'll get stuck at. So far we're range bound. Maybe we wait till 10:30. Okay, so if we're gonna want to put in the morning range first, 9:30 to 10:30, put in that morning range. We got about 10 more minutes, and then price could maybe dump. Let's not forget though, still a Friday, NFP, bullish movement all week. So if we're gonna fizzle out, probably be from here. Eight. Want that high. Want the high. 2 minutes still holding. These highs are just too clean, man. Too clean for my liking. And having these higher time frame anchor points, right, when we're consolidating like this, is also just what prevents you from over trading when we're stuck in here. Because if you were trying to trade like every, as we say, every premium or discount that's being formed by the actual candlesticks, that's when you get chopped up. So for us, we kind of have clear reference points where we either need to get above or below. If we're inside of that, we just sit on our hands. Still ugly. NQ really in the same. NQ is even uglier, to be honest. First presented. That's crazy. What's yesterday's high though here? Right, that's all the way up here still. We did get the original liquidity, so I do like that. As we often say, if we're going to remain range bound, the first liquidity that gets taken, so this one here, right, that's the original liquidity that gets stabbed up into, and then we revert into that range. We drag all the way out. As we hit that again, we can reject, and that's what we're seeing there. I mean, look at that. That's not right. You can't argue that. Hello? Perfect. Break lower. Consolidation. So maybe same idea, to be honest. Run up, clear the highs, hit that again. Now we have all these lows just above the opening range gap. This might be an afternoon session though, unfortunately. It seems like we're gonna want to wait. At this point, I think we time to distort till 10:30, maybe 10:30. Once that opening range gets put into place, it'll want to fall back in on itself. But you could really see the compression between the two PD arrays right now. Right, referencing these aggressively. And it's funny because this is probably the, yeah, I was like, there's a 1 minute inside the 2 minute. If I bring that up, look at the candle bodies right there. Boom, 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 boom. Let's see. Wicks, boom. Yep, again. Funny. So yeah, either way, consolidation on a mini time frame, right, should lead to expansion. We'd favor bullish expansion, clear out buy side. Boom, reverse on it, go sell side. Buy to sell model. He said, okay, Usher, hey, Khalid, okay? It's Khalid. Had to turn it off quick. Put it on vibrate. Yeah. There it is, expansion. through the high. I still like a turtle soup, honestly, especially after all this, because if we were to do that at 10:30, that's going to be the high being put into place. We're not going to want to clear the high. Let's do it. I still like a soup. Because at that point, if we blast right through this, get above the 1 hour, I'm just going to let it run and we'll call it a week. Right? No need to be sitting here pushing. Oh my, look at that. It's hideous, huh? Yeah, so we're just real stuck right there. Yesterday's high again, as expected. So yeah, at this point, I'm expecting choppiness till 10:30. 10:30. If this is the high that's formed at 10:30, or at least anyways, if we get to 10:30 and this high is still in place, and then we break below the first presented, I'll be okay trying to short that. With the idea and the expectation that, okay, our 9:30 to 10:30 range has been put into place, we'll often see that if we want to remain within that during the morning session, right, it's going to revert back into that range, and that's what we would expect. Pair that with the fact that we have a lot of sell-side liquidity. We've been one-sided off the opening. We haven't yet to really venture into the opening range gap. And we're rejecting off previous day high. So all of these leading me to believe we should run lower. But time is the first factor, right? So wait until 10:30. Just go like this for a bit. Clear it all up. Oh, excuse me. Da-da. 70 view. Okay, we're getting up there. It's the most people we've had yet. Appreciate y'all hanging out. Slowly but surely. Everyone does use NQ, yeah. I agree with that. So I came back. ES, someone's got to give ES love, man. That's my baby. People like NQ because, at least in my opinion, right, you could say, like, if you capture a trade, it just moves a lot more, so it's easier to kind of sell that. I was like, oh, I got a 100-point move in NQ. When in reality, it doesn't really matter how much you caught. It's about the risk to reward. No trade day. Oh yeah, for sure. Right, that's perfectly valid. I'd agree. Usually I wouldn't even be here, but as I said, just trying to build the YouTube. So as part of that, got to be here every day. Consistency pays off. Unfortunately for me, I still know how to kind of navigate, or I do know how to navigate in choppy conditions. So I'm not really worried about doing bad things, we'll say. I'm not too worried about creating poor habits. Funded. So funded for trading. I have a live account for options. But as far as intraday trading, it's funded. How do you use the 2 minute? So for me, right, what I'm utilizing, as you said, there's a 2 minute here, there's a 2 minute here, there's a 2 minute here. The one that's going to be most important to me is the one that gets created as we're clearing the previous day's high. That's this one. Because that is the most recent discount formed as we are right breaking outside of an old range and a key level. So immediately I'm going to look at that first. That's what we see price holding, and that's actually why we're holding bearish underneath that. Next, I would look at this one just because it is the first presented, but I'm not necessarily using the 2 minute just because, right, it is the first presented already. So I'd rather have this 2 minute up here be kind of the key area, because those are the two PD arrays that price is just going to get stuck in between. This is straight barcode. right? The beautiful thing is we're already anticipating this, so it's not like, sure, it may be draining because like no one wants to sit here, but if you were expecting price to be running and it's doing this, that's just going to make it worse. Whereas because we already expect that nothing's really going to happen till 10:30 or later, it's more peaceful, if anything, right? Just looking at this and being like, oh, we know this is taking place. It's nice to know this is going to take place and be able to just sit on our hands without any worry. So a few more minutes, as we said. I think time distortion till 10:30. Looks like this may be the actual morning range high, which is, if that's the case, if we can at least maybe run out like this, little consolidation, and then break underneath the first presented, that'll be a pretty good short for me to try. Needs to go higher than gap. I'll go fill the gap, right? Best case scenario, yeah, that'd be what we want to see for sure. Manipulation through some highs, break lower. I wanted this high, but it's looking a little far-fetched now. Who knows though? Could get a crazy, right, displacement candle. Maybe something like this is a boom. Because this is a very tiny range, to be fair, right? This is like what, 5 handles? So we can easily get a 3-4 handle move in one candle to just run that high out. What was this range? 25 handles. Okay. Ooh, so look at, we're making an attempt just before 10:30. Oh, it's baiting us, and we close below. Damn. Wait, where's my? I deleted an indicator. When did I delete that? What the hell? Oh my gosh, we gotta go way back. Bruh. Oh wait, I have a template. I'm goofy. Okay, there it is. Oof. So, okay, it's 10:29. So as we said, 10:30, that's not random. We're gonna have to trust that. If it does what I say I expect it to do, we can't hesitate with it. So that fair value gap right there is going to be perfectly aligned with the 5 minutes consequent encroachment as well. But I want to wait until 10:30. So if this candlestick closes, oh, that's just hideous. I don't really like that. I'm not gonna lie, let's see. Okay. We'll go 3. 1/4% risk. So half the risk as we normally would. But I mean, that's what we expected, right? We said if we're gonna consolidate until 10:30. If 10:30 breaks below, leaving the high, that's gonna be the opening range high. We're gonna invert the first presented right at 10:30. We leave a fair value gap there. So okay, yeah, we got to do it. Let's get it. That's exactly what we wanted to see. At this point, as we said, I don't want to see yesterday's high now. We've already spent so much time in here. This is all balanced in my opinion. As soon as we left this candlestick's low, right? Because if we're going to think about this logically, from this high to this low, that was our current dealing range, because this clears a little short-term high. So if we're going to look at this range, right, we've repriced into the high of it multiple times and the low of it. So as we leave that, this is going to be a balanced price range right here. Pair that with the fact that it's also our first presented. 10:30 has been put in place. So yeah, we should actually, we're going to go low hanging fruit entry like that. Because we may actually just run, which would be unfortunate, but 2-minute close below, 5-minute close below. Okay. So yeah, I'm fine with this. If we get stopped here, I'm fine, because this is a good setup for me. I like that. And we'll try to get first presented here. Getting back underneath this sell side as well, right? Look at that fair value gap. So yeah, everything that I would really need to see for me to trust that is here. So we're gonna do it. SMT with NQ though. Correct, but also it's SMT at the highs, right? So SMT is always going to be formed. That's why it's like something you can't really just always rely on by itself. Especially if you're looking at a 1-minute chart, like there's going to be SMT anywhere you look. So you don't want to throw yourself off. What you want to do is you want to use higher time frame SMT, right? That's really the key area. And that's why, right? This right here is way more important to me. Let me bring it back. Hide everything. This SMT here between ES and NQ is way more important to me than the little 1 minute SMT being formed bullish. Right, the fact that we ran all the way up here, this high, whereas in NQ it's this high, that's a huge discrepancy. And we couldn't even get up into that fair value gap at all. So I do favor a run lower. Bring that buy side back. So I don't think we get there, or at least I don't want us to get there now at this point. Instead, use either this old buy side pull with that fair value gap. Yeah, that's clean. Okay, let's try that. This will be our entry. Round number 60-10 to get into first presented here. My only concern was this maybe, like if we're going to institutional order flow that, we won't even get above this, but I was hoping for at least one handle stab into that. I think we could still get it. Like the actual first presented, I want to see that. We do have this as the bearish itself, but I think we can paint outside the lines just a bit. Hopefully it's not an institutional order flow entry drill here. Need to hold this wick. If not, we may have missed that. Look at that perfect delivery right there into the opening range. That's beautiful. So yeah, I like that. Actually smack the opening range real quick. Slight retracement into the discount. Or the premium, excuse me. Rejection. Then we clear a low, we can partial. Clear a low again, partial. Final closure here. Bearish volume imbalance. Yikes. So I'd want to see, I don't want that to be open. I mean, I do want it to be open, but I want the entry first. So maybe wick and then reject. If that just stays open bearish right away, we may start running lower without giving us the entry. Instead, just using that old liquidity, as we said. Oftentimes, old liquidity points, as we get back underneath those, is what's going to hold us. Pair that with the fact we have that fair value gap there. So this may be all price needed to do. I think we can get another run down. Just a quick stab higher. It's also this little 1 minute here. Remember that. Retesting it. Let's get that first presented. All right, so we're in. So now let's see if we blast right through first presented. Obviously, we're going to be offsides. Okay. This type of delivery, we shouldn't spend much time in here. So that'll give us another indication. Like if we even want to get above that, I think we'll come for this quickly. And we're just going to keep consolidating around previous day high. With this type of entry, we want rather quick displacements away from the discounts that are created when they're overlapped with areas like this. So right, that's midpoint. If we close above that, already we're going to be in a bad spot. So I'm watching this fair value gap's midpoint. Because yeah, it's the 2 minute. It's also the 5. So we have all the fair value gaps are here. Just a matter of, are we going to respect the premium or are we going to invalidate that? Continue to run bullish after clearing these lows. I like a retracement into the range, so we'll commit to that idea. So as we said, we want candlesticks to respect consequent encroachment. Closure above, just not a good sign. Bad sign there. We did get a bearish volume imbalance. We'll see what happens once we tap the high of the first presented. It's also the high of the bearish, okay? So that's going to be kind of the max. I don't want to see a sharp rejection. Closure back below first presented. So So there's a rejection. I don't want to see price hold right here at this midpoint. If we respect this consequent encroachment, that's more of a bullish sign for potential runs higher. We need to invalidate that and close back below the first presented. And it's actually troublesome because now we've created a bullish fair value gap that we'll have to get through as well. So let's see. If we can get this low, that'll be one partial. Ooh, we do respect that. Look at that. That's not good. Okay. So yeah, we're not what we'd want to see at all. Immediately rebalance, which means one of two things. We're going to run right outside of this and target this previous day high, because now we've immediately rebalanced inside of here, right? Which means price doesn't really need to continue to retest it, and we may just bounce. If we can overtake that immediately rebalanced spot and close back below, that'll be a good sign. But for the time being, I'm leaning towards more. We may respect that. So we need to see price make an attempt to get below this consequent encroachment. There it is there. We don't want to see a rejection, especially because this candle's already rejected the low of the first presented. Yes or not, let's see. So we're able to reclaim that. I don't mind that. There's the high. We have equal highs. I don't want to see these equal highs honestly be messed with. We might get up there for offsides, which it looks like we're going to want to, but for the time being, holding the 1 minute. Put it like that. Couldn't move this because we're just looking at the first presented anyway. We need a 2 minute to be like last line of defense, right, where our stops up here. There was no buy side. We can kind of just put that over here for now. We're testing the high. Got break even. Hey, take it, brother. Friday, take what you get. Break even is better than a loss, right? So closure above, we get stopped, as we say. Probably just consolidate around previous day high. If we get back up there, we'll call it a day. Because now at this point, we're not going to come back into the range, and we'll probably wait till the afternoon. As we said, that's the 2 minute. That'd be like our last chance of protection. If we're going to want to get through that previous day high, easy reference point. Closure above, okay. So yeah, to me, stop would come probably on this candle, the next candle. If we're going to close above that first presented, after consolidating within it, we're going to want to push up and through that. We've now created the inversion aligned with that as well. So maybe actually that buy side is going to be what's targeted here. Right, clearing the short-term low inside the buy side. We wanted to see retracement into the range, instead unable to. There is that 2 minute. So we'll see if the 2 minute can't give us a saving grace, because we've inverted this 2 minute, but already I'm thinking closure above first presented, not a good sign. Very next candlestick, if we can close back inside, that'll give us one chance. But if this candlestick, right, hits the high of this, especially because we already have equal highs, that's going to be the inversion play to rally price higher. So we'll see what we do here. Not a fan. We're going to immediately rebalance that. So immediately rebalancing usually means next candlestick runs this high out. We held under the 2 minute. We'll see if we can't get lower. 2 minute respected. Yeah, we need the 2 minute to break pretty aggressively. reclaimed bullish first presented. So that's going to be a pretty huge issue for us as price trades into that. It's going to be where it's going to find support, right, if we're off sides. If somehow price can fall through that, that would be pretty good for us. Stop could actually get put to this high. But now it's looking like price isn't even willing to actually revisit that area. Yep, okay, so we leave that, this high here. As you say, immediate rebalance. If we don't come back down into that, that's bullish. Price is going to want to run. We hit the 2 minutes midpoint. We would need an immediate rejection from there. That's about max, right? That's that 2 minute. If not, easily. Because now we'll have run a short-term high, so we'll see what we get there. We want to see this reject and actually hold the 2 minute. That's the only way we'd feel safe here. So potentially, let's see what we get. If we can break, if we retest first presented, that'll be good, but I want to see us get through that. We don't want to bounce from there. I do like that little wick of the high, followed by the closure back below the 2 minute. So now midpoint's been hit. If we run that high, we're gonna get stopped. So I might actually we could just do that. Still unwilling, right? Showing an unwillingness to move lower. It's bullish. Let's see. So here's the first test. When we test that first presented, now that we've reclaimed it, as we said, this is probably where for offsides, price will bounce from here, boom, run right into the previous day high, and then we're gonna get stopped. If we can fall right through it, that's what we need, because in reality, if we show any hesitation in here, that's just gonna be an area of support, right? And we're gonna kind of accelerate like this candle, most likely in one swift motion right back into previous day's high. So from this point, we need to fall right through this fair value gap. That's what I'm looking at. Anything other than quick movements through this, just not looking good for us at all. So like things like that, we don't like to see that. We'll see what bodies do. We don't want to give this any type of respect. That's what we need to see. Okay, displacement right through it. We don't want to see the low of that be respected though. Because if we respect the low of this and close above midpoint or the high of it, that's for sure going to be a stop out. Right, because now we've cleared equal lows, we're turning into this little 1 minute discount just below it, holding the first presented, and now having a buy side target to target here. So yeah, that's pretty much exactly what we did not want to see. Let's see how we close. Need to close at least below consequent encroachment to give us a chance. We did, next candle, we'll see. But yeah, to me, that's already, that's not too good. We need to respect the high of this. At this point, like we said, if we clear this high, we're gonna hit yesterday's high so we can cut risk. Because already we're spending too much time in here. So the fact that we came up into this and we're consolidating again makes it lower probability the longer we're spending in here. Right, let's look at like a 5 minute, because now we have a 5 minute bullish aligned with that. Yeah, this is ugly. So if we can get, we're going to close 1. If we can get the low of this again, I don't know if we're going to give it a chance. Like I said, we may, now that we hit that low, that's what price is going to want to use. And then we're just going to run right up into the high. Especially because like that 5 minutes right here, right? I wanted to see this 5 minute be inverted, but instead we respect it and we're respecting that. So all this, yeah, that's bullish as hell. We close back above first presented with a bullish volume imbalance. So as we're following this, we would need to close this volume imbalance in and make another attempt inside of this first presented. If this remains open, especially after hitting the low and trading into that 1 minute, this is going to be a key area that, right, will probably continue to support us into the high. So now we're watching and seeing. We need to close in this volume imbalance if it gets left open up here. Retesting the 2-minute. $10.47, so maybe $10.50. We'll see what we get at $10.50. Just the chop fest here. We leave it open. So yeah, that's going to be used as support there for sure. As we come back down into first presented, it's probably going to bounce from there and take us right into the high. If we're real bullish, we don't want to even come back into the volume imbalance. But if we do, watch that. I would expect that to hold us for sure. If we can negate that, that'd be good, but I'd expect something to where a body or a candle wick trades into this, the body holds here, and then you get acceleration into highs. 30 seconds, so far looking like it does, right? There's the wick into the high of it. We've already hit the low, so we have no intention to get any lower. Huge rejection. Okay. Yeah, that's what we would expect with bullishness. If we can get below that, maybe we have a chance, but for the time being, everything's kind of pointing towards price wanting to make another attempt at previous day's high. And just continue to kind of stay within that right range. As we say, after clearing highs, if we're not going to want to accelerate or retrace into the range, we're just going to continue to reference that daily level. And that seems to be the case here. We hold that, so that's pretty much the exact delivery we didn't want to see, right? Wick goes into first presented, body holds. Again. So now this time, if we can't even get into the first presented and instead get stuck here, even more bullish. So yeah, can't even get into first presented. Let's see. 20 seconds. Interesting, because dollar is running this whole time, which we would usually expect price to move lower, which is why I'm also thinking that, right, we don't actually want to revert into the range quite yet. Because if we take a look at the dollar, huge bullish move, really all up close candles should be met with a sell-off here in the indices, but instead we're still reverting at that previous day high. So I do think we're going to want to at least tap that level once, which is going to get us stopped, especially as we said, right, very next candle now can't even get into first presented. So as we continue to move away, we're not even wanting to get into these deeper discounts, which to me is just a sign that price is going to want to make an attempt for highs. If we can reject the 2-minute low, break underneath, that's what we'll need to see, but I don't think that happens. Yeah, we clear the short-term low, we hold, we accelerate, we leave, we create the discount, we tap into the first presented and hold the discount and accelerate. Sometimes I'll reverse positions, yes. If I know for a fact I'm offsides. But that's usually when the market's like trending. Because like in here, right, we can technically, let's say that we know we're offsides, we can reverse it and go like this. So if price did tap that, we could try to go long and capture like 5. But I'm fine just coming into it here. So that's because it's choppy, right? Pretty choppy, which we still expect, as we said previous day here. Once again, as it tries to go lower, it can't even get into the previous discounts. So now this time, after hitting the volume imbalance and the first presented, it moves away. This candle can't even get into the first presented, instead holds the volume imbalance. And now this candle can't even get into the actual volume imbalance itself, and instead is holding the down close candle. So yeah, everything's pointing towards stop out here. Unless we would get like one swift candle that can just run through everything, which maybe, like this candle, we need one of these, right? A true disruption in price. Because if not, it's just going to be a slow grind higher and higher until we trade into this and then consolidate into the afternoon. So at this point, we need to see just displacement. That's where you can reverse, because if we're going to go bullish, it's going to be from here. bought one there. So not necessarily reversing, but cutting risk at a clear area that allows us to. So now we're able to cut some risk off. Because right, as we said, that's going to hold us for sure if we want to maintain bullishness. The fact that we didn't even try to get lower, like that right away, is what is throwing me off of this entry. Is that there was no even attempt to actually respect this. Trade into it, candle body, we trade right through its consequent encroachment, and we deliver right into its high with 3 direct candles. So to me, that's why this is going to be more of an inversion, unless we can, right, as we say, displace right through it. But for the time being, after hitting that high, yeah, watch this high now. Just ugly. NFP Friday, baby. Good example of why you try to avoid these days, right? As you said, sometimes you have to learn by doing. At least for me. Where people can say you should avoid consolidations and this and that, but until you actually like experience it yourself, you don't truly understand why it's best to sit out on days like this. So another retest. How could you get in touch with me? That's a good question. I guess the only people that really reach out to me are like the people I have in my Discord. It's a private Discord though, just for that reason, because I'm kind of private myself. But I mean, if you have questions, I could try to answer them here. But if you want more like one-on-one, just being able to message me, you'd have to join the private Discord. But as I said, we're on live stream most days, so if you have questions, I can answer them that way. Private Discord's just for deeper access to me and my concepts, or the concepts I use anyways. This whole week has been like this. Exactly, yeah, it has been. And the good thing about this is, like, as we say, we still have our clear-cut areas of invalidation. So while this is ugly, I'm not really like stressed about moving the stop or moving the TP. You just got to sit in it. And we understand that at this point, fully expecting this to just hold us bullish. Even though the dollar, right, look at the dollar is just ripping. So to me, that's not a good sign, because we're getting held in this consolidation. So as the dollar rips, NQ as well, yeah. So as the dollar's ripping higher, hitting its first presented, any pullback in this is gonna give lift to the indices. And we're probably gonna get absolutely, probably like ripped through, right? It'll be like a TP or a stop loss smashed. A partnership, interesting. I mean, yeah, you can, I think it's in the, is there a link in this video? If you follow the link that's in this video, that takes you to my Twitter. And then I think I have my Discord linked on my Twitter. I don't have it on my actual YouTube at the moment. I forgot to set it up. Or you could just hit my Twitter too, I guess. Yeah, we're going up. Up, down, 6, 7. Let's get below 2 minutes. They're respecting, so that's kind of what we're using, as we said. But yeah, we really need to displace back below. You'll notice that this trade was never in profit. That's another kind of sign that tells me I'm off sides. As we said, as soon as we enter, it has not made an attempt to even move lower. So I like that a lot, but we need to continue that, because if we hold that, we're just going to keep consolidating, right? If anything, we're going to come back for this high. So now that we have a bearish volume balance, we need to keep that open. We need to leave the first presented and truly leave it, right? We can't just keep going back and forth in here, because we do have, as we said, this 1 minute. So I'm not fully convinced yet, because this can simply just be a retracement into this little 1 minute. We can keep bouncing and be ugly. We need to see price actually leave and close below. If we do that, I'm gonna put my stop here, because now at this point, this will be our new high that should be protected. Wouldn't want that to be targeted. That's so gross. As I said, watching this 1 minute, we're gonna hold that 1 minute probably. Yeah, it's just worst case. Terrible. Okay. We'll go right there. Because it's consolidating. I just don't want to be involved. If we come up here and get stopped, I'm fine. I just want to be out of this, regardless. So do your damage price. Now that we have a bearish fair value gap there as well. Right, because if we end up inverting that, it's just so choppy. Especially because we've already spent so much time here. So if we're going to get above it, test it slow, get above it, and now close below it, we just need to stay below it. Or else we're not really respecting it and we're just consolidating in here. So right, we would need to reject from here. If not, stop. And we said it needs to be quick rejections, not fickle, just continuing to trade deep into them. So yeah, not like that. Close above consequent. Oh, it didn't close above. Okay. So we actually do hold consequent encroachment. So we do still have a chance if this candle can close below and leave the first presented again. Because as we say, one candle opportunity. Although this candle opens, or excuse me, closes below, the very next candle snaps right back in, negating this candle's actions. So if we can get back below it again, that's what we'll need to see. Get back below it again. And I'm just going to get out here at this first present, or at the opening range gap if we can. Okay, so I do like that. As we say, we need to get below this though. I just don't like that we're hitting that. If we get stuck here, I might just out close one right away. And just leave one, because it's just gross. Let's see what we do here. I'm fine closing one right there. So, oh, we only have two. Okay, I already closed one. Never mind. Forgot we closed one here as price was consolidating. So we only have two. So that's already very minuscule risk. So I'll just leave the two there. Especially because we've moved our stop, right? The original stop was all the way up here. So we've closed one already, and now we've moved our stop. So this will be already reduced risk. I've changed my stop management from a year ago. I used to cut partial positions immediately. I kind of agree with that. But right, the reason that it's different now is because of the actual market environment. So last year was a little bit easier because we were just kind of trending. So it was a lot more trending price delivery, which means that if I entered into a trade and it moved against me quickly, I knew I was offsides. Whereas the last few weeks, last month or so really even, have been choppy, a lot choppier price delivery. And when that's the case, price can reference PD arrays more than once, right? It can go up and down through them, continue to reference them and still respect them. So I'm not as quick to cut them because you don't want to really take yourself out of the trade too early. So like when we're trading in consolidations like this, as soon as I kind of have the predetermined areas of TP and stop out, I'm going to kind of leave those. That's gross, because I mean, even as you see here, right, just ugly in here. So yeah, if we do, that's so ugly, holy cow. It is 11 o'clock, so 10:50 to 11:10, maybe we get something, but the fact that we just keep referencing this is gross. Let's do something, get us out or in at least here. Immediate rebalance, that looks bullish. So we may be getting stopped here. We hold consequent encroachment, bearish volume imbalance, that needs to stay open. That closes in. Watch the stop. Oh. But yeah, can't even get below that. That's what I'm saying. We can't even get outside of this discount paired with the actual, in reality it's this, right? The original inversion. We're stuck inside of that. It varies off market structure. So I have a fixed risk percentage that's based off the stop loss. The stop loss size will be different. Usually it's no more than like 5 handles, 6 handles, but sometimes, right, it's a little more and we'll have to adjust risk accordingly. But I don't really have a hard set on like how many handles for the stop. It's really all risk to reward. Because, right, it doesn't matter if the stop's 2.5 handles or 8 handles, I'm still going to risk the same accordingly. So once again, respecting consequent encroachment. Watch this. This probably gets us higher here. This will be it. Because now we've cleared the lows. We've respected the low of the actual inversion. We're hitting the high and we're above its midpoint. I think we hold from that midpoint, get higher. As we said, this is that price delivery that trips people up, drains mental capital. So even if you're like break even, right, or if it wins, a lot of people are going to feel tired after something like this. They're going to feel drained out because you're just draining that mental capital, watching these go up, down, back, forth. Especially if you're not expecting consolidations, right? Every fluctuation, you're thinking it's going to be a breakout higher or lower. Whereas we're just committed to it. So we either get stopped out or we get our TP at the low. At this point, we're expecting to stop out though, because right, we cannot, even though we've got below this multiple times. The fact we've gotten below it once, twice, 3 times, and immediately each time revert into it, that's not a good sign. That to me is already kind of explaining that we want to hold this or consolidate around this level until probably lunch, right? So I think lunch may actually get the run here, but it seems like we're just going to get stuck equilibrium here. That's what we keep reverting to. Equilibrium of the range inside of a consolidation. Closure above, so this may be it here. We've closed above first presented. Watch that probably be used as now an inversion. We did get a volume imbalance inside of it, so maybe one candle can negate this candle, but I'm thinking this is the bullish movement. Closure above, creating the inversion after clearing the short-term low and respecting midpoint. This would be the perfect opportunity to hold that high now and accelerate. We do have this little baby volume imbalance, but I don't think that holds. Yeah, especially if that stays up. Like I said, it'll be back-to-back candlesticks closing above. Okay, so here comes stop. As we said, this would be when we clear the short-term lows, we respect the midpoint, we hold the inversion, we close above the first presented, and now we open with a bullish volume imbalance. So this high should be targeted. If not, right, we may tap that perfectly, but as I said, I think we touched this high right here. Cool. All right. Yeah, get me out of here. I'm fine with that regardless, because this is hideous, right? So as we say, we're going to revert back to this in consolidations. We're going to want to hit previous day high. We're going to want to keep referencing those higher time frame levels. That was just choppiness, and now we get that expansion. Cool. So I'm fine with that, right? This is just hideous price delivery. 11 o'clock, we'll be done. That makes sense. Now we'd rip. That'd be funny. How can people who can't trade as good as you have? I would say probably just better at marketing. Well, I'm not really someone that puts myself out there too much, which is my own doing, right? I'm sure I could change that and try a little bit harder. Yeah, I'm a little bit more laid back. I feel like I also don't have a camera, which people do like to just see. I feel like people when they're trading, so I'm sure that adds to it as well. But hey, we're building slowly but surely, right? Today we had the most people, 70 live. Uh-oh. And I also took a long time off. Like I used to stream like 10 months ago. Right, so the fact that I took so long off, I feel like I'm kind of getting, not necessarily shadow banned, but having to regrow the engagement, which just takes time. You know, I'm telling you, when people just love seeing faces, I feel like the webcams. Thanks, G. Yeah, I'll keep streaming from now on. As I said, just took a little break. But when I started again, I forgot how much I actually enjoyed it. Right, so now I'll probably just do it because I enjoy doing it. And if we never get a large following, that's okay. As long as a few people find benefit in it, that's all I really care about, to be honest. I didn't take a break from trading, though, just from being public about it all. Dun, dun. This may be the run on the high. From here, watch that. You learn from this every day? Hell yeah, man. That's all I ask for. Why the break? For me, I found that at the time, I was almost just like burnt out from it. Which is funny, they often say, right, you have to step away to realize how much you enjoyed it. So when I first started, I was doing it for about 2 years straight. Had my own group and all that. And yeah, at the time, I just kind of felt like burnt out from doing it every day. Aside from that, once I stopped, I did have, like, we had just moved. I had some things going on in my personal life that weren't allowing me to trade as often as I liked. So then I felt bad because I wasn't streaming as often, right? So I kind of just called it quits altogether and just focused more on the trading aspect of it. But I've kind of explained now, I came back because, well, for one, right, just full transparency, my trading did suffer in between that time because I had things outside of trading that were distracting me. So I almost came back as a form of like, not, what's the word? Came back as a way to, I guess, lock in, I'll say. Because I found when I stream, right, I'm a lot more tight with my analysis. I'm a lot more focused on what's taking place. And it actually helps me. So not only am I able to like help you guys, but it's also, right, helping me just refine the analysis. Because if I'm going to call out moves live, I'm going to have to be confident in them. And able to be confident in them, I have to trust my analysis. So it's like a win-win, honestly. Will I be on camera one day? Maybe, who knows? That's the one thing I always go back and forth with. Like I said, I feel like if I was to be on camera, more people would watch the streams. But I like the whole shadow alias, right? The idea of staying in the shadows and just showing the skill set. Right? That's all that matters. Y'all don't need to see me, you need to see the skill set. No recap. Oh yeah, I didn't make a recap yesterday just because I was out and about. I did make a video, I guess, going over like how to trade in consolidations, which was almost like a recap, which will be posted later today. But yeah, I didn't make the actual recap. I should do that. Have you seen Ninja Trader live YouTube? I have not. I'm not gonna lie, the only people that I've ever seen are like ICT, of course. Early on was Tanja, just because, right, we'd interacted when she was starting. And that's really it. Oh, I've watched a few of a guy named Brian. I don't know if y'all familiar with him. But for the most part, I'm not really watching too many. I didn't even know they had their own trading thing. That'd be cool. Maybe that's something we do in the future. Because I do feel like I have a pretty special skill set in the form of market analysis. I'll never say I'm the best trader just because, right, there's obviously people that make way more money trading way simpler things. So trading itself is very subjective. But as far as the true analysis of what's taking place, right, where price should go and why, I do think I have a pretty elite ability to do that. And I think that's beneficial for other people to see. I guess I'd be more of like an educator rather than a trader. Like some people that trade live are they're just taking entries without really explanations. I feel like my content is more focused on explaining the why it should do it. So you can almost like, right, learn for yourself in the future. That's just what I found helped me when I was learning. So I try to replicate that type of explanations and teachings while I'm trading. You listen to the stream and watch your own charts. Hey, that's a good way to do it too, honestly. And yeah, to be perfectly valid, like at some point, you don't want to be watching me, right? And that's also what ICT said, like you should graduate from not having to watch me unless you just enjoy hearing me talk and like my analysis. That's cool. You could stick around, I like that. But like eventually, right, once you learn enough, you want to kind of venture out on your own. So you can start building your own model and you can start kind of creating your own experience. How can you improve on that? How can you improve on reading price? Just doing this. Right, that's all I did. I put in 10,000 plus hours easily of just sitting here every day, watching the candlesticks print. And over time, right, I've learned more and more about them. Like early on, I would have no idea that any of these like first presented or opening range gaps or previous day highs, like I wouldn't know those were important areas in price. Right, so I would just be trying to trade the actual candlestick patterns, be getting burnt, losing a lot. And that's where the true experience comes, right? You start to kind of cherry pick where the best opportunities will present themselves. And then you start learning about the higher time frame reference points, first presented fair value gaps, right? 830 levels, new day opening gaps. And you learn more and more, you start kind of building that knowledge base. And I've kind of said it before, in my mind, this is really more like learning a language. So when you first start, right, it's going to be difficult, it's going to be hard. But as you learn more of the language, you kind of get more familiar with it. You understand when it repeats, you know what to look for. And it's like reading a book. How long until I became confident in executing the trades? I would probably say, that's a good question. I don't really know how to answer. I would say maybe 3 years, I guess, until I felt comfortable, even 4. But right, the thing is, I was an expert analysis before I was a good trader. And I think that happens to a lot of people. Right, and what that means is that I knew where price was going to go and I was able to read price correctly a lot earlier than I was able to actually execute on those moves themselves. And once you get to that point, you'll start to realize that the executions, right, are a whole nother ballgame. You can know exactly where price is going to go and why it should do it, but being able to execute on those ideas is kind of what will separate you from having success. Because then that's like more emotional. And that's why some people could never really make it as traders, but they can be great market analysts. It's because they can read the market, but their emotions just prevent them from being able to execute on those thoughts consistently. Take care, Fish. Catch you on Monday, brother. He said, me, oh no. That's not good, Mike. See, I like having you around, but maybe you gotta mute me sometimes. Especially because I know you're someone that, right, you've already had success and you've been able to secure profits. So you're someone that obviously very much has an edge already that's successful. And as you said, maybe I'm interfering with that, which is unfortunate. But it happens, right? That's the same reason that like I had to stop watching ICT all the time. I can watch him now again because I'm at the point to where I'm so confident in my own analysis that I'm not second guessing when he's saying something. So maybe you need to get to that point as well, Mike, which will be good. But early on, right, as I was still learning and kind of like progressing, I did have to stop watching him for that exact reason. Is that I would see something and maybe what he's saying is causing me to hesitate and second guess that. which is what you don't want in your trading. Oh, there it is. Oh my. All right, well, there's the run into that. That would have been clean right there. All right, so that's really what we've been waiting to see all morning. As we said, we wanted to clear these highs out, then revert back underneath, and then go lower. So that would have been actually a pretty clean opportunity. We clear out the highs, we revert back below, fair value gap left, and now we fall through. Now we'll probably come into this short-term low here. Good, Mike. No, yeah, you can stay here. I like it. Stay around. Oh, too bad. All right. Yep, there it was. Nice. Turtle soup, you buy that? Where do we come down now? Right into where we were aiming. First presented. All the way. We're about to just dump now, go right to where we want. That's crazy. Let's see. Classic consolidation. Take anyone out and then run without allowing an entry. Tanya is one of the traders on. Oh, that's lit. Okay, okay. I mean, yeah, that'd be cool. I don't know how that works as far as, I'm sure they reach out to you. I don't know if you like reach out to them, but maybe you get there one day. I feel like that'd be a good way to grow an audience. I'm sure they get viewers. I almost want to see if we invert this real quick. Ain't got nothing going on, so we're just chilling. Don't mind hanging out here a few extra minutes. Oh my gosh. As soon as I say that, we done fucked up. Good lord. Not like this. Not the coffee and the keyboard, bro. Alright, fellas, I lied. I guess that's a sign. Oh shit. I just spilled my shit everywhere, bro. Okay. Well, take it back. I'm gonna have to clean this shit up. I'll just do that. I'm gonna leave this here. I'll be right back. Again, bro. Again. That's what I'm saying. I gotta quit bringing the coffee on my desk, bro. God damn it. Were you in the Jade? Were you in Jade the Traders group? I was not. I've never been in a real like group before. Besides my own, I guess. Or I guess I was in very early on. There was like an ICT in 2021. Or when he came out with the 2022 mentorship. There was like a free ICT Discord. That's where I kind of started. But aside from that, nothing else. Got the first presented short. Good shit. Yeah, take that if you made that. I just hope my keyboard isn't fucked now. That's the real concern. Gonna have to wash my mouse pad. The good thing is I have one of them full desk mouse pads, right? So I could just kind of wash that. All the coffee spilled on that. But my keyboard might be screwed. Disconnect. Yep. Good call. Disconnect. Bruh. How long was that? No sound. I just realized my mic's connected to my keyboard, so it's probably that entire time. Oh my. We're cooked. Goofy ass. Whole time I'm still talking. Oh dear. It's alright, we're back. Keyboard in. It's gonna be sticky, I think, but we'll see. It still works. But yeah, we'll hang out till lunchtime. Let's see what we get. The 1 minute. Let's go. This is a 5 minute. 5 minute consequent encroachment is midpoint of the 1 minute. There's the high of the opening range. I feel like we want to get below that. Let's see if we invert or get below. 5 minute midpoint maybe, right, is what we want to try to tap. Which is a high of the 1 minute basically. So we could just leave that. Tanya like Tori is not that savage. I don't know Tori, but I mean, I've seen Tanya. I would say she has made money, right? So obviously she knows what to look for. Yeah, maybe her understanding isn't as deep. And I would agree with you. I do think that people like to gravitate towards women, especially if they're women streamers that are showing their face. That helps for sure. Yeah, I got nothing against her, right? Da-da-da. Oh, rip. Oh, damn. Yeah, it's too bad. I mean, based on her own admissions, she hasn't really been doing it, right, like that long, a few years. So I'm sure trading in public after not really, right, being a trader for that long is just not easy. That's why I give her props. I'll never talk down on anybody that trades live in front of people, regardless of how good or bad they do, just because, right, not many people do it. So you're going to automatically have my respect for doing that. But that doesn't mean you're the best or you can't improve. So I think there's still room for improvement for sure. And as you said, people just like to watch her because I'm sure she's entertaining. So aside from the trading, if people just want to be entertained, that's another reason people like to watch. Whereas like for me, right, I understand that while my teachings and things like that are probably more elite and it's better to learn from, the entertainment value may not be there because it's more like ICT style. Just a voice behind the screen explaining what's going to happen. Oh, we did hold that. Okay, so I wonder if we get lower from there. Yeah, we should be able to run, I feel like. This is the high of that again. She explains PA like me. Oh, that's good then. I always feel that's more beneficial, explaining the why. Spilling coffee is entertaining, true. For y'all, not for me. And now my computer's messed up. Y'all see that? What's happening? It keeps going up. Like, I don't know why it's doing that. I can't even move. Oh yeah, we're cooked here. What's going on? Oh, it was in full screen. Okay, that's why. Oh, that's what it's messed up. My F11 key. Is that what makes full screen? Ah, that's the culprit. Okay. Hold up. I got coffee on the F11 key, and now it's cooked. I was wondering why I kept flipping like that. Shit. Boom. All right, we're good. We're good. You prefer straight value over entertainment? True, I'm kind of that way as well. And that's why I think it's hard for people to watch ICT, because his stuff is pure value, no entertainment. I like to be a little mix of both. Interact with the chat, give some entertainment while also providing value. I'm an unk when it comes to computers. I guess, man. How dare you? More of a console guy. I grew up on consoles, all right? Learning will always be fun. I agree, for sure. If it's easy, it wouldn't be worth it. If it's worth it, it wouldn't be easy. And that's also what filters out. It's like a great filter, right? Those that don't have the patience to learn it will never have the chance, because they'll get bored. You like ICT, but he's a pain to listen to. I agree with that, man. Even, right, I could agree with that. I think ICT is teaching second to none. Best way to trade, but for sure, right? I mean, very long-winded. And some of his older stuff is even crazier. Like I said, I've watched every YouTube video on his channel multiple times. And that's really why I can kind of do what I do, is that I've just spent the time. It's almost like I listen, or I see the market through his eyes now. Right, from just hearing him speak so many times, from listening to him. He does waste time, I agree. But I think he does it on purpose, or at least I would say I know he does it on purpose, because he's come out and said that, right? That he purposely rambles to get people to leave, because he's trying to weed out those that are right there for quick success versus those that are trying to gain like a deep understanding. Okay. Hey, hit the like button, folks. Yeah, see, I don't know about the old YouTube, how the YouTube algo works. Maybe I'll look into that. Figure out the best way to grow. We should hold that. I think we go lower from here. What's that 1 minute? What's the 5 minute? 5 minute might close, so if the 5 minute closes after holding its midpoint and respecting opening range gap high, we might get another little stab lower, fall out of bed. Maybe the midpoint again, we'll see. Yeah, see, it just did it again. I think my F11 key's messed up. Might have to pull out the new keyboard. So watch from here, as I said, that might be rejection. That's kind of what I would expect. 5 minute, if the 5 minute does close below, however, that's kind of what I would expect to see. Use the 1 minute to keep sending us lower, maybe get underneath first presented here, and then use that. Hair dry, yeah, I'll for sure do that. When we're done, I'll unplug this one. Give it a good clean down, dry it out. That's the only key so far that's messed up. Do you watch T trades? I do not. Is that another live stream as well? Oh wait, no, isn't he like an educator? I think I have actually seen him on Twitter. But he's just a guy that kind of posts educational content, no? Yeah, okay. Yeah, I've seen him before. Don't really watch though. Like, if I'm being honest, the only person I've ever watched to gain any type of ICT understanding is ICT. And that's just because, I mean, I just like going directly to the source. And as I said, I've actually been learning these a long time. So it's like a lot of the content out now that's made by other creators just wouldn't be helpful for me because I've already learned it. It's things I've already kind of been accustomed to on my own. That's the only thing, I guess, a little rant, right? The only thing that I don't like about the ICT community is that they seem to tend to want to repackage the concepts and material as their own model to then sell engagement and clicks, which I think is a little corny, but to each their own, right? As I said, I'm not really a marketer. That's probably why my channel is where it is. If I did do that, maybe I'd have more views. Because in my mind, right, everything is it's just ICT. You're just using his concepts in your own way. It's not really, you're not making anything new. Sometimes you need to compare time versus value. I agree, yeah, definitely. It's one of those things where it's like, are there faster ways to learn ICT besides him that will give, or I guess present you ways to make money? Yes, I do think that there are people out there who have been able to maybe simplify the concepts or give you a model using ICT concepts that don't require you to have the full understanding of ICT himself, right? And if you're someone that just wants to make quick money, then it's perfectly fine. However, I think that, right, the investment in time as far as learning the true ICT narrative, right, everything about what he has to offer, I think in the long run that's going to pay out more. That'll provide you more opportunity. So it's just really about, right, the dedication, what your long-term goals are. Like for me, I'm perfectly fine if it takes me, who knows, 5, 10, 15 years to get to where ICT is, because once you get there, right, the money is basically unlimited. You'll be able to do whatever you want with it. Walking ATM machine. He doesn't mind people that teach, but there's a lot of people who teach it wrong. True. That's facts as well. And that's another issue with the ICT space, is that you get people who, right, watch a few videos who then want to become educators or influencers per se. So then they try to regurgitate the information without understanding how to actually utilize it, which just causes more harm to students. Tesla's chart, perfect clean. Oh, was it? Individual stock traders make more money. That's debatable. I'd probably disagree with that, to be honest. Because I mean, if you just look at the Robbins Cup, right, each year, the futures division is always the greatest returns. Stock traders probably more consistent, but as far as max potential, futures or options, nothing will beat that. The ability to create max profits. One minute high again. So just consolidation. At this point, we're more so just talking psychology and things, hanging out. I don't want to see if we're going to consolidate here. We're obviously bouncing between the high, right? Look at the high, the opening range. That's what we're using here. So I want to see if we're creating a consolidation to create another leg lower. Kind of like yesterday, right? To where we had, it was choppy, but the choppiness always led to sell-offs. So we sold off, choppiness, sell off, retrace, choppy, sell off, retrace, choppy. So on a higher time frame, it's just a kind of a clean sell model, right? Respecting premiums. I almost want to see if we're going to start doing that to where we sell off, we chop, chop, chop. We get to sell off to clear out a low, consolidate inside this maybe, and then sell off again to get into midpoint. Wouldn't be a bad idea. How about some options education? Maybe, honestly. I find that there's other educators that are better than that, because when I'm trading options, I'm just using ICT concepts on higher time frame charts and then entering on options. Whereas like there's actually options only traders who will probably give better information as far as like, right, the Greeks and all that, which contract expirations you should target, what are the best expiration dates, how you can do options spreads. There's so much that goes into options, to be honest. You're a Discord member of an options trader called Stock. Okay. $1 million a day? That's crazy. But I mean, yeah, that's, if you're already rich, that makes sense. Options give you the greatest return potential, I would say. Per risk anyways. What I hate most is when they say it's time first, then price, and they have absolutely no clue what time in relation to open high. True. Right, and that's the thing. They're just kind of parroting ICT's words without understanding why he's saying it. So they're just repeating it without having a true understanding. Why do people refer to the Greeks in this matter? Because that's what depends, or that's what's going to basically determine how fast you lose your profits. Right, the delta is going to be how the contract changes each day. So you want to find option contracts that aren't going to decay each day quickly and instead will hold their value if the market is consolidating. Because right, options are a little different to where like if you're holding for multiple days, they're automatically going to lose value, even if it may be moving in your favor. So you have to be able to kind of adjust for that. The source is always better, but people like me, okay. Thanks, Lord. And I could agree with that, right? Is that learning from someone like me may speed it up because I've been able to internalize and almost explain what price should do and why. Whereas as ICT teaches, it can kind of be information overload because he's trying to give you everything that you need to do this on your own. And that's just why he's not for some people. And I honestly struggled for a long time, like coming out and being public for that reasons that I felt like maybe, like why would people want to watch me, or what's the point of watching me when ICT is doing it as well? But now I understand more of that. Right? Although he is a great educator, some people just don't have the patience for that. And I do think that I offer a pretty good alternative in the fact that, yeah, I'm not him, but I'm pretty proficient in his teachings and how to read price. Like that right there is pretty. That's a breaker aligned with. If we left that fair value gap, I'd almost see if that can be a little buy side opportunity, just to be into like the first presented up here. So at this point, we're more so just kind of following order flow. And this is something I like to do when I'm not trading. This is something I've done for years. So I like to just watch the candlesticks, right? How they're interacting, where it's going, what areas is price reversing from, how is it interacting with each PD array, how is it building and overlapping PD arrays to be used, right? This is the thing that you can't shortcut, personally, in my opinion. That nothing will give you market experience other than just sitting here and watching the candlesticks print over and over. Okay, movement, that was not me. So I appreciate you saying that. Because yes, I do not DM anybody. Matter of fact, I haven't even looked at my DMs and I don't know if I can get DMs. I should probably look at that. Unless you're like a friend of mine. So yeah, if you got something from me, it's not me. I should probably like maybe put that in my Discord or Twitter somewhere. No retracement. Okay. So I was going to try to get a retracement entry. We may actually still get it because this will be the first closure above this bearish fair value gap. So if that's the case, I do think we're going to want to retest up here. Let's see if we don't. We could actually try a little entry here. What time is it? Heading into lunch, 11:50. So yeah, let's try that. A little 1 to 2. Just something like that. Just something light. Saying we don't want to see the low of the 1 minute be breached. Heading into lunch, try to target first presented. I want to enter on this bullish fair value gap paired with opening range gap high perfectly. Paired with the wick here as well. Finna run bathroom real quick. Be back shortly. Oh wait, I forgot to clean the floor. For sure gonna have to get this professionally cleaned, the carpet, when we move. 2 coffee spills. Where we at? Cool. All right. So this is a little bit higher risk, just because we're at that bearish fair value gap here. But I like that we create the aggressive movement lower. We clear this, these equal lows, holding midpoint of first presented here and here. Low, high, lower, low. Also the bullish breaker. Notice how that is aligned with opening range gap and that fair value gap. Slight consolidation as well. So yeah, if we can like hold from here, right? Hesitate. We then trade lower into entry and then trade through the premium. That's what we would look for. Let's see if that pays out. Do you ever use the first inversion after we wick the low? Do you ever use? Yes. That is one of my models actually that I like a lot. But you wait for the run lower, sweeping liquidity, and you wait for the last premium that was created in that to get inverted. So like right here would have been an opportunity. Matter of fact, look how that was aligned with. So that was actually a real clean one. But right, the run lower clears all the relative equal lows in here. Holding a discount, we then displace above the premium that was created, inverting it, and then that's what holds us higher. So that's a clean setup. That's really what we've been using a lot this week. So like for the entries that we were taking. So I played out quite a bit. Like same idea here. We run out the lows, we have that bearish fair value gap. Last bearish premium gets inverted, hold census higher. Day before, same idea. Wick clears out the liquidity. Premium fair value gap here and here. We used this one because that was the original low. And it got broken with the fair value gap. So that's a very strong entry model. And that repeats quite a bit. I need to post links to all these new vids. Oh, yeah, true. Because YouTube automatically saves the recording, which is why I don't post it, but I could post the YouTube link actually in the Discord. That's a good idea. Whereas before I had to kind of post the actual recordings myself. That's why I like YouTube live streaming, to be honest. That it automatically saves and I can just post the links. So that's what we want to see, hesitation there. At this point, when we get entered, we don't want to, basically if we're going to maintain bearishness, right, we'll get stopped easily. So this entry is hoping that we can maintain just short-term bullishness into first presented. 5 minutes, that's the 5 minutes consequent encroachment. So we're going to have to watch, bring this 5 minute up real quick. Now that we've hit that, let's see what happens. So we're going to fall back down into entry. That's what we want to see. And because we've hit consequent encroachment, we should be wrong quickly. Like if we're going to stay bearish, I think it'll be like this, where it's going to be consecutive large range down close candles. Just like that. Let's see. Right, that's the original inversion here. Consequent encroachment. So I'm watching that because if we do fall through that, we should just fall right out of bed here again. I wanted to see consolidation. That volume imbalance as we create that. Notice that we don't even make an attempt. That right there is a sign. Extremely heavy. No attempt to even get into this candlestick's closure. So now it's going to be a key area and we've inverted this. So yeah, we'll probably just get right extreme moves lower. Why do I like ES over NQ? For me, it just moves a little bit more clean. Oh yeah, back to back. So yeah, easy stop out. That's fine. As we say, we like to be wrong or right quick. For me, ES just moves and respects the levels a little bit more precisely. So I found that I just have more success. Where NQ does give like larger ranges, but once you kind of get proficient, or at least for me anyways, I found that I don't need to catch larger actual moves as far as handles. It's more so about the RR, right? The precision that you can find. So that's why I just like ES, because it lets me be a little bit more precise with a little bit tighter stops. Okay, so that's fine actually, because we did hit the low of that. So let's see if we can't. If we close above, my stop will go here because that low should not be violated. We'll see if we can blast off. If we remain in it, we'll probably get stopped. So we do close above it barely. So yeah, I'd want to see us respect the high of this, leave this low, and then just run. If not, as we said, we'll get stopped, and that's fine. But as we said, we'd want to see hesitation at the premium. We then would want to return into entry. And then as we retest the original premium, that's where we want to see price break through. This, however, is causing me, right? I'm really looking at this because this is a key volume imbalance. That's an actual liquidity void. Because as we said, there was no trading from here to this candlestick's close. Whereas normally, like when you see a volume imbalance like here, right, the previous candle will close in that price before moving. Whereas with this one, we didn't do that. So that's a true void in price. That's why if we're going to fall, it'll be from here. Because that's all price is going to try to get into. We'll reject aggressively, attack this low, get stopped. It's like seeing that already. As we say, we're quick to preserve capital. So I'm just going to close one. just right there at the volume imbalance. Because now if we can get above that, we should keep going. I'm watching this fair value gap and the volume imbalance now. Because right, as we often say, when they're paired together like this, what we often expect is that the fair value gap holds the wicks, but the volume imbalance will hold the bodies. So if we see that here, that's just not a good sign. Why don't you wait for the bearish reaction before entering? Why don't I wait for the bearish? Do you mean bullish? Or I guess, what do you mean by that? So that, as we said, that's exactly what we wouldn't want to see. We already partialed, however, inside of this, so we're fine. If we can get midpoint, that'll be good too. But as we said, this was what's going to hold us. And we opened it with the bullish volume imbalance. So I wanted to see that stay open, but instead we're going to close that in more than likely. And if we see that after hitting the high of the fair value gap and closing back underneath the volume imbalance, that's just not a good sign. So as we said, that's our first time hitting this opening range gap after closing above it here. This high would need to hold us. So that's bearish. We'll probably get, this candle basically needs to now close this one in. So how we close this bullish one in bearishly, this needs to actually be closed bullish. And we need to get above this, because if we just tap that and now trade lower, yeah, that's ugly. That's very hideous. Right, because now as we're following order flow, we respect the premium. We break away from it, creating a new premium. We trade into its quarter level. We trade into its high, closing below, now rebalancing it. Next candle hits its consequent encroachment, can't get into its high, closing below it again. So that means that if we're going to respect this, the low of it's going to be the more sensitive area, especially because it's the volume imbalance. So if this candlestick can't even get into its midpoint and instead holds from here, breaks lower, and especially leaves open this volume imbalance, to me that's pretty clean indication that it's going to want to attack a low one more time. That's exactly what happens. It comes, trades into it, it respects the volume imbalance, it can't get into that low. It's trying again, so let's see what happens now. Second try. Yeah, look at that. That low is just saying nope. So this is what I mean when, right, just following order flow. Unable to get, okay, so retesting midpoint. If we can close above that, that's nice, but as long as we keep the bodies under this volume imbalance, a little fishy. First presented there. Oh yeah, no bueno. Another one, so let's see, it's 3 straight. We need to get above. I don't care about the volume imbalances unless they maintain bullishness and close. Right, because all we can be doing is continuing to reference, look at that immediate rejection from midpoint. That's what we're talking about. If this holds us, it's not going to want to venture above its midpoint. So now that we've hit that, if we close this in, this is not going to be a good sign. We need to maintain this candlestick, close above. If not, as we say, probably just go low. Yep. Another thing I like about these concepts, right, is that you understand where you're going to run into issues. So that kind of prevents you from being a little too anxious. Or like we understand that even if we want to get through here, we're going to have hesitation. So I'm not flip-flopping my bias back and forth just because we are getting stuck, because we know that this should be a flip point. If we want to get through it, hesitation will occur, but eventually we should see price push through it and try to use it as support, where if not, We understand we're just offsides. It'll fall back on us. So we did get above the volume imbalance, but what happens the very next candlestick? We close above it. This candlestick actually opens inside of it. So now this candlestick needs to actually close above to confirm it, because if not, we're negating this candlestick's actions. Cool. So that's what we want to see. We want to see this inversion being used, right? If it's going to hold us bearish as we close above it, we want it to support us and continue to send price higher. We want to see a willingness to get above this fair value gap. We want to close above it and then maybe revisit this one where we can get 5 handles, which will probably just take one at that midpoint like that as well up here, especially because, yeah, that's hideous. Geez. So stops right there at that candlestick, because I don't want to see that be traded into. It's under the inversion. 5 and 15 are pretty choppy. So we have a 5-minute volume imbalance that held us, but the 5-minute consequent encroachment's also holding. Once again, not what we want to see, right? Unable to get above. If we break back below the volume imbalance. At this point, I don't want this volume imbalance to give way. If we retest this gap again, I think we might just start chopping here. It is lunch, right? So we can get lunchtime consolidation, but I'm trying to capture on lunch, targeting some of the inefficiencies that were created in this large leg down. So we'll see what we get. Little lunch hour trades. I should go refill my coffee real quick. All right, we're good. I got a lid this time, okay? We're learning from the mistakes. Lid on the tumbler. Jeez Louise. Okay, so once again, just choppy, man. A lot of choppy delivery. A lot of high resistance liquidity runs. At this point though, this delivery is not very good, because I think, as we said, if we're gonna repeat yesterday's price action, right, slight consolidations, boom, fall out of bed. Retracement, consolidation, boom, fall out of bed. So this is giving me a little hesitation if we cannot get above, because we may consolidate in here. All these lows now, fall out of bed, attack those lows. So let's just get above. First of all, we got to close above this. Let's close above that. First area of interest. Then we retest midpoint where we can get partialed out, 5 handles, right there, perfectly 5 handles. And then we'll look for first presented. Closure above, but what happens? Textbook, that's textbook consolidation conditions. right? The false breakout followed by the immediate snap back into the PD array. So now we have to watch twice, confirmation that we want to actually close above, because this to me false. If this stays within, right, this negates that candle's actions. There's the low. Let's get midpoint. We do have to be wary of these equal highs. Maybe we run those in reverse, which we just did. Okay, cool. Nice. So at this point, partial, I don't even want to be in. Like, we're going to break even, right? We're not going to give anything back. Displacement. I like that. We should be able to get out here pretty easily. Do you trade PM? Oh yeah, I love me the PM session. That's a lot more for my personal though. Like power hour. I'm a power hour assassin. Just go on my Twitter and look at, like, type in PM, and you'll see all the power hour setups I've taken. We might go crazy high. Should we? We'll just take that low hanging fruit exit. But that, seeing as how we blast through that to me makes me think we want to keep running high. Right, so now that we hit that, we'll probably get up through it, maybe even up here again. But I'm fine taking out there. So easy little new week opening gap, or opening range gap, up into first percentage. Simple. But those are the trades that we like, little base hits. Understanding we're still in the consolidation. We clear the short-term low. We clear all these equal lows. I'm not expecting us to continue to trend lower. So instead, what would we do after clearing lows, especially during lunch? We're going to revert into untapped inefficiencies and swing points. So that's what we get out at right there, which was nice. And then we actually end up, we might catch that swing high, which will be cool if we can. But yeah, Lord, I love me the power hour. 350 too, like 350 is a hidden gem. Those last 10 minutes of the day. Should we just stay here all day? Should we just go all day stream? Do it like Twitch streamers do, subathon. 24-hour live stream. Give me that swing high. That would be chef's kiss, on chef's kiss. Let's see. So like for that trade, right, we got entry, swing high, swing high, swing high. Oh, that's not a swing high. Oh, real nice, real nice. What happens now? See, now we're back to 50. Now I don't know. Because once we're in the first presented, we can hold that and go lower. But we've also, or we didn't invert this actually. So yeah, I'd still expect maybe lower prices. We watch this, however, and see what happens. Right, because that's the displacement candle. Closing above the highs here, and the midpoint for the first time. So that is the key discount that should hold. But that's how I kind of also find our discounts that matter. Oh, someone had asked me, hold up. I'll just respond in the Discord. I forgot someone had asked me a question earlier. I don't know if they're in here or not. Shoot. Bang, bang. Okay, so now we wait and see. Displacement above first presented. Continued running. previous day high again, maybe. Just watching to see how that fair value gap here plays out. So that one ended up, as we said, hesitation is expected to get us into fair value gap. We then want to see it traded through. No trade through, instead just wicking first presented, leaving the swing high. So now maybe inversion play to go back lower, off first presented, back into first presented here. Just bouncing back and forth now that we have all the lows as well. Oh, wait a second. That might be the play. Volume balance. See if we leave a fair value gap, maybe. Original volume balance here, holding. Ooh, that was it. That was a short right there, maybe. Because we did invert this bullish fair value gap, right? So if we're going to want to do a quick inversion, bump and run, the old bump and run right there. Bump it and run it. Do we leave a fair value gap? We did like this. Maybe we try that. Let's just test that. Paper trade. No, we'll follow it. At this point, we're in just a follow order flow mode. So yeah, watch this and see, right? Can this hold us bearish now? I would just use the actual fair value gap. Low hanging fruit would be stop above the high. And then as we said, can we go from first presented here to here? Like if we're going to consolidate, right, we can just keep bouncing between some first presented fair value gaps like that. Inversion, we did hold the original fair value gap. So one thing that we do talk about is if we want to maintain bullishness, after create lows to highs that run out liquidity, price can retrace into that range and hold at old discounts. The key discount for us would be that inversion. So now I'm going to watch and see, right, do we hold from here and start invalidating premiums? But as we said, I think maybe we can actually take that short now to try to get back down into this first presented over here. Depends on if we can get below the volume imbalance as well. Look at that consolidation, eh? Just wicking those levels. Oh, baby, I love your way. Closure below. Now we're going to watch that. Closing below it for the first time. Somewhat important, but as we often say, need back-to-back candles. So closure below, I would expect if this hold is bearish and we want to get lows, right? We hold the actual low of this original bearish fair value gap. We hold candle bodies below the volume imbalance. If we're going to enter here on that fair value gap, we want to see now the original premiums start to be reclaimed and offer us some type of resistance. Very next candle trades back above. It's negating this candle's actions, so this wouldn't be as important to me. Oh, okay, hold up. So it's kind of playing around there. It actually snapped back inside though. Right, so that does negate this candle closing below because we immediately get back into the range and open with bullish volume imbalance. So still just the choppiness in here. That's fine though. Right, we have the key reference area, so it'd be that fair value gap. It would be the inversion here. Understanding this is where price will consolidate within. But we'll see if we can actually get back below. If we can get back below the volume imbalance and keep running, as we said, I think we get back into here. At least first presented, or excuse me, opening range. This becomes our short-term sell side, if we want to target that. Run into that. That's the original inversion. What else is inside of here? 5 minute volume imbalance right there. So I'd watch that as well. 5 minute volume imbalance. But I'm thinking if we're going to consolidate, right, we come back down for that. We might bounce from the opening range gap like we did here, but now that we've actually cleared that high, I think the objective becomes, as we said, just that low. If anything, this low here. Going from first presented back down to first presented. Entry would have been here, as we mentioned. 5 handles will get you into the volume imbalance. That would have been clean. Perfect rejection. Very random area that we're rejecting from. Lucky guess there. Closure inside. How is that different from right past times? Well, unable to close inside, unable to get bodies near it. Closing inside after running the high to me means that we're going to want to venture deeper, so we should get the low. Closing inside after running the high, yeah, we should get the low. And then I really do think this is the objective here. During range-bound consolidations, price is going to use key areas in price. First presented, opening range gap. Right, first presented here. Any new day opening gaps? No. New week opening gaps? No. We still haven't gotten into the midpoint. Midpoint paired with new day opening gap. I would not be surprised to see that in the afternoon, if we're being honest. This seems like it wants to go bearish. Let's hide everything. Every now and then it's nice to just hide everything. Okay, so let's look at this from a pure naked chart perspective. We start the day completely bullish. Consolidation, expansion. We leave that open, consolidate, expand, consolidate, expand. We retrace, having equal highs. We run out the equal highs. Huge displacement lower. Now we start stair-stepping higher. We've cleared a short-term high, right? So to me, if we're just looking at this chart, it'd make more sense to attack lows, in my opinion. Now, right, as we put the indicators on, we do have the opening range, which is kind of throwing off that idea because this is going to be a strong area of support. But based off price action alone, yeah, I like lows, to be honest. As I say, I keep referencing yesterday, but the price is always going to move cyclically. It's going to move the same way over and over. And this just seems like it's setting up for something like this. To where we put in that low, we kind of baited, right? Retracing into the range, we fell out of bed. We clear that low, we bait retracement, fall out of bed. I think we get that. We create the low, right? Bait that kind of consolidation. Clear the high, fall out of bed. There it is. So we're using, once again, that volume imbalance, right? That's what's going to hold us. We expect that to continue to be referenced. Straight back into that volume imbalance right there. Love that. Will you explain an OB entry, for example, a breaker or a failed OB? Sure. So like for me, right, let's see, do we have a bullish breaker? We don't really have any bearish. If I had the lower time frames, that may be able to help. No time frames. No, not really. This entry here was utilizing a breaker. So right, as we said, we create this low and we create this high. Oops, sorry, let me make the actual low. We get the swing low, we get a swing high that runs out another swing high. That's important. That low then breaks lower, clearing out the original low, and then we displace through it, right? The displacement is the key kind of reference, that as we're breaking this high, we're doing it with the fair value gap. That's why I was confident in this entry. Painted outside the lines a little bit, but we understand we're just in a choppy market, so that's going to happen. We didn't get stopped. But right, this is our breaker, the consecutive up close candlesticks. So here. And you'll actually see that's what holds us. Right, we get into it a little deeper, but the low never gets breached. It holds us, it takes us higher. So that's a breaker that I would use. Why am I using it? Just as we mentioned, it's also nestled within PD arrays. So when I'm looking for like breakers or order blocks, I'm always looking for them to be nestled with other PD arrays. In this case, we have this bearish fair value gap here that was also inverted while we're creating the breaker. So you see why, right, all of these things are stacking. And it's also because this breaker is also aligned with the opening range gap. This is why this was a key area for me. And I mean, if we just drag this out, look at that. Still being used. Look at the midpoint, perfect. Will my sell side be one? If we displaced through this, yes. Now this down close candle, I would expect to act as a bearish breaker. That should continue to send us lower if we accelerate through this low, but it needs to be displacement, right? Not like, or I mean like this, excuse me, to where we're actually pushing through it and closing above it. It did paint outside the lines of the OB. Yeah, so like for me, if I'm looking at order block right here, because right, this is the candle that creates the run up into the buy side. More importantly, it closes above. So that should be an indication that continuation should continue. So when we close below that, right, that's kind of our flip point. More importantly, the open to the close. So as soon as we close, and I mean, look at that, it's so beautiful. All right, so let's hide this and this and this. So more importantly, right, why am I looking at this one? Well, because as we stated, when it's opening on a predetermined discount in the form of this inversion. And it's also opening with a bearish volume imbalance. So the fact that it negates that bearish volume imbalance and closes above the swing point, that should be a bullish indicator. Right, so when we close below that, I guess that's what people would refer to as like the change in state of delivery. I don't ever really call it that, but I notice people like to reference that as like the word, right? So that's what that would be. If we're going to close below this candle, to me, that sets into motion the bearishness lower. That's why these candlesticks now are wicking it, right? So that's the OB there. And I do have videos in my Discord, or actually may not be in there. If you are in my Discord, right, the concepts tab, I have detailed videos about how I actually use each PD arrays. Because there are a lot of them, and I'm not using them all the time. Right, my trading has evolved to where I'm really trading order flow rather than like a pattern or a specific model. So it's a lot more how ICT would trade, right? Just relying on what's taking place in price and current order flow that allows me to be involved, rather than looking for like, okay, that's a specific breaker pattern or that's a specific OB pattern. But once again, the key OBs, the key breakers, they should always be nestled with other PD arrays. So in this case, why is that the OB? Well, it's because it's also being created as we are inside of the actual bearish fair value gap. Right, so as we're leaving and creating the bullish order block or the bearish order block, we're actually creating now a reclaimed bearish fair value gap. So when they're overlapping like that, that's just going to be a key area. And that's why, as we said, right, that would have been a clean short coming off of this high. We caught the run up, so we don't need to catch it back down. We can, we're able to, but right, we're content just watching it. And if you wanted like another 5 handles or something, you'd already have it. you have to look for it this weekend. Yeah, right, go back and back test. Or journal. Maybe we'd do like a journal session one day, how I journal at the end of the day. I think journaling is huge. Discord, my Discord is, where's my Discord link? No, it's in my Twitter. So you'd have to go to my Twitter and then you'd get to my Discord. Right, because it is a paid Discord, so I'm not really trying to like shield that too much for the time being. It could be kind of gross. So it's hidden for those that really want it. Right, as I said, it's more so just for advanced access to me and how I look at the market more specifically. I mean, you can get everything you want from the free live streams, but if you just want more information, the Discord is there. One day we may go purely behind the paywall, but that won't be for the foreseeable future. It'll be a long time until then. $12:30, this is the longest stream I've done. I like it though, because it gets our views up actually. Maybe we start doing some longer streams. So once again, the key reference areas and price will continue to be used. The volume balance. Got a nice 5-handle run. Let's see if we can't get another one. What we'll do is maybe, because it is lunch, so clear out these lows, hit first presented, bounce from there again maybe. So far, just kind of watching to see, right? Does the opening range gap want to offer us support? I still like the sell side, but I think it'll just be high resistance. So for the time being, my bias gun to my head, if I had to choose, would be these lows. Coming off the OB, coming off the bearish fair value gap, after clearing the short-term high and holding from the first presented, trading underneath the volume balance and the original bearish here, I'll just look for a run into the sell side lows. More chop for sure, right? We're already expecting the chop, no doubt. As you said, NQ is below these lows, so I want to see like ES make an attempt to six sister and just sweep them. But if it doesn't want to, and NQ kind of reverts, it'll just hold this area. I think we will get these lows. I think it's just choppy in here, kind of like playing around. I feel as if it'll be kind of an aggressive down close candle like this almost, to where it just wipes that out quickly. Yeah, you're right, NQ has cleared that low. It's just sitting inside of its first presented, however. So really in the same spot both ways. No SMT at the highs or anything like that. But as we said before, on a 1 minute chart, there's going to be SMT everywhere. So I'm not really putting too much weight into the 1 minute minuscule SMTs. The higher time frames are much more important to me. The higher time frame SMTs. You know, actually, do we get into that? We had labeled this 15 minute. Oh, we still fell short of that. That's okay though. Chop, chop. Oh yeah, chop for sure. We expect choppiness. Surprised there's still 50 people in here. Have any of y'all been here since we first started? I'm just curious. Or have we filtered out everybody at this point? Got a new batch of people. You've been here, MT? Okay, okay. Since open? Oh, Naughty Leaf? I didn't even know you were in here, see? Oh, so we got some... Okay, okay. We got some hidden people. I haven't seen any of y'all. Lit. Respect, respect. You like the 5982. Oh, bearish. Yeah, that's nice. I like this, right? Best case scenario, I mean, as we often say, the fact that the midpoint of our opening range is a new day opening gap high, that's just not very random. And it's also nestled kind of near 830. So So yeah, like if we do fall, I would like to see that as well. Right, we want to come back down here for that low. Just continue this consolidation. So as we said, we've cleared high of day. We don't expect a breakout, so we want to see a retracement back down into the range. It's high resistance, but I still believe that's going to be the case. Yeah, right. The best trades during consolidations come at the extremes of the range. Matter of fact, I didn't realize there was a 1 minute right or a 1 hour right there. So let's look at that, because that's the same idea now on a 1 minute chart, right? As we were looking at this, if this was a 1 minute, we would say, okay, price is closed above the swing point. Matter of fact, let's just do this. Let's just go full clean real quick. Price is closed above the swing point, leaving behind a discount as it did it. So that should be what holds us. So if we do invert that 20 minutes, if an hourly can close below that, that should set the stage for a nice run lower, to be honest. Especially because let's see how that interacts with the lower time frames. Yeah, look at that. So the 1 hour is perfectly, oops, the opening range gap's high. Okay. Yeah, I like that. So far, we're still bearish, as we said. We want to see this low. So I think we get that low. Just high resistance into it. The volume imbalance is holding, as we would expect. After running the buy side here. Boop. And hitting a first percentage fair value gap from today. Let's go like this so we could read the first percentage. Or actually, no, let's go. Bam, there's sell side. So that would have been a nice little short back down. Didn't take it, but right, we understand. Simply completing the little mini buy to sell model. Consolidation, we get higher. And now, let's see what we do here. So there's the low. I think, let's see, if we are going to leave the 1 hour, still have 20 minutes. Let's use some lower time frames. As we said, I think we can get this low. I think if we're going to hold this and revert into the weekly range, sorry, we're going to hide these. There's just too many popping up. As far as the weekly sense, last week's high, I want to see that actually. This last week's high. It's this high right here. Drag that out just to see how we interact with it. There's the 1 hour. So like, right, this would be a bullish breaker for that, whoever was asking me earlier. Because low, high, lower, low, we break through it. As we're breaking through it, we're leaving that fair value up aligned. And it's also a previous day high. So same idea, right? If we do invert this, that's why I like the idea of trying to run lower from here. That's previous day's liquidity as well. So we've cleared that. That's the weekly, that's last week's high. So if we're gonna wanna stay underneath that, that's clean delivery right there, actually. Still choppy, however, so I'd look for this. We can come back into this and hold. Even the high. See what NQ's up to. Right now it's lows, pretty much the same spot as ES now. I still favor lower prices, honestly. Because we've closed below this liquidity, so to me that means it wants to continue to reach lower. Nice. See if we close below. Closure below, maybe we keep running. We said this is our 1 hour. Yep, our 1 hour. And so ideally, the way that we like to utilize, like if we're gonna look at a 1 hour and we wanna confirm it's gonna be an inversion, you have to wait for the corresponding time frame to close below. So we still have 20 minutes, which will be the end of lunch. So I think we'll all hang out till the end of lunch. This will be our longest stream probably ever, to be honest. It's cool because even in like choppiness, right, it's still respecting the PD arrays that we expect perfectly. That's why I think it's so important to be able to pick and choose what are the true PD arrays. I'd made a tweet the other day about how, right, my trading really changed when I was able to understand the hierarchy of the PD array matrix. And what I really meant by that is determining which, right, PD arrays are the true ones that are going to actually influence price. Because a lot of times in this type of delivery, right, there's going to be fair value gaps and volume imbalances everywhere. The struggle is being able to pick and choose which ones are going to be important. Closure below. So now I'm kind of watching. We've hit the low of the 1 hour, however. So if we're going to want to hold that, do we get a reversion back above its equilibrium? I would look to see if we're going to get above this candlestick's close. That might actually want to hold us. So I'm watching that. I'm watching this little area here. Think I'm having fun? Yeah, I'm having fun for sure. I enjoy trading. At this point, not early on, but I do now. Right, aside from that, it took a long time to be able to do what I can do now, so it's kind of satisfying to just, right, see these things play out as you would expect. Because man, trust me, 2 years ago, 3 years ago, I'd have no idea what's taking place right now. I'd be lost. So we said, right, this will hold me. And I'm almost seeing this as a potential OB. So one thing that I look for OBs is the high has no upwards wick. I like those. Right, so this is a perfect example. When this candlestick closes, it's all one-sided delivery. I also look for those candlesticks to clear a previous short-term low. We did that here. Right, that's why I'm keying up on this candlestick, because if we do close above it, that's what should now change our kind of delivery mechanism and run into at least like up here. But if we're going to want to maintain bearishness, that's also where we would get held to continue lower. So once again, high resistance delivery, but we understand the key references that we're looking at. Once again, beautiful delivery into the hourly low. It's lunch, so we're expecting consolidation. And yeah, I think I'm just going to hang out here until like 1 o'clock, 1:30. Hell, we might be here literally the entire day. I have no plans. Already got the workout in this morning, so we chilling. I might have to go get lunch, but it's all right. One thing I do want to try to do, at this point we're just kind of talking. I see a lot of people on YouTube do giveaways, and I'm curious, I'm like, are these people buying these accounts themselves and giving them away? I feel like the prop firms is letting them, or like they're giving them accounts to give away. So I might reach out to a few props and be like, hey yo, help my community. Nice. So as we said, I think it's high resistance at this point. First presented I'm watching now because we tapped that perfectly. If we fall through that, hourly as well looks pretty bearish. Yeah, I think we go low. We can get that low. Ooh, closure below. Should we test that quick? We've respected it. We respected it. We can't get into it. Sell side holds into that low. We could do like a nice little scalp again, maybe. This wick, I wouldn't want to see price get above that. Which means stop would be here because I want to use midpoint of current, this first presented, for entry. Because it looks like we'll leave a fair value gap there as well. Oh, we're not gonna shoot. Wait. Oh, we did perfectly. Okay, so yeah, I'm fine with that actually, because right, that's a perfect fair value gap aligned with that. We're just going to try another little scalp to get the low. Yeah, I like that. Volume imbalance as well, right? So I'd like to see us wick into it and then actually maintain that bearish volume imbalance. Because I'm looking at this candlestick here and I'm saying the first few times we interact with this on a higher time frame, we're respecting midpoint, we're respecting high. This candle falls right through that. To me, that's an indication we want to maintain bearishness. We have already on this same candle that delivered into the lower first presented case, so that's kind of something to be wary of, is that it is very choppy right now. So now that we've actually hit this one, if we don't want to clear this low out, we're going to revert back into pretty much its equilibrium. The 1 hour consequent encroachment. I like the idea of trying to hold this, however, right, use the midpoint paired with the most recently formed bearish fair value gap here. And that'll be our entry. So we'll try to scalp something like that. There's entry. As we said, it's another nice thing because if we are off sides, areas like this get traded through quickly, right? They get displaced, they get inverted, and price runs. So for me, either way, we should be okay. Wrong or right quickly. If we can get 5 handles, we're going to partial at 5 handles, of course, because I like that. The 5 handle ends model partial. Just in case we don't actually want to run out this low, but we may want, I think we can get that low out. So there's the tap. We'd want to see, ideally, us to run. So like tap this and hold the actual first presented here. We want to see bodies respecting that level, right? Closing below it. So we did open with the bearish volume imbalance. I want that to stay open. I don't want this to basically close bullish. So I want this candle to be a down close candle, and I want to be entered on the swing high. As I mentioned yesterday, best entries for me will be on swing points. So like we catch the swing low here, that makes me like that. Whereas if we end up running out this high, pushing up higher, we might just chop in here. Let me hide these again. Da 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 da. Still inside, so now we can't get back outside. We're waiting for that. I want to see us close outside first presented here. We're inside of it. I don't want to be inside of it. I want to leave it. Do I consider the time in macros? Yeah, I do. So like for this, I'm fine entering here because we're heading into 1250. So if we're going to run lower, right, we should get some type of movement within the next 10 minutes, which is why I like entering here. I was kind of waiting as well. Because now we're leaving the lunch hour. So if our plan was to kind of consolidate during lunch, we actually went up and attacked that opposing liquidity already, which is why I want to see continuation to get this low here. If not, as we said, if we get stopped out, that's okay. We'll have another opportunity to enter later on. So now at this point, still watching first presented. That's the high. Closure above the high, not a good sign. We hold the actual fair value gap, but now we've opened with the bullish volume imbalance right above it. Right, notice. So not only are we leaving first presented, we're leaving this fair value gap's consequent encroachment, which to me means closure above this. This becomes an inversion, and we'll probably just revert back up into this consolidation. This is like the last line of defense for me, which is why stop is above that. Anything higher, we're out. Failing to get to low. NQ didn't get that low either. So no SMT, which is why I was fine trying to actually target this. All right, real quick. NQ's kind of in the same spot. Cleared the high. Wanted to see the opposing low now, but it looks like we just want to keep chopping in here. We'll see. As long as we can hold this, we still have a chance. Price will tend to take the stairs up and the elevator down is something that we've learned over time, right? Something ICT talks about. What that basically means is slow movement up, a lot of give and take, can be kind of met with one swift boom, fall right through everything. And that's what we would expect, or at least want to see. Kind of like here. Or here. Right, taking the stairs up, slow, 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 boom, melt through. But it looks like now we have a bullish. Ooh, okay, so these are what we don't want to see. We're negating premiums and putting discounts in those places. So now for us to feel any type of way, or at least feel comfortable with this, we need to negate the actual bullish discount. Perfect. Not perfect, because we need to close below. Closure below is perfect. Low of the first presented, that may hold us. Let's see, perfect delivery into it. We don't like that. We need to leave it. We haven't been able to. It tries to, notice what happens. It tries to leave, it says nah. Immediately closes inside. Next candle, same thing. Opens right on and slow. But now I'm gonna watch this here. So the bullish discount we said needed to be broken, we did. We invert that. I want to see that offer us resistance and actually get us below. Because if not, we're just consolidating inside this again. Kind of like we did up here. Right inside of the first presented. Consolidation inside the first presented. Up and down through it. Just ugly delivery. Yeah, that's not what we wanted to see at all. Okay. I do have a Discord, yes. You have to go to my Twitter first, that's in my YouTube bio, and then the Twitter Discord, or the Twitter link will be in there. As I said, it's a paid one just because it was free for a while, and there's so many damn, I don't know if I'd call them scammers, but spam is a better word for it. I had it free for a bit, and there's just too much spam going on. I don't know why. I feel like they target trading Discords that are free. All right, so that's fine actually. Immediate rebalance I like, because now we should move away. If we're gonna immediately rebalance this candlestick has to move aggressively and close below. If it doesn't, we're gonna be stuck in this consolidation for a bit, probably until 1 o'clock. But if the lunch macro now 1250, right? Because at 1250, what did we do? That's when we create the down close candle back underneath, or trying to get back underneath the first presented. So for me, I want to see this bearishness now continue. As we said, 5 handles for us can get us into this low right here. So we're gonna just partial at 5 handles. 1. Oop. Oh, not 3. 1. 5 handles. Oh my. Hold up. I gotta go like this. There we go. So we could buy one at 50. That's gonna be right there. Oh, we just hit it? Oh shit. I didn't put it there fast enough. We should have been out already. May have fucked up there, we'll see. I think we can get one more tap of that though. Beautiful. Okay, so at this point, I don't want, this is where it's tough, right? Because we didn't return into this fair value gap. Had we cleared that, I'd feel safe putting my high here. My stop loss, excuse me. But because we didn't, I want to see how we close. If we close below this low, to me, that should be a break in structure, not a liquidity sweep, and then we should be able to run into this low. If we wick this low, I'm gonna have to leave the stop, because we may want to attack that high and actually hit this inefficiency right here, because it's the 1 hour, right? We hit the 1 hour low. That's what we liked. We close on that low. I like that. Let's get into this low. We're gonna just target this sell side. We don't need to be too greedy, right? We're just gonna go round number, sell side exit. Keep it simple. At this point, I don't want this high. This high shouldn't be visited at all. The high of that, so we can go tight stop. Beautiful. Yeah, we should run into that pretty clean here. I want to see that sell side right here. Let's just fall into that. We need to close below. Closure below this, because for the time being, that's just a short-term low cleared. Okay, that's not a break in structure. Put these back up. I forgot we took them off for the time being. So the 1 hour would have been nice. We just went low hanging entry. Instead, we go into that 1 hour. Then break. Maybe we should just close there, huh? Closure below. So for me, closure below, break even, bro. We don't right? We should use this low as resistance. If we don't, well, we have a fair value gap here, and we have a fair value gap here, both below our entry. So at this point, right, I don't want to get any higher than that. We should hold these and just run straight into sell side. That's so pretty. Low, the new or the first presented there. Yeah. Nice. Well, simple. Right, you see how simple it could be. You don't need to hit home runs. We don't need to catch crazy large ranges. You just gotta wait, be patient. Look for clear-cut base hits, man. That's all we gotta look for. So now at this point, let's see what we want to do. If we do want to actually run lower, we have the opportunity to. As we said, first midpoint. Ooh, wait a minute. Okay. What time is it? It's not 1 yet. But I like the fact that we close below that. Another 1 to 2 potentially. $8:30 time. We didn't leave that fair value gap, so I don't. This may be a liquidity run here. Had we left that open, I would trust this more, but at this point, I'm actually going to look for an inversion now. So I'm almost expecting something like this. Okay, so we create the bearish run into the liquidity, and then we retrace up into that range. I'd almost want to see that now. So if we can invert this here, really just the midpoint. Let's try that. At this point, we're just really trying to show off all of the ways that we can use to enter. So we're going to try this, right? That's going to be an inversion. New low should be protected. Another simple, maybe ends model into that higher up there. 5-minute chart, 5-minute wick, 2-minute huge displacement. Okay, sure. So we're going to just look for quick inversion to now run us into 5 handles right there, midpoint of this. So we're going to go midpoint, basically, right? Midpoint of this first presented into midpoint of this first presented. Base hits. Wait, 5 handles would be right there. So we don't even need to get into the first presented actually. Appreciate you going through what you want to see and what you don't want to see. Thanks, I'm glad you enjoy that. Yeah, I feel like that's the best way to learn, right? Is knowing why something should happen. If then statements, right? If this happens, then this should happen. If this doesn't happen, then what should happen next? And yeah, being able to do it candle by candlestick is... Not many people have that skill set. You're right. I'd agree with that. Which is why I think we're a little bit unique in that sense. Can offer something a little bit different. So I like that. We're immediately rebalancing in here. So I just want to see the continued push now at this point, right? We get above this. So I want to see that offer us, even though it's very tiny. If we're going to get above it, why not use it as support, right? So I'm watching that now. Just watching to see what we do there. Offer us some type of support. We do have this, which is an issue because to get exited, we're going to have to get through that. So if we want to hold this bearish, this is probably where it's going to be from, right? And then we'll fall back on ourselves. This is a little ambitious. I wanted at least 5 handles from this entry. And able to get that, we're going to have to get, yeah, into the first presented. So we'll use the first presented. Wait, right there. That's 5 exactly. We'll push for 5 exactly. Because we respected this, okay, so we take this candle's open to its close, midpoint. We shouldn't get below that midpoint. So I'm actually fine going like this. We're going to cut risk because I want us to get out. This will be a full pull exit. No partials along the way, full pull. Ooh, we fell just short. Let's just get a stab up into that first presented here. I don't like that we're holding that high. Didn't like that. We need to push up and through that. Where can you find the ICT? It's a paid indicator from Ethermat on Twitter. But like you said, I use it because I've spent the time marking them up on myself, right? I've spent the time marking all the PD arrays, new week opening gaps manually, just to learn how to do it. So at this point, I don't need to. His name's Ethermat. Ethermat? I don't know how to say it. Let me look at it's a paid indicator. I can't pull up the, let me go like this. Let me go about this script. This guy. Oh, wait. This guy right here. Ethermat. He used to be someone that was in my premium membership. He makes indicators. He made this for our group and he let me use it. Right now it's paid, which I mean, well, that's fair, I guess. I'll give it to him because it does really do a lot. So, ooh. So I think we get stopped. Unfortunate. We'll see though. As we said, holding that high is unfortunate. That's where we'd get stuck at. We are retrading into this first presented, so hopefully we can hold, but we may actually end up getting stopped here. I would not want a candle body to close back inside this first presented. I'd want to see this one get hit. May fall just short of our exit, however. But like we said, we're already partial, or not partial, but we've reduced risk. So if we do get stopped, that's okay. Matter of fact, we'll close one right there. At the opposing, right, in an opposing premium that will send price lower. If price is doing what I do not want to see, I have no hesitation offloading some there. So now we'll just go, yeah, full pull 5 handles. Especially because, right, we've already had winners here. See, we can't go 3 straight. I need it. Why do I gotta charge him? He let me have it for free. I mean, I guess, yeah, I'm sending people towards him, but I don't know. See, that's what I'm talking about. I'm just like bad with asserting my marketing and stuff like that. Like in my mind, I'm like, oh, he's letting me use it, so I can give him a shout out. But I do see what you're saying, right? If you're sending customers to him for free. Oh, look, that's why we took one off there. Swing high exit. Right, it's gonna hold us. Marketing, you're right, brother. You're right. Gosh, it's funny because my girl will be saying that too all the time. She gets mad at me. You need to market yourself better. You know what you're doing. She says she feels like I don't deserve it. So I'm like, dang, we're getting deep. You might be right. It's a hold up. Da 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 do. Hey. Oh shoot. Okay, so yeah, if we're not gonna hold that, that's all right though. We already said partialed out, so stop loss is minuscule. Oh, for sure does. Yeah, yeah. Keeps me grounded. And she means well by it. She means like, right. Because I've talked to her before, like, I say I don't like to put myself out there too much. And she says, nah, if you're trying to make this, right, if you're trying to build a community, you gotta market yourself. I'm like, okay, okay. I've always liked the more organic growth, because then that kind of builds like, I feel like that builds a stronger community, right? Organically just growing it. Because a lot of times when you market for these extravagant claims, the minute that it doesn't go the way that you say, people tend to turn on you. Whereas if you just grow organically and people come to you because they enjoy what you're doing and they see the value in it without you saying anything, they tend to stick around longer and then, right, tell other people about it, support you that way. But to each their own. It's like a delicate balance. I'm at the point now to where I do understand, okay, I have a skill set that many people don't have, so I shouldn't feel any type of way for trying to market that to people that may need it. So consolidation inside of an inversion expected at an old area of liquidity, right? As we often say, we run out the low, we revert above the low. That original liquidity pool becomes significant and can be used more than once in areas of consolidation. That's what we're seeing here. Now, I would favor that we actually can hold that and get up there, but as we said, we've already partialed here on a swing high. We've already had plenty of winners. So this stop out here means nothing really. We're allowing it to come back and test this if it wants. Anything below that, we get stopped and we'll reset. But the same idea, right? Higher time frame liquidity gets swept, it gets reverted. That's going to be a key area that can continue to support price. So now that we've tapped it, I'd actually want to see price run straight into these highs. Leave this low. If we test this low, we'll probably just be stopped. But if we can leave that low, that's that purge and revert we're talking about, followed by the quick expansion. So let's see. And so far, this is a counter trend trade. Right, the trend obviously is bearish. Closure below, premiums behind. So if we're going to continue the trend, we would try to capture shorts. I'm trying to counter trend trade that, however. Just didn't work out. Or it may still. Sell side, right? Aggressive rejection. Let's see. Maybe we can get a nice bounce from here. Any lower, we get stopped. We're about one handle away. Stop loss here. Oh, yep. We're stopped now. Oh, wait. What? That didn't hit our stop? This one will, though. Closure below. Okay, so closure below, to me, we're going to get stopped. That's more significant. Bearish volume bounce. So watch the stop out now. More than likely, we hit this candle's close, run straight into it. Yep, okay. So that's fine. We try to go with the little inversion. We're able to profit a little bit of it. And then we get stopped on the way down after adjusting our stop loss. So that's more of a break-even trade, actually. That's good for us. Look, let's see what we've done this morning. Up 1,000, yeah. Right, so still profit. Organic in this age is so much better. Yeah, you're for sure right. Look right, I would agree with that. A lot of selling false hopes, but right, to be fair, I guess it's a lot easier to make money that way than actually trading. And that's the one thing where I kind of struggle with promoting myself in that aspect. That I've always struggled, and that's more insecurity, I guess, of not wanting to be seen as them furus, one of them false prophets per se. So I never wanted to put myself out there for that aspect, but now it's like I look around Twitter and things like that and I just see nonsense all over the place. So I kind of care less, because I'm like, if people are just yapping away, I know I have true value. So I'm fine, right, saying the things that I say or trying to promote myself now. It's for sure, trading has for sure turned more into a trend to capitalize on than actual a long-term life project, I feel like, right? It's like the trendy thing to do. This is where it bounces. That's unfortunate. That's funny. We could have held that original low probably. And right, there is still good teachers, I'd say that. There's still legit people who know what they're doing, but it seems these days it's few and far in between. There's so much volume. Let's wait till 1:30. So at this point, we're gonna wait till 1:30 because that's kind of the true afternoon opening. And then we'll see what plays out after that. We've been here for a minute, that's lit. How long has this been going? Three hours. The first facts, this is a long one. Might have to start doing it, get more views that way. Stay up on the For You page longer. So once again, this is just consolidation near sell side. So as we said, we were just trying to capture a short-term retracement. Instead, we just keep consolidating. We hit that premium, right? This is the kind of the last fair value gap created as we clear this low and this low. So that's where we expected price to hold us, which is why we partial out there. And at this point, we're just sitting at that old sell side. So we're going to see if we want to just continue to do that, or if at 1:30 we get something, and then maybe we'll do something there. What's the sound? What sound is it? What does it sound like? Let me listen. What does it sound like? Let me listen. Da da da. Appreciate you staying on. Hey, yeah, no problem. Like I said, not doing nothing. Oh, it's probably me hitting my coffee cup. So one thing we can do, well, more so almost just showing entries at this point, where you can engage in price. In consolidations like this, right, let's say that this low wants to be actually held. We've cleared this liquidity and we've put in a new low. Purge and revert, right? An entry mechanic, this is another entry model, to where you enter on the original liquidity, stop loss below the swing low that gets created as you clear the liquidity, and then you target the opposing high that was created into that run. So that would be up here, like this. All right, so follow that entry model. Bouncing off here again. For us, we'll wait until 1:30 as we said, but we could probably get up there. Just got here. Hey, what up? What's up, S-Dub? Welcome, welcome. Clean risk to rewards. Right now, I like these ones because they're at the extremes of the range. So those always offer you some pretty good setups. Because right, we've already picked up liquidity. We've reverted back into that range. So we stop. Oh wait, I actually have to answer this one. Hey, what's good? All right, watch this high, watch this high. Watch that fair value gap too. I am muted, I'm on the phone. All right, we back. But yes, I was muted. No panic. So right as we said, that would have been a clean right there, purge and revert, low the inversion, or excuse me, of the first presented. PA this week. Oh yeah, past few weeks really been pretty gross. A lot of trading within consolidations. So now at this point, K, what would I expect to hold? If we're gonna run bullish, we actually don't want to see a deep retracement. I would look for like this fair value gap here. Because then, right, just kind of going over this price delivery. So we create this high to this low. We retrace. Let me hide this real quick. We retrace. We deliver into the premium. So this high to low, all of the premiums now have been repriced. As we move away from them, they've all become rebalanced. We retest the original liquidity. We then displace through the high, through the fair value gap, leaving this high. So to me, that becomes the breaker. As we said, breakers paired with original fair value gaps or just original PD arrays are what I like to use. So as I'm looking at this, if I was going to try to go long or if we were going to try to capture an entry, I would try to wait until a retracement into this fair value gap here. And then it would be a rather large stop, probably actually only 5 handles. Like if we were in a trending environment, okay, I would go like this because really we shouldn't trade into that fair value gap. But because the market has been pretty wonky, a lot of chop, the safest bet would be to keep the stop loss below the actual liquidity point here. And more importantly, really below the swing point, the last swing point that was created. So that'd be here, right? And that's a pretty large stop, a little larger than I would like. Because to get any good risk reward, we'd have to come all the way back up here somewhere. So we'll follow that. We'll see if like we trade into it and respect it and then go. Do you use fib projections? I do. Usually only when we have like if we're at all-time highs or if we don't have much on the left side of the chart to help us with, that's when I'll use fibs to target. So like I'd take the last, right, like I would take, so like in this move, say we're trying to target something, I would take the highest high to the low that cleared that liquidity. When we're projecting, we use wicks. And then I have my projections. Right, so like second standard deviation, and then I look and see, are there pre-existing PD arrays that are aligning? Well, look at that, right? This fair value gap's consequent encroachment, pretty much the second standard deviation. So in my mind, that's a good option to reach. Look at that, wow. That's crazy. So actually, we should, hold up. 1, 2, 3. Oh yeah, that might be a juicy trade actually. Look at that, the third standard deviation of that price leg to clear out this liquidity is what? That's not random. Like when you see something like that, that is exactly the buy side. So to me, that's gonna be a pretty, if we're bullish, we should clear that high. Which means, I do like that for entry actually. We clear that liquidity. It's a large fair value gap. We have the breaker, so I might trust that we don't break that fair value gap there. And we use this first presented stop loss below the swing low here, as we said, should be balanced. And I want to see that first presented up here. Let's try that. Yeah, a little earlier than 130, but I think like you're saying, this one, I want to see 130 move lower. And we may go lower too, right? As you said. The only thing that's kind of keeping me away from that is how we moved at this liquidity here, right? This was a lot different. So notice when we cleared this liquidity, it was purely a wick. And then this low was the only low created. We didn't retest that liquidity and we started retracing. So when we see that type of movement, that's prime for leaving, right, liquidity to target, because we only had one swing low and now we're creating higher lows and stair stepping our way up. This is a little different to me because we closed below it, leaving behind a bearish fair value gap. So already, if we're going to maintain bearishness, that should hold us. Instead, we immediately revert, and then we actually test this sell side multiple times. So right, we're accumulating, in my mind, positions here. So now that we've moved away, this to me is actually more of a true kind of change in state of delivery, right? A change in market narrative compared to this. Whereas in here, I wouldn't trust all this because we have all these lows. Whereas now that we've kind of spent some time accumulating at these lows and we've cleared it twice, that just seems a little bit more relevant to me to want to hold price. And as we said, we also could be wrong, but right, notice the wicks as well. So the wicks are unable to even get near that. And now we have a 5 minute. So honestly, this 5 minute may hold us. I want to try to get a little bit deeper retracement into the 1 minute. That's also that first presented. So we're going to try to enter there. And then look for up here, right? That high that was created during lunch, because now in the afternoon, lunch swing points will be what are targeted if we're going to maintain bullishness. So it's about to be 1:30. It's hot. Hold on, I'm gonna go turn on the AC. Can we get my China so high? Surprised we've had pretty consistent 50 people here. Nice. We're slowly getting there. We'll get to 100 and then maybe 120, 200. Yeah, that's looking prime for longs, to be honest. I like that a lot. One, two, three drives into higher time frame discount, displacement away, holding the liquidity, discount created, buy side objectives. Yeah, pretty clear cut. This is a trade I'd take 10 times out of 10. The hard facts, the hardcore. I respect that, man. Thanks. Y'all are lit. True supporters. I love it. I do, Mike, as well. I kind of regret? Why'd I say it like that? Like a little kid? I regret stopping it. If I'm being completely honest. The paid mentorship. Just because it was a good community. As I said, maybe we get back into it. Kind of want to build up this still. I like the YouTube. Build up my YouTube a bit. Do it for free. Rebuild the community, and this time we'll do it a little bit better. Keep it consistent. I think you are. You're the only one. You're the OG. There might be other ones in here. I don't know, actually. I don't know where they are. They're gone. They gone. Like I said, I was gone for a long time, you know what I mean? So I'm guessing it's just, that's what happens. Especially when you're in like a, the social media space. You lose your traction and the next one comes along, right? And it's kind of hard to get that back. You don't have OG? I thought you had OG in there. You should have OG in there. In the actual group chat. If not, I'll give it to you though. Because you must have been the second stage of OGs. That's, oh no you don't, look. Oh, there you go, upgraded. You're the last OG. Yes sir, yes sir. Yeah, like if I look in the Discord, there's only 5 right now. 5 OGs that are still left in it. We might miss that entry. We might just use the 5. That'll be unfortunate. I wanted to get a deeper, just slight deep retracement into the 5. But look at that. When we see that kind of hold the body, oftentimes we're going to get a huge expansive candle that follows this here, especially after clearing liquidity and consolidating. So we may have missed this entry here. We'll see if we can maybe hold from the high of this opening range and then retrace back down. We'll allow it, but yeah, we may have missed this one just barely. Let's find out. Right, we held at the breaker, as we said. The breaker aligned with the first presented. That's also aligned with the inversion. That's what we're holding at. Notice how that breaker and the 5 minutes fair value gap are the exact same. That's why that's a key area in price right there. I was hoping for a wick lower. We missed the entry by quite literally 1 tick. Still have a chance though, so we're not out of the woods yet. We'll wait. 130s here. So we're gonna have a first presented fair value gap potentially for the afternoon. Let's wait and see. Right, if that 5 minutes is gonna hold us, this is what's gonna end up holding here. So the bodies will respect the volume imbalance while the wicks trade into the fair value gap. If we see that, we would expect higher prices. So if we see the wick hold while the body maintains the volume imbalance, we would expect price to blast up and through the highs, maybe leave the first presented. I wouldn't mind a quick kind of invalidation of these little discounts in here and instead reference the first presented. Okay, so we were able to get under the volume imbalance, but we held consequent encroachment. So if this candlestick ends up reclaiming the volume imbalance, we may run. As we said, for the time being, I'd actually like to see us clear this short-term low. So a little short-term low cleared to enter on. As we said though, if we reclaim and get above the volume imbalance after creating this swing point low inside the OB here, this may be where we run from. So we'll wait and see. That's a good way to think about it, Hefe. Yeah. Right, committing to the original reference points. And especially when we're a little choppy, we don't want to get thrown off on the 1 minute. Obviously, I primarily work within the 1 minute. That's because I've already spent time learning the higher time frames. So like everything I'm seeing in here, I'm almost picturing like a 5 or 15 minute chart, the structure of it. Like, I'm pretty sure the only higher time frame swing point would be here. Maybe, what time was this form? 12:50. So that means that this was the close of the 5. Yeah, so this wouldn't even be a swing point either. Let's see. 5. Yeah, right, the higher time frame. Yeah. So there's really only, I guess there was a swing point here as well. So all these swing points on the lower time frame are almost like, I wouldn't say false, but they're not as important. So I wouldn't mind us, yeah, hitting that 5, because the 5-minute low is a good swing point. So right, that would be a good one for the 5-minute to pick up, hit the first presented, hold from there, and then run. Especially if we can consolidation, manipulation of the consolidation to pick up liquidity into a predetermined discount to then revert. So far though, right, look at that fair value gap, just holding, as we said. If it doesn't want to break, its consequent encroachment's going to hold. So it's trying to get out, smashing into the OB. That damn consequent encroachment's holding though. If we get above that volume imbalance, we will probably run. You can see the importance here between these two PJ arrays and how they're interacting. You've noticed, yeah, see, good, I like that. And that's that market experience right there, right? Those are the things that you learn over time. And you build that into your understanding, which, as you say, prevents you from making bad mistakes in the future. But yeah, right, you're totally correct. Oftentimes, especially in choppy markets, you'll find that price will start distorting until the higher time frame candlesticks close, which at that point, then price will kind of move as you expect. Volume imbalance right there. So yeah, we may miss this actually. If that stays open, we got to be wary of that, because now that's going to be the 1 minute and a 5-minute as well. Same exact area. I want to try to pick up these sell stops first. Ooh. So watch that. We're going to see if we tap this candle's close and accelerate. There's a close. If this is a textbook volume imbalance, we'll hold this fair value gap and close bullish. Yeah, okay. And those are just things you pick up over time. Right, we've been stuck inside of it, been stuck inside of it, been stuck inside of it. Boom, as soon as we leave it, you're going to look for a quick retest followed by the expansion. That's exactly what takes place. So now I'm still fine holding, to be honest, because we may hit the high of this and retrace. Let's see. But as we said, yeah, that might be it. May be it. I like this though. I like that the first presented's still there. Which one is that? Is that from, that's from when? Wednesdays, okay. So that's actually a pretty good one too, because that's an old buy side pool. Old buy side pool, consolidate, manipulate, 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 expansion. Original buy side pool will hold. We've already been inside the 15. If we leave the opening range gap, I'm not too sure about the entry anymore here. We may be going sell to buy. So if that's the case, premiums on the left, right, that hold us and send us lower, get used. Premiums on the left that hold us and send us lower here. Here. Okay. There's the high. Yep, there goes that expansion. Don't want to chase, we'll follow. As you said, unfortunate, barely missed the entry. We instead hit the breaker high. One tick off. We'll see if we close above. We still may be able to get down here, but if we're going to maintain bullishness, right after we leave consolidations, we're not going to want to return into those. Are we going to build in a buy to sell model here, though? Because if that's the case, we could almost turtle soup that. If we consolidate, so now that we've expanded, if we consolidate before running out this high, I'm going to try to turtle soup that high. Expecting this is going to be a buy to sell model. Original consolidation at liquidity, expansion, reaccumulation, expansion, accumulation before the liquidity. So we'll try to get short on the smart money reversal almost. And then try to bring it back down. Almost look for a repeat of, what day was it? Tuesday? Here. Right, we consolidated, we expand, leave the discount, consolidate, we expand, leave the discount. So if we consolidate just below the high, as we run up into the high, I'll look to get short and then try to capture the sell side move back down. So yeah, especially right, if we left this, like if we leave this open and we can displace outside of the opening range gap and leave another type of discount here, that remains open. Like if we left a fair value gap right here that was open, as we trade into that buy side, I actually would try to short that with the stop above this most recent swing point right there to get back into almost our entry, to be honest, like that. Let's see. Let us see. Let us see. So right, what would happen now if we're going to create that buy model is that we would displace through this high. That's what I'm almost trying to see. Like if we create that fair value gap as we break through that high, that would be a textbook signature that we're going to leave these behind. So I'm almost trying to anticipate that. Let's see. Okay, let's see what happens here then. So far, we almost are, right? So the low of that fair value gap would be here instead. So just barely missed it. But if, yeah, this candlestick creates a fair value gap right here of some sort that remains open. Can you reflect on the buy model structure expectations? Sure, so I guess, right, the buy to sell model. It's gonna hide, we'll just hide all of this. So like in this case, right, we're expecting it to actually be right now a sell to buy model. And what that means is we're gonna create the consolidation. We're gonna start moving lower into an area of liquidity here. Once we deliver into that, we take a look at the left side of the chart. So all the kind of premiums that were created on the way down into the sell side, those should become important areas on the way back up. And right, the way we go about that is we say, okay, so really we could start from like up here, because this is what originate or starts to move lower. So that premium held us, it delivered us lower. This premium in the form of the volume balance held us, it delivered us lower. As we keep looking, right, this wick that gets traded through becomes a gap that holds us in price and delivers us lower. Fair value gap here holds us and delivers us lower. So we continue to drag these out to the right side of the chart. And then finally, the last little premium here before we clear that low. So now expectation is on the buy side of the curve, all of these premiums that were used to go lower will be inverted and should act as areas of support on the way up. Let me hide the indicators. All right, so now let me move these real quick. So if we were to just drag these out, all of them, right, you'll see what I'm talking about now. So look at this. The first one that we run into, we get above it. Paint outside the lines a little bit, but we understand it's this original liquidity, right? So this is still valid, it holds. It accelerates us up and through the premium fair value gap that sent us lower. As we invert that, this should now offer us support. It does, look at that. We consolidate at an old area of premium. We trade above that premium. As we said, old premiums on the right side should hold as support. We close above it, we trade back into it. It offers us support. We've now traded above the volume imbalance. So I'm just honestly waiting for that same thing to happen. Right, are we going to use now this old premium that sent us lower as an area of support? And if we do, and we accelerate through this premium, we would expect the same thing to happen. That this will then hold us bullish and deliver us into, right, the objective, which is the high of that range. And I'm saying if we're going to deliver like we are now, where we're not clearing lows, we're leaving liquidity now to target for the same idea, for the sell side. So I'll look at all the discounts in here that were untapped, and those are what become our sell side objectives for later. So like this here. This here. We've used this, so I'm going to move it and look for the actual bullish premium that was formed in its place. That's this here. So if we don't return into any of these areas and we hit that buy side, that's why I would actually try to short that. Because then in my mind, right, this is that buy to now sell model. And a good reference of that would be, once again, as we said, Tuesday was textbook. And we'll actually rock through this just so you guys can have like a better understanding. I think it's easier to see a full fleshed out one. And then that'll help you anticipate. All right, so let's look at this. This was the original swing point. We create the original consolidation. We break away and leave that discount. We consolidate, we break away, and we leave that discount. Consolidate in here, right? The breakaway is here because this clears out the short-term lows. This is the last discount that gets created as we trade through that high. Then finally, here, as we deliver into the actual external range, here's the last fair value gap. And now you'll see, right, after we clear the buy side, what happens? Displacement underneath the discount that held us, it gets used. Displacement underneath the fair value gap here. Buyers respect it. It displaces where? Perfectly into the untapped inefficiency where it consolidates, clears a short-term high, breaks below it. And notice every time we're breaking below, right, we're creating discounts. So as we break below this, we create a premium here. As we break below this old discount, we create a premium here. As we break below this old discount, we leave a premium here. This is a textbook buy to sell model. We leave PD arrays in the place of the previous PD arrays that we were using on the buy side. We trade into the fair value gap. We break underneath the fair value gap, leaving a premium. Right, so you see how it just repeats. And once you understand it, it's pretty simple to follow. That holds us. And what's the original objective? Well, it's the original consolidation low. Where does price deliver into? Perfectly. Boom. What happens? It then consolidates. And of course, we had this low as well. So as price trades into a new day, perfect delivery. All right, so that is kind of a full fleshed out buy to sell model. And that's almost what I would be expecting here. Now that we look at this, right? If we hide everything, expansion, untapped inefficiency, consolidation. In this case, we are using these inefficiencies, but the fact that we're not clearing lows, I still like, right? So these lows will be targeted on the sell side if we're going to complete that, especially if we hold these, right? As we said, we're above the volume imbalance, old premium turn discount. If we hold from here and keep moving higher, I expect that to be targeted later. So now we're hitting, right, the inversion. So we'll see what we get there. And this is what you're missing. Cool way. I'm glad it helps. It's pretty in depth, right? It's a lot of technical analysis. And it gets a little jumbled, which is why I try to keep it clean. Because I'm at the point now to where I'm almost like, right, internalizing all of it that's taking place as it happens. But when you start explaining it, you can see how detailed it gets, what you're really looking for. Yeah, I like this, right? Especially this type of delivery to where there's so much sell side now. So yeah, if we do clear that high, if we continue to deliver like this and we run this high, I'm gonna just try to short that right away, to be honest, with our stop above this swing point here. Let me just clear some of this up because we don't really need all that nonsense. We really just need the sell side that was here, this 1 hour, because it's equilibrium, high to low, so that's going to be important, especially because the 1 hour is about to close. So either way, if we don't get up here first, we leave this entry, because then I think we'll try to retrace into that potentially and hold. But if we get up there first, we're going to try to soup that. What, pigeon? Hey, thanks, dog. That's a new one. I haven't heard that one yet. He got that good voice. I like that. That cracks me up. So now what we're doing in here, that slight consolidation. If we expand, that's a sell target for later. We literally caught that. I didn't notice. We caught the swing high and the swing low of this move. That's sick. We high tick to low. And then we could have rolled that back up. That's just kind of, that was on me, honestly. That's bad. I still make mistakes. We quite literally called out. That would be the purge and revert to where the original liquidity, we should have entered like that to go long. So I did enter here, but our stop loss was just way too tight. We barely got stopped. Yeah, if I didn't even move it, I shouldn't have moved it. That was just me. If we would have just left that entry where it's B, that would have worked out perfectly. But user error. So at this point, let's see. Yeah, still consolidating. It's gonna be the 5, it's gonna be the 15. The only other issue is that, like, I wish we had higher time frame inefficiencies. So if we had some type of inefficiency above this high as well, that'd be nice. I guess we do have this 15-minute inversion, which we may want to use. Let's see where that would align. If we bring that up like this, wait 1 second actually, because the 15 minutes consequent encroachment is indeed the first presented. Interesting. Okay. We basically got a spread on this here. So if we run buy side first, we're going to try to turtle soup that back lower. If we come down and pick up this low, we're going to try to run it higher. Oh, jeez. I think it'll take 12 p.m. and then drop down to 7:30 open. That'd be nice. It's kind of what we would expect as well. Right, turtle soup. If we just continue to deliver like this anyways. Two o'clock pleat that takes us into the high of the macro. See, that would also be nice because right, the 4 o'clock candle is about to open. So I also like this, and you really understand how we're starting to add more and more confluences. All right, so it's about to be 4 o'clock, timed and price is what we talk about. The 4-hour candlestick is about to open here soon. So let's say that the 4-hour candlestick opens and wants to close bearishly. Well, we can expect a 4-hour wick followed by rejection, almost like this, right? Think of something like this here. Well, we'll trade up, create the high, hold that wick and close lower. So if that's the case, now at 2 o'clock, if we can just continue to run higher, trade into that. I like that a lot. How long I've been trading? It's been about 7 years. 2018 is when I started. Seven years. That's actually crazy when I say it out loud. Damn. Doesn't feel that long. Yeah, I like it as well. Then right, if we blast right through that, that's fine. We'll be offsides and maybe we'll come back up for highs. But I'm content with that entry there. That is crazy, honestly, when you say it, when I say it out loud. I kind of had a good start because I started when I was in college. So the first few years, I didn't really have to worry about how I would support myself, which kind of allows a little bit more freedom in learning because you're not worried about making money. So I think that was helpful for sure. Right, it gave me kind of a good foundation. And then after that, I just fell in love with it, so I never stopped. Never stopped learning. I'm 28. And what's crazy is it's taken me probably 5 years to get to where I am right now, right? Which is why I think trading is just one of the hardest things ever. Took me 3 years to get break even, I would say. Another 2 years until I could support myself with trading. So yeah, about 5 years total before I had any type of profitability. Could y'all do something for 5 years without any results? Probably not. Right? That's why a lot of traders fail. It's a very taxing game. When did you start? 2019. And yeah, I'm still young for sure, right? I got plenty of time. But yeah, 2019 is when I found ICT. I was in his 2019 private mentorship. I never finished it, so I'm not a charter member or anything like that. I couldn't pay for all of it, so I stopped. As I said, I was in college when I found it, so I paid for a few months, couldn't afford it. I ended up leaving. At the time being, however, we still kind of got lucky because there was a lot of leaks of ICT, right? So a lot of people were selling his courses or leaking his courses online, which is unfortunate for him, but I was still able to learn because of that, even though I wasn't in this private mentorship. And then from there, eventually he came out in the public because people were doing that and was teaching. And now he's just offering the public. Oh my goodness, I wasn't even watching this. So 2 o'clock, we get that exactly what we're expecting. If we run through this, this will be more bullish, but I want to see if we can reject hard from here actually. So at this point, we need to get rid of, what is this? What's the buy? Wait, what's our actual buy right there? Get rid of that. That soup is exactly what we would expect to see. So let's reject here and get moving lower. If we hold the low of this, we'll probably accelerate quickly. But if we can close below that, we should be okay. Total soup, I tend to close. So like that swing low will be 5 handles. So we'll try to get one there if we can. Wish you started when you were 21. Damn, how old? So you're older then, huh? Oh wait, so you're older than ICT then, from what you're saying there. Okay, okay. Respect. So at least 50, 55. Oh, Blastoise. Blastoise. That's the high. We'd have to hold there. If not, we come all the way back up for yesterday's high, maybe. Yeah, it looks like that's the objective. The fact that we blasted through that. We would have wanted to see quick rejection. Instead, that's bullish. So closure above, I think we're out. If we can hold this though, we may get a nice little rejection. As we said, I want to see that buy to sell. The only issue is this may be the original consolidation that it wants to target as the high. I wanted to see this. But as we displace through that high, we've left a discount and now we've closed above. Oh wait, no, we haven't. Closure above first presented though, stop loss pretty certain. What caused the 2 p.m. bullish candle? Just the opening of the 4 hour, right? That's what we talk about, time, then price. The 4 hour candlestick just opened. So if the 4 hour candle doesn't want to create a wick and it's going to be bullish, it's just going to run, especially because we've now come off of a 1 hour here. So yeah, it looks like it's going to want to get a high. We wanted to see consolidation. Closure above, not a good sign, especially if we leave that with the fair value gap. We might actually flip this entry to target the high. It seems like it's going to want to run. We're retesting this 2 minute. That's what I'm allowing here, is this 2 minute. That's what I'm looking at. That's what my stop's above. Right, the 2 minute that held us and sent us on this huge down move. We've just revisited that. We would need that to hold. But it's going to look like we do leave a fair value gap there perfectly. So that's going to be an area that will send price higher. It'll be like this. Catch you next week. Oh, you headed out? All right, Mike, take care, brother. Oh, it's nighttime, damn. Well, have a good night, my dog. Catch you next week, man. Yeah, Pigeon, all ICT, purely ICT. So watch here, right? As we said, if we're offsides, this becomes bullish. This holds us, and we'll probably just run straight into the buy side up there. If we do a blast off here, as we said, maybe data highs here, 11 o'clock high, or 11:06, excuse me. Especially if we clear the 2 minute here. Retesting it again. See if we get above it. Second attempt of the 2 minute, as we said, respecting the first presented, following the displacement. Had a nice exit at 840, might still go long. 56, yes sir, nice man. So you're never too young to start. That's what I love about trading. A lifelong skill. Retest of the high. Let's see if we want to continue bullish. Higher time frames closed above as well. 5 minute. 15 has yet to, but 5 minute has. Same as the 2 minute. So far, not looking too hot. We would need to revert back below this to have a chance. Midpoint, so that may be where we want to hold from, right on that midpoint. Let's see. Looks like we're going to maybe leave a 5 minute fair value gap there. Yeah, that displacement through the high, right? To me, that's more bullish. Closing right above that first presented. So it actually would look for a potential run higher. Maybe we do flip this. Just a large inefficiency here. But in reality, we shouldn't even return into that if we're going to maintain bullishness. Need to form a breaker before turning unless this is a retracement. So we need a higher high. Yeah, if we wanted to, I guess, confirm bearishness, running this high and then breaking would be nice. But if we can break down below this, we may not need to create another high. And we can just get the expansion to the retracement. So far though, it looks like, yeah, we're going to want to hold that. We have a 2 minute perfectly aligned. 5 minute is about to make that perfectly aligned as well. Yeah, so to me, this seems a little more bullish. Okay, yeah, watch the expansion here. Probably stop now. Now that we've hit midpoint. So we get midpoint of that. If we're going to retest a 2 minute, to me, that means we want to push up and through that 2 minute. Get into this here. We'll see if we can reject maybe. Volume imbalance. So yeah, we should actually hit that. I'd watch right the immediate, once we hit this candle's close, are we going to reject and just push straight up? Kind of the immediate volume imbalance entry there. We're going to do what we talked about. If we can touch this again, we're going to close one. So mitigate risk. Because yeah, everything here is leaning towards me thinking we're going to want to run, or at least revisit previous day high one more time. So we'll see if we want to tap that. With this volume imbalance though, if that stays open, we'll probably just go straight into our stop loss. No tap. Ooh, yeah, we left that open. So I'd watch here actually. Probably stop. I'm guessing this holds us. I still want to try to get one off here if we can, but this may be it. And then we'll just eat the full stop. Wonder if we need to take AM highs. We may want to. A lot of choppiness up here. You said that was kind of the original. We wanted to see this high before the run lower. Now that we've kind of ran all the way lower, highs here may be the objective. Failing to get even into first presented is pretty bullish as well. So we'll see if this holds, but failing to get into that first presented, trading up and through it, yeah, that's bullish. And we'd probably look for at least this high here. Right through it, stop loss. Let's see. There it is. So full stop there, just barely. High tick this. We'll see if we keep consolidating, or let's move that. So no soup, as we often would expect with soups, right? If we're gonna run this, we would want to see that candlestick close in the range. So the fact that we close above it right away, already just less likely. And then we end up pushing into the higher 2 minute here. So at this point, we'll just watch, because I think we may want to actually, let's go like this. Right, that first presented, I think, is what holds us here. Five-minute fair value gap has now been closed, or created, excuse me. Just like that. So we have the 5 minute there with the lows. So maybe we run out those lows, hold the old buy side, because displacing through that, yeah, we may want to get into buy side up here. It is nice, huh? You like that? It's because it's a cream. That's why. It's not our actual white. So it's a little softer. Just barely. Best background colors in the game. People be using them now. I like it. So just waiting to see now. Do we get the retracement into 5 minute, which is here? Yeah, so SMT is a smart money technique is what it's called. And what it's referencing is, right, you're going to look at the lows. So let's hide really everything so it's easier to see. And then bring up NQ. Split it in half. What do we got over here? ES, right side NQ, reset. Okay. So SMT, right, is called the smart money technique. What it's referencing is the discrepancy in highs and lows between the two charts. So like here this morning, right, where's the high at that we had? This high versus. Oh wait, I need to make sure that I have same interval, same date range. Okay. 15 minute highs. Perfect. Okay. So if we take a look at these highs, right? The high that we created in ES, when we try to run up and steal that high. Fuck it. We'll just do this. I'll bring it back up. Sorry. So much going on. So as we're creating this high in ES, we have a failure swing here, where this high tries to run out that previous high and is unable to. At the same time, right, this high in ES is actually, I don't know why this is actually so buggy right now. Goodness gracious. SMT at the highs. Lower high. There it is. Okay. Jeez. I was like, I know these highs are correlated. Where are they at? Boom. Perfect. There it is. So SMT would be references this. This high here is able to clear the high in ES. It clears both of these highs, showing a willing to be stronger than NQ. What we would use SMT for, though, is like, say that we were bearish in here, so we wanted to see price run out a high and actually break bearish and deliver lower. What we're waiting to see is, as price clears one of these highs, does the opposing indice struggle to do that? And if we find that, right, one of the instruments here clears the high while the other doesn't, and then we get some type of break and structure lower, That's just going to be an added confirmation in price that we can trust that this leg will deliver, if that makes sense. So right, it's just another type of, we'll say, confluence to add to your trades, to where if you're looking to enter at some type of swing low or predetermined discount, and the swing lows and swing highs that get created are different in ES and NQ, it's just added confirmation. Trying to find, like, on the hourly sense, maybe other ones that are clean as well. I mean, actually, one that we used on Tuesday was perfect. So let's do that. We'll give you like a real life example of how we used them. So here on Tuesday, or Wednesday, excuse me. Let's get this set for you. Right, we had a dealing range low and a dealing range high here. The same low in NQ was this. So right, we noticed that in NQ, price was able to actually come out and sweep this low. It swept that low, but notice that the bodies remained within the range, and then it reversed. While here in ES, we were unable to sweep that low, instead holding that as a protected low and then reversing. So for us, this is why we were trusting that this price would continue to deliver bullish, because we already had the understanding and expectation that we want to see this buy side be targeted. So if price is going to fail to create this swing low, while NQ is actually clearing the low, that just means that ES is stronger, and we can trust that we should get a bullish run. So right, when we create the inversion and create the bullish setup, that's why we're trusting it. Because now in reality, it's the same setup on NQ, but NQ has created that SMT by clearing its low where ES hasn't. So as we say, just a way to add confirmation to your trades. Let's see if we cleared it high. Okay, so no difference at the highs here. Well, actually we do, right? So like even on the minuscule sense, let's pull this up here more. So once we run out the buy side here in ES and NQ, notice the discrepancy between these highs. To where we create the higher high here, the next high cannot run that high, indicating heaviness, price breaks lower. Whereas in NQ, this is the high that gets created, and then the next high actually runs out that high. So once again, SMT at the highs. This is also important because it's the extreme of the range. It's the daily high. So when we have SMT being formed at higher time frame areas of interest, those are the real kind of SMT signals that we can trust. Because as we said this morning, a lot of times you'll see that SMT is just formed on the 1 minute all throughout the day. And you're not simply only looking for that to enter. It has to be anchored to higher time frame key areas. Right, so in this sense, daily low, that's a key area. Same in NQ. That was that daily low. Where are we at now? So we are, just respecting that. As we said, if we're going to accelerate through, we expect first presented to hold. Still choppy. But I think maybe highs could be the objective here. Let's see. Previous day high, I'm curious to see what happens there. Here in NQ, we're at that original buy side liquidity again, continuing to reference that. So maybe we can get up higher. Does the volume differential between the indices have an impact? For me, I guess I wouldn't say, I'd say no necessarily. Right, NQ is moving more just because it has larger ranges. So like the actual handle value in NQ is smaller than the handle value in ES, respectively. So I don't necessarily count it as like a volume imbalance or a volume differential. It's just the actual ranges are larger. The percentage of the stock weight, yeah, that's a good way to put it. Is it, yeah, just the scale of NQ itself is different than ES. that's why I've kind of like over time, right? I thought I had to trade NQ because yeah, on paper, like it's moving more handles in theory. Like bang, that's a 100 handle move. But then you have to factor in like where would your stop loss be? So it's still relative to right the actual risk. Like if we were going to enter somewhere, like just imagine, right? The stop loss is like this. Sure, it's 80 handles, but it's really just a 2.5 RR. Whereas like in ES, like if we were going to do something similar to that, like using first percentage, right? That's only 20 handles, 25, but it's a higher risk to reward because of the actual structure within here itself. So to me, I'm always looking at risk to reward rather than pips, handles moved. So there's the daily high. Let's go back to that 1 minute. I want to see if we get a rejection from that. We do get a quick little rejection. Right now, price is getting fickle, right? You can see kind of the delivery once again. Choppy. Still facts. It's been a long one, Muhammad. That's what I'm saying. This is the longest one ever. I didn't have anything to do today though, so I was just chilling. We've been on for like, how long has it been? Like 5 hours now? It's gotta be something crazy, right? We started at 8:25, it's now 2:25. 6 hours? Wait. 6 hours, that's actually crazy. Oh my. Grinding. No, sir. This is all I do. Which is why we can sit here. Having a job though is not a bad idea. I had a job for a long time. And to be honest, that's also why I'm kind of starting up my YouTube again. Right, we can get into it. Y'all that are here are obviously supporters. So like for me, when I first started trading, I relied purely on the profits only because I thought that like if I wanted to be a legit trader, right, I had to make my income only trading. But I came to learn that through experience that that's not the best idea because you run into like a rough patch in your trading. And if that's the only source of income you have, it's just going to make it that much more difficult to get out of those kind of slumps because now you're going to be forcing entries. Your emotions are going to start getting in the way because you need to rely on that money. And that's actually why I kind of blew up the first time. So about 11 months ago, right, I ran into some personal issues. I was still only relying on trading at this point, but things outside of the chart affected me, which then led to me making poor trading decisions. And because trading was the only source of income I had, it just made it harder for me to stay consistent because now you're getting emotional. You're trying to push too much. You're trying to make back losses that you shouldn't have had lost anyways. And it just makes it harder. That's also why I'm kind of doing the YouTube now. Because admittedly, if I can grow this channel to where it's even minuscule, you make $1,000, $2,000 a month. That's not much, but that still, gives you peace of mind to not have to push. You're starting to see that ES is a lot cleaner. Yeah, I'd agree. And yeah, that's not a bad way to do it, right? Trade both. Whatever gives the best setup for that day, utilize that. Let's see what we get here at the high. Ah, okay, trades for fun. So you're an OG too then. Yeah, right, I took a lot of time off. Which looking back now, that was a mistake, right? And that was my mindset. The whole reason I took time off was because I felt as if I only wanted to make money from trading, because I had been doing it. And in my mind, right, oh, you're not a real trader unless that's your only source of income, or that's your primary source of income, which is just a bad way to think, in my opinion. Especially after like listening to ICT, right? He's admitted himself, he's made more offering his services rather than trading. Over time, you would learn what work effects. Over time, right, you're going to kind of create your own model. That's why I like these concepts, is because, as we say, right, it's a language that allows you to create your own story within price. Whereas a lot of retail education is, right, you have to follow this pattern. When it forms, you trade. Whereas with ICT, it's more so the nuance of why price should go from here to here, how will it do it, and how can I get involved, which allows you to create your own models, allows you to be a little bit more nimble in price, and not so rigid and like a one-size-fits-all approach. That does not sound like a good system to follow. Which one, like the retail? Or what system? Because yeah, if that's the case, is that what you're saying? Definitely don't want to just follow patterns for pattern's sake. I'm watching how we've interacted with the previous day high. So like if we don't want to actually clear that again, I'm trying to see if this little fair value gap that's here is going to start sending us lower. Because within here, in a very minuscule sense, short-term high cleared, discount created, displacement underneath the discount, holding the premium paired with previous day high, which is also the volume imbalance, closing underneath a swing point, leaving behind a fair value gap. So now I'm going to see, right, does that hold us? Can we get back below first presented and then maybe start venturing into the opening range here? Untapped displacement still. Oh, if the creator makes more in selling the system instead of trading the system. I would say yeah. But it's a caveat, right? Because let's be honest, you can trade a system and make profits, but if you don't have a lot of capital, you can make more money selling that. And I think that's kind of why there is a lot of furus, as they call them, like the fake influencers, is because it's easier to make money off people buying into your service than to have the emotional strength and whatnot to actually, right, be consistent in trading that. Or some people simply don't have the emotional ability to trade legitimately with live funds, but they are great market analysts. And if that's the case, I think that's okay as well. Really comes down to, right, each thing. Like, yeah, there's some people out there that are selling nonsense that don't work, that have no idea what they're doing, and they're just preying off people trying to make a living. But there are some people out there that actually know how to read price and explain where it should go, but they aren't able to execute on that. And those are people that, right, sell their time and things like that. In my mind, as long as you're transparent with the fact that, oh, nice. But yeah, as long as you're transparent with the fact that, right, you either make more off trading or that trading isn't your only source of income, that's fine. Now, if you're selling false hopes, that's where I think it gets a little fishy, right? Like if you're someone saying this system produces these results when that's just not true at all, that's where it gets a little messed up. Interesting. I wonder what that was. Is Trump out here tweeting again or something? Oh, what up, Ivan? Welcome, welcome. How long did it take for me to become profitable? Like I said, probably 5 years. So it might be a little bit longer than some, but that was just the truth of my journey. 3 years until I became break even, and then it was still another 2 before I can get over that hump. Yeah, it's 2:30, but I'm just curious, like, I wonder if he said something. But even if he did, right, where does it go? It just goes right up into previous day high. So even in like these crazy moves, it's just referencing higher time frame key areas that are already there. And notice how we actually hold that fair value gap. 2:30 p.m. is at the open or the session? 2:30 p.m. is the, I'm trying to figure out what you mean. 2:30 open is not the open or the session. It's just a time. Or sorry, Ken, what do you mean exactly? I may be confused. Plus, it's easier to sell the course because of the dynamics of the niche. Facts. If you're a mentor, you should have to show proof of concept. I agree. I would agree with that 100%. That if you're someone that's selling something or trying to sell something, I think that, right, you should be able to show that you can at least do what you're trying to promote. Mm-mm-mm. 1:30 p.m. Eastern is kind of what we consider as the afternoon open, Ken. So that would be like here. And that's what holds us that first presented fair value gap from 1:30, right? It gets created right on the 1:30 candle. Whoa. With the volume balance, we could pair it in. But right at 1:30, we create the fair value gap. That holds us, and that's what's been accelerating us. Oh wait, what is this down here? Oh, I changed the indicator. How did I do that? That was weird. There we go. You assume they're a bad trader if they're selling a course. That's hilarious. I mean, I guess to be fair, I'd say, yeah, 75%. That's valid. I think selling courses and selling mentorships are slightly different. Like the mentorship is more, right, you sit in with me live day by day, where the course is like, oh, buy this to learn how to trade. I don't like that, because at least in my philosophy is you can't learn to trade by watching old price movements. You need to sit in front of live price and follow price as it's moving in real time. And that's why I feel like courses are kind of hard or aren't the best. There we go. Look at that blast off. So yeah, I think we get highs here then, maybe. First presented here did hold nicely. Right, so we'll offer that support. Now we should clear. I want to see if we get that high here. We did. Okay, so let's see what we do now. Excuse me, jeez. Rejection. If we invert previous day's high, maybe that's a short opportunity. Expectation, we don't get this high, we leave that high. This is the high we're targeting. The morning consolidation. NQ cleared high as well. Okay, so NQ at high day, ES not. So right, see, that would be SMT if we break lower. Well, we've cleared this morning range high here in NQ like this. So if NQ was to break and start trading lower, well, ES is unable to clear its morning high from here. Right, that would be some SMT potentially. And then we could try to take ES short because it's weaker. It's actually this high as well. So yeah, SMT there. Hitting that inefficiency, that's that fair value gap we wanted to see in NQ actually. So I wouldn't mind, yeah, maybe a short. We'll see. Couldn't have said it better myself, Raid. The only way to actually get proficient is to learn it in real time. Obviously, right, back testing is how you're going to have to learn it first, because you're going to have to see old moves to get familiar with how the market just will move in general. But you'll never be able to anticipate entries unless you spend time just watching the live price action. So actually, we are going to try to, if we invert this, because that's a fair value gap there. So this will be an entry for us. If we invert this, if we get back below previous day's low, we're going to take that short using this high, trying to basically make that the new high that cleared this liquidity here as a buy side stop run while creating SMT at the actual high of day with NQ. That's going to be the framework for that entry here. If we want to maintain bullishness, we should also hold from this. So that's kind of why I like this area in price. Right, it should kind of hold us as support. If we fall through it, it should be an area of resistance to keep us lower. So conversely, if NQ keeps on driving higher, this will drag ES along with it pretty much, right? And that's what we call the six sister concept. So that is, if we're actually expecting bullish momentum and NQ has already cleared a high of day, a swing point that ES is yet to clear, we would actually try to go long into that same swing point. So let's say this is a six sister and we're expecting that ES wants to catch up with NQ, then we'd actually be trying to long here like this. My anticipation though is this, I want to see a retracement into the range. So just holding bearishness, right? If the bias is wrong, then obviously we're going to hold from here and we just won't be involved. But we understand this is where price will find support because it's the breaker, it's the previous day's high, it has a volume imbalance, and we've just come off of the first presented, so a new discount. But as we said, I like the idea of actually trying to get lower. By doing all this, you also gather data to get your numbers. Yeah, see, you got it right. You can't shortcut market experience. Closure on it. Let's see what we get. Yeah, I wouldn't mind shorts. I like that. Ideally, we would like displace below previous day and leave some type of discount. Because we have a lot of, right, 1, 2, 3 straight volume imbalances here that are going to try to maybe hold price up. So we'll see. 2:30, about to head into power hour. Damn, I haven't even eaten anything. I'm about to go warm up lunch real quick. We've been here for a minute. I'll be right back. Oh, okay, hold up. So let's see if we get double closure below this. We may actually try that. Let's see, 2 minute. There's a 2 minute fair value up there. What about a 5 minute? 5 minute OB, Persian revert. Do we want to get that high? Dollar's pretty much consolidating, so we're kind of on our own here with this price action. This closes below, we'll try it. Previous day high. This will be the protected liquidity, and then we can easily just try like back into the inefficiency right there. Yeah, so what that'd be, if we were going to use that high, wouldn't want to see that be targeted. Yeah, ideally, right, displacement would be ideal. Leave a premium. We're simply using higher time frame level because we can hold these discounts if we want to. We're just trying to capture a quick little retracement. Okay, we'll see if we get that. Went to the gym and came back. Yes, sir. Good. Facts, right? We've been here for a minute. This is the longest stream we ever did. Had nothing else to do. It's hot AF outside. The ladies at work. Yeah, nothing else to do. Just vibes. You don't think it might take NQ yesterday's high? NQ already took yesterday's high. That's why we're trying this. Oh, you're saying yesterday's high, maybe. That just seems kind of, right, excessive. We could get there, but I'm just trying to see if we don't want to create a little, as you said, potential SMT from today. So if we're going to want to just keep today's range, sweep today's high, maybe revert back into the range a little bit. Yeah, if we want to maintain bullishness, obviously, we'll just keep running. Oh, quick wick, wow. So we got a quick wick into that. Let's see if we can actually hold that. I like that type of delivery. I want to see if we can fall out of bed quick. Like if we're going to wick it like that, we'd want to see a sharp rejection lower. We wouldn't want to see price make another attempt to actually trade up into that. Because if that is the case, more than likely, it's just going to be consolidation, actually. Rather than kind of displacement. But we'll see from here. Like if we can run out equal lows, that might be already one that we could try to close. Could be right 6 handles inside of equilibrium right here. As we run out some equal lows. We got sell side right there. This is like my old school trading. I used to just sit in front of the chart all day. All day, every day. Oh, look at that. So we wouldn't want to see that type of bounce, but maybe we can fall through. Get a little partial. When you shorted, I longed NQ to AM highs. Nice. What's NQ up to? Did it get its highs? Could you expand on the last hour strategy? Yeah, so for me, I just like to look at what had been taking place for the entire morning session. And I'm trying to target pretty much the nearest 15-minute swing high and swing low. So like, as we head into power hour here, we don't really have much. Let me go like this real quick. So we're about to be heading into power hour. For me, right, not many swing points within this low to high. Let's go to like a 1 minute. So on a 1 minute there is. So for us, as we head into power hour, I'd first look for a retracement into equilibrium. So we go high to low. And if I think, okay, we're gonna wanna get into equilibrium, look at where equilibrium is aligned with. That's actually the high of our opening range gap perfectly. So for me, as we head into power hour, that's what I would be targeting. And then I would simply just be trying to use predetermined PD arrays that have been used early in the day to short it. So like we're already getting short at previous day high just because that's a pretty clean area and price that if we're gonna want to remain inside of, right, the daily range, after hitting previous day's high, we should get lower. First presented as well, if we can close below that, that's almost an opportunity to stack a position. Yeah, it's not necessarily like it's a specific trading model that I'm trading the last hour. I just like the last hour because you have all day's price action to give you a better understanding of where price may deliver to. The 5 to 10 macro. Yeah, always. Each one likes to get to where it needs to go. So 250 right now. We'll see if we can't do something the next 10 minutes as we head into power hour. Deadass, we're about to stream the whole day. That's lit. Let's do it. That'll be my first one ever. Oh yeah, I love that last hour, man. Like I said, if you go to my Twitter and kind of just look at the trades that have taken, like my pinned tweet is a power hour tweet. And that I caught the entire range, right? Just because you get pretty proficient with it. If you go to like my highlight section on my tweets too, a lot of the highlights that I share are also power hour. Are you on Twitter more than YouTube? I was, but not anymore. My Twitter following is a lot bigger. I have about 11,000 followers on Twitter compared to YouTube, where I have like 2,000 subs. So my following on Twitter is bigger just because I used it a lot more, but now I'm trying to kind of build my YouTube to get up to there as well. If I can get like 5,000, 10,000 subs, that'd be cool. We'll see though. It's going to take time. If it allows, could you show us a demonstration? Yeah, for sure. Like if we get something during power hour, we'll try to execute on that. So look how it's playing around right at that first presented. I think we should be able to get our partial off at least. And then, oh cool, okay. So there's our partial off at least. I like that. The trade that I'm in right now, sure. So for us, right, we're kind of expecting consolidation of the daily profile. We're not expecting price to run out its daily high and move aggressively, or really run out its daily low and move aggressively. So if we're expecting price to remain within its consolidation, we want to wait for swing highs near the extremes of that range to be targeted. This swing high is near the extreme of our daily range. We clear that high. We then trade back underneath the last discount that was created as we do that, right? So this bullish fair value gap is created as we attack the buy side. That becomes our area of interest. If we invert that, that in itself can already be a signal to get short. We do invert it. And not only is it an inversion, right? It's previous day high as well. So when I see overlapping PD arrays like that, a 1 minute paired with a higher time frame key level in the form of the daily high, I like that as an area to get short if we're looking for price to retrace back into this range. Because now we have the inversion, we have liquidity being swept, we have a higher time frame key area that should also support price lower. And then we have, right, untapped inefficiencies that were created on the way up. So for us, we're just trying to get in on that. We do end up partialing there. Right, so we end up partialing here. But now it seems like we're going to want to retrace. So after the partial, that's why I'm trying to partial out. Because if we actually don't want to like retreat or return into this range until later, price will just continue to consolidate around a previous day swing point in the form of this key level here. So it looks like we immediately, yeah, look at that rejection. We pick up those equal lows, we give an immediate rejection, and now we're just right back inside the range. From this high to this low now, right? Look at that. It's always moving from inefficiencies to liquidity to equilibrium. So now that we've cleared the range low here, price is simply reverting into the equilibrium from the high to the low it just formed. And that is kind of like a consolidation signature, right? So if we're in a trending environment, you would not expect to see that, but because price is choppy, we do kind of expect a lot of returns into equilibrium, which is why we'll have to leave the stop where it is. Because in reality, we still could get up even through this, although I wouldn't want that, but we can like run out this high and still reject. So it's hard to really put your stop at break even, because you can return to break even quite a bit and still be correct. Please market the live stream. You don't have a competitor. Hey, thanks, hello. Most live streamers are gamblers. I'd agree. They do so more for entertainment value. But we'll try to, hey, we're trying to do better at marketing, as we said. I always struggle with just putting myself out there because I'm a very private and introverted person in general, in real life. But I agree with you. I think this space could use a little bit more just honesty and like, right, transparency and legitimate teachings rather than a gamble fest that is for purely entertainment. Yeah, so all my live streams are always on YouTube. Like if you go to the YouTube and go to the live section, all the live streams will be there, right? All the previous ones. Let me just kind of show you real quick. So if you go to my YouTube here, you go to live, right? It'll have all the previous live streams that we've had. What up, Simon? Not every day, no. Usually it's just morning. Today is a very rare exception. This has been the longest stream I've ever done. But it seems like we're getting exposure, so maybe we have to do some more long streams as a way to get a little bit more attention. Meaning I have fun. Yeah, I have fun. So as we said, we can retest buy side or the original entry. If we close above that, I think then we'll kind of be stopped. But for the time being, we did get into that fair value gap. So maybe, we'll see. But we could hit that again and still bounce lower. If that's the case, we will just close one more like here at the low of this. If we close above daily high, so if we get back above this wick, I think we'll be stopped because now wick will become a gap. I wouldn't want to see higher than this inversion fair value gap here. It's also the 2-minute. Yeah, I want to see a 5-minute continue to wick. Like, we don't want candle bodies closing back above. So I'd want that to basically be it. Fall back down into the first presented here. I'm glad you enjoy it. Loot Fisk Savage. I like that name. Yeah, I'm glad you enjoy it. Glad you find it helpful. That's all we're trying to do. Help out others. Trading is hard, man. Life is hard, right? Shit. So if you can learn how to trade, that's a skill you'll have for life that could make your life a lot easier. It's like a sports color comment. Yes, sir. Honestly, that is what it is. That's funny. It's the play-by-play. You're getting the play-by-play. So I do like that a lot. I want to see this volume imbalance continue to hold us right now. So now that we, as we said, we can revisit that yesterday's high. I like how precise price is being at this area. Perfect close, perfect open, rejection underneath the volume imbalance. So I'd actually watch to see, can that volume imbalance low hold us? And why am I marking that out? Because it's a volume imbalance that gets created as we actually close above yesterday's high. And then if you look to the right, look what's here. Same exact volume imbalance in space. So this is obviously a key area in price. We're going to need to continue to reference that. If we're going to feel confident, we need to get below this because now we have equal lows cleared, short-term displacement above equal highs, leaving a discount fair value gap. These are the type of frameworks and setups that will support price and produce a bullish run. So if we can fall through this discount, create a premium, more importantly, actually fall through the first presented, should be money. But yeah, for the time being, right, my eye goes here because this is where price will kind of hold and bounce if it's going to. Only disadvantages, most prop firm traders trading NQ. That is true, yeah. So I think people like that. But it could also be its own advantage in a way, right? A little niche where if everyone else is doing NQ and not many people are doing ES, you can get the ES traders to follow you. So let's fall through this. That's a clean ass entry there. So we could probably even take, do we want to take another 5? Like as we trade into that, that could easily be another partial for us, but I think we can get, what was NQ at? Let me see. Dollar's not much help. Don't like that. Let's see if we can get below it. How long you been trading? 8 years. I'll say 7 full years. Yeah, 7 years is a better one. Dun, dun, dun. So as we said, right, if we're going to hold that fair value gap, we would expect bullish momentum here. We fall short of the actual first presented. That's going to be a sign of bullishness if we're unable to even get into the discount that we had basically displaced away from. Instead, we hold the OB. Why is this a pretty important one? As we said, no upwards wick. So no wick to the upside. That candle runs out lows. It returns into a predetermined discount. And it is broken with a bullish fair value gap. So that right there is going to be a pretty key area. right? Which is why, as we see, price taps it and gets that huge rejection. So now we've tapped it again. If we want to maintain bullishness, we're just going to keep consolidating here. Loving the simplicity. Good, good. Yeah, try to keep it simple, right? You don't want to, if you start looking at too much, that's when you start getting that analysis paralysis. You lost 700 in the eval today. Oof. I will say this, Kamau, don't push hard trying to make it all back, okay? Because then if you're forcing entries, it's just going to make it worse, brother. Especially on a Friday. That's the worst feeling. Is right, giving a lot of profits back or just losing, forcing a trade, losing again, and then the market closes, and now you have to wait all weekend right before you have another opportunity. Basically ruining your weekend. Any chance for late entries? Yeah, we may have some this power hour. As we said, like for me, because we're already in at a pretty legitimate spot, right? Like we're pretty much at the high of this range. I'm not going to try to add to anything. If we can break below first presented though, that'll be an area for me to try to stack a position and look for price to keep running lower. If we get stopped out here higher, I don't know if we'll actually be targeting another entry. We'll see, but right, as we kind of expected, we're just consolidating at the previous day high. So yesterday's high here, we've hit, we retrace, we revert right back into it, and now we're just consolidating there. So honestly, we may just consolidate to close out the day. We'll see, especially with it being Friday. As we said though, the weekly wick itself is, I mean, the weekly candlestick is pure bullish. So we do have a little bit of a wick here, but I want to see this candlestick actually return into last week's high. So to do that, we need to get here. Right here. I'd like to see price close inside of this area. Right, which is what should be able to get us. That's why I'm kind of leaning towards lower prices as well. Is that I want the weekly candlesticks to actually remain within the previous week's candlestick, which should send it into this inefficiency. The fact that we have this inefficiency too that's been untouched makes me think price is going to want to use that as a reference point to get into there. That's just why we're looking for lower prices. You lost 2 fundeds and made 2K on 2 fundeds. Hey, well, that's fair. Made some, lost some, huh? Yeah, we're really compressing here. Okay, so 305. We tend to see as price consolidates during power hour that the last half hour to the last 10 minutes are when the true move is going to come into place. If that's the case, we may just be stuck here for the next half hour. We've already been here 5 hours, so might as well just hang out until the market closes. But we don't expect much movement now at this case. If we get tagged out, we'll have to just wait, and maybe like 330 will give us something, or 350 will give us something. At least for you, you wish you looked at what? Did I miss your other one? Oh, you're saying you wish it looked at both ES and NQ? I mean, I think you should. Like, you guys can't see it, but I have multiple monitors here in front of me. So I always have a chart up of NQ, and I pretty much always have a chart of the dollar as well, even though the past few months it hasn't really been helpful. It's just nice to see that, but I'll always have NQ up. So while I don't trade NQ, I am always looking at it. So I know how it moves, right? I'm familiar with it. But I tend to use it more as just an SMT tool rather than trade it itself. So retesting once again, at this point, as we said, we don't want to really see this fair value gap give way. If we close above that, more than likely we're going to want to try to retest this high before the market closes. I want us to maintain this little consolidation and pretty much hold below yesterday's high. 3 o'clock has just started, so we are within power hour. We have just cleared a short-term high within power hour, so maybe we can get a rejection here. As we said, if we reject from here, if we can break below first presented, parceling us out, I have no issue trying to stack a position there and trying to just get a little bit lower price run. Yeah, I've been on for a minute, Simon. You like that music? Good, I'm glad. Get the sax. Yeah, I'm trying to get the YouTube monetized, so I guess we gotta grind for a bit. The longer we stay on, the quicker it'll be. Maybe the more people subscribe. Like the stream if you don't mind. I heard that helps boost. Only if you find value, of course. They've been waiting until after hours. Very true. A lot of like overnight moves, a lot of Asian runs, a lot of gap openings. And that's really textbook in consolidating markets. Right? Price consolidates all day, gets people frustrated. It doesn't deliver into the objectives. And then overnight or as soon as the market opens, it just gaps right into that without allowing anyone to be involved. That's just textbook consolidations. So like, let's say that we actually maintain, like, let's say that we stayed here heading into the close. If we closed on previous day's high, I would actually expect price to open up above this high. That we would just, right, because people right now, I feel like people are trying to really get long into this buy side here. Which is why I also would favor shorts to just fall against that. But right, if people are trying to get long in here and price is just consolidating, pissing them off, the market will close, they leave. The market opens, boom, snaps right above that buy side. I only trade on YouTube. Yep, I do. I had a private Discord for a minute, but as I said, I kind of stopped. And yeah, as I get back into it, it's better to start free in my opinion. And then eventually I might move to the private Discord again. I still have it, but as of now, it's more so just for access to me, like questions that you may have or how I journal and things like that. Right, as far as the streams, there will be on YouTube for the foreseeable future until at least I'm like monetized, but yeah, we'll be free for a bit. So as we said, we want that, clear the short-term high. At this point, we're very ugly, so I'm just gonna close at 5 handles. As we tap this, that's a 5 handle move. That's all we need. And we'll leave that last contract on to run for here. Because that way then we can kind of work with adding positions as we mentioned. But yeah, after clearing that high, we're still I mean, look at the perfect precision there. Hard to argue, right? Perfect delivery into the low. We'll see if we reject from here again. Then it will allow you that community with, yeah, I agree, right? Like if you, I have the same idea. Live stream on YouTube for a bit until we get a decent following, right? Because then it also shows that I do know what I'm doing. So it'll be easier for people to trust me if they do want to pay for the premium. Whereas like if I just was behind a paywall automatically, that's a lot more blind trust. Whereas yeah, like if you do believe in what you're trying to sell and you're confident in it, you should be able to do it in real time. So that's what I do. Build a backlog of that, of explaining, executing in real time. And then once you get enough credibility and followers, you can move behind a paywall. Because also once you start getting like a lot of followers, then it gets a little bit muddy as far as just the nonsense that could be said in chats and things like that. So I would watch, like, if I'm being honest, as we say, when we're in consolidations like this, I don't pay much attention to the PD arrays that are being formed within the actual candlesticks themselves. We'll still watch them. So like, yeah, we do have a bearish fair value gap here, but I would never be trying to enter on that. I would enter on the actual predetermined area and price that has already been holding us here. This is where I would simply follow price to see if we can hold the discount and continue to run lower. To where like if we did respect that and then we displace through the low, that to me is more indicative of bearish delivery that we can then try to use to get, I like the idea of maybe getting into here. Right, as we said, equilibrium of our current range from low to high. If we were to take that, look at this, right? We go boom, we go low, we go high. Oh my goodness. Midpoint is opening range gap, high, not random. So I like that. But at this point, we did respect that. We create the high. We could clear this, but we're just gonna go breaky. One contract left. No, I lied. We're gonna go here. Above this down close candle. Because as we said, this wick where we enter, I don't want that wick broken. We try it once, we try it twice. We respect previous day high exactly as we would want to see. We respect the volume balance. And now we're respecting this discount, which is also the old, or this premium, which is also the old discount. So bullish discount turned inversion paired with the bearish premium. That should hold us. And that should give us the opportunity to run out these lows. But if we don't get below that, we'll just come back up once again. Yeah, okay. Real ugly. But hey, we know what we're doing. So actually, we may get if we stay consolidating, we may actually get a pretty clean 350 setup. So we can walk, ooh, that's not good. But as we said, okay, this is where you also don't want to get too thrown off sides. Is that, yeah, we can reference these, but we're not putting crazy weight and emphasis into them. So I'm not thinking, okay, well, we're about to rip against this now just because we've closed above. Because we've already shown multiple times that price can really go up and down through it with ease. So once again, the key reference points for me, previous day high, most recent buy side pool, first presented. Sure. The first presented fair value gap is simply, right, the first fair value gap that gets formed following the 9:30 opening. So you see at 9:30, we create up movement, consolidation. Now, right, we do have a very small one here, but we understand for it to be valid, it has to be larger than 4 ticks, right? And what was this? This was under that. So we're not seeing this as the first presented. Instead, we're using this one here. And simply, right, the understanding with that is that this is going to be a key algorithmic level in price that's going to have priority over, right, we'll say the current market structure. So that's kind of why I always have these on my chart. All of these purple areas in price are old first presented fair value gaps. And you can see, right, the precision that price is offering here. Holding, entry, trading below, respecting, bouncing, holding. Those are just key areas in price. And we use them as kind of just extra confluences, right? So we can use them as targets. We use them as areas of entry, or we just use them for, right, continued order flow to study how price reacts around them. I mean, that's why you see, right? Look at the way price is utilizing it there. It's the first one after 9:30. So the 9:31 candlestick can be the first presented, right? So it's not after 9:31. 9:31, if it presents the fair value gap, that will be the first presented. Now it does get a little technical because there are times when 9:30 itself may present the actual first fair value gap. But I kind of don't want to get too much into that because it gets a little confusing. Maybe we do, I guess, if you want. But I say primarily, right, it's always going to be following 9:30. So you want to wait until at least 9:31. There's very, very specific kind of rule sets if you're going to use the 9:30 itself. So maybe, yeah, we could get a run at 3:30. So what you'll find during power hour is, right, this is why I like power hour. It's very often methodical, which means it's going to move rather slowly, but it's going to respect PD arrays if we're not consolidating. So like right now we're consolidating, which is why we're just going to rely on the higher time frame. But in trending environments, it pretty much will always respect whatever PD array is being created as we move into its objective. Another thing we can note is that if we tend to consolidate the first half hour, 3:30 to 4 will maybe give us a run. If we consolidate the entire hour, like 3 to 3:50, almost always 3:50 will create some type of movement on liquidity or an inefficiency. So we'll kind of wait until then just to see if that plays out today, and we can give an example of that. But so far, I mean, right, it's moving as we would expect. It's very ugly, but because we expect that, as we continue to say, it's not necessarily too frustrating. More boring than anything. We'll see if we can finally get, ooh, excuse me, see, goodness. We'll see if we can finally get into the low. How do you deal with the extreme runs that it has? So if you're talking about like 3:30 or 3:50, I'm usually going to use, let me see how I want to answer that question. If we're in a trending environment and there's going to be a rather pronounced move during power hour, you'll often find that it won't offer deep retracements. So if I can anticipate that we're going to be running, I'm just using whatever PD array gets formed most recently, right? So let's say like price was to break through this low and it displaces aggressively, and I think we're going to start trending and a fair value gap gets formed here. I'm just using the most recent PD array, expecting that to hold us and continue to deliver us, because price will be in a hurry to reach its objective. At 350, the way I use that is, if we're consolidating, 350 will tend to attack some form of liquidity. And usually whatever the first liquidity is that gets interacted with, that's going to be the false run on stops. Right, so let's say that we kept consolidating here, and then as we head into 350, we run higher first. I would expect for us to actually reverse. So usually I'll either turtle soup that original movement at 350, or I'll wait for it to respect that, break lower, and then enter on some type of premium that gets formed, looking for lower prices. Can you say what you said about power hour again? The whole thing, Hefe? Or what? What part? It was a kind of a long-winded explanation. I guess in short, power hour will tend to move rather methodically. So it's going to give a lot of returns into PD arrays, but the PD array should be respected. You'll also find that if we were consolidating heading into power hour, 330 usually tends to create some type of run. If we don't get a run at 330 and 3 to 350 is completely consolidation, 350 will tend to clear out that liquidity and then make a run. So a few different scenarios that you'll kind of get familiar with over time. Me personally, like if I had to guess right now, based off just what we've been doing all day and the current delivery in here, my expectation would be 330 should start producing a run lower or higher if we're offsides, of course. Obviously, I'm bearish, so I would expect to run lower. Especially because if we can close below the first presented, if we don't close below the first presented and we revert into this high, I would expect range bound delivery until 350, where then we should clear some form of liquidity and then run opposing to that. I've been streaming for 5 hours. Do not get your head burned out, because I do after 3 to 4 hours. This is the longest stream I've ever done, so this is kind of an anomaly. But to be honest, I'm chilling. As I said, I've spent so many hours in front of these charts that it's almost boring now, right? So I don't get emotionally invested unless I like try to hype it up for y'all and like play into the entertainment. Like if I'm just sitting here not streaming, like I'm not ever feeling happy or sad, really. It's just boring, right? And that's really how it ends up being once you get proficient. So I'm not really too worried or like too stressed, I guess that's to say, burnt out. And it also helps because I can almost pretty much always understand what the market profile is going to be. So like when we're expecting consolidations like we are now, I'm just saving a lot more mental capital because each little fluctuation isn't causing me to expect a price run, if that makes sense. Whereas like people who may not understand that we're going to be consolidating, or like if they've been looking for this high, right? Say someone was long and they're trying to get this high. This entire time that we're moving back and forth, how do you think they feel? Right? They're probably antsy. They're probably waiting, like, please get up here. Come on, come on. They see this run. They're like, oh, let's go, let's go. And then it retraces. And that's just kind of what causes that, right, mental drainage, as we'd say. Right, what else? We're missing some. On NQ, you have an entry at 849 and looking for an exit below equal lows. Where would you trail a stop on the descent? Okay, so like NQ, honestly for me, already my stop, had we gone short here, my stop would be above this swing point here. Because I'm looking at this bullish fair value gap. High, low, higher, high, breaker. Yeah, it'd be here. This high creates a bearish fair value gap that gets respected and then the price breaks. You were short. Where were you short at? Let me see. I forgot what you said. 849. Oh, so that's clean. So I'd be break even, to be honest, in profit. All right, what else? What else? You just joined my premium. Oh shit! Welcome, brother. Appreciate that. So if the market has dropped now before 1530, we expected Judas higher. Let's see. Hold up. What's NQ? If we're being honest, I would expect continued bearishness. I don't want to see price actually make an attempt to get all the way back down here into these first presenteds. So I would want to see 330 produce a continued bearish move lower and not higher. So you use previous day's first presented. Oh yeah, no, first presented will be good all week. So I have mine set for all week. And a matter of fact, right, they'll be good all month. So like this one here, this is the month first presented. So as price trades into that, you'll see that that's still going to be respected. Right, these are levels that kind of help you see through the nonsense. These are levels that are going to be continuously, they're called dynamic support and resistance, right? Is that they're always going to be used as long as price is referencing or trading near those levels. Boring is not a bad thing. Very true, right? You should be bored. Trading boring is, or trading boring. Boring trading is usually good trading. So like that right there, right? Once again, just painting outside the lines. We return into that bullish fair value gap. That's what we said would probably hold us. Now we've gone back up. So yeah, we're still consolidating. We'll see if 330 market on close gives us something. If we stay consolidating, 350 is what I would expect. As we said, we're already partialed. We have a perfect entry pretty much at the high of yesterday. So couldn't get much better than that. So we'll just leave it. Just over $1,000 today. Nothing too crazy. You'll see over time they give you such precise level. Yeah, true. Right, these are like things that even I've learned just recently. And that's why I like these concepts, is that you're always learning. And the way I say it right is that everything I've learned, ICT has taught me. So everything I know, I've learned from ICT. But I don't know everything ICT knows, if that makes sense. Right, so he hasn't even released everything. Like the first presented theory, it's something that I picked up on just over time. I've noticed how, like, okay, the first fair value gap tends to be respected. But it wasn't something that I knew was legitimate until he came out recently explaining it. And that's kind of how it always is, right? He'll slowly unveil pieces of the puzzle to where traders who have spent a lot of time with him can immediately incorporate those into their current plan because they understand price. And that's kind of the point I am. Well, I'm not trying to learn every new thing, but anything that he seems to kind of drop now, I can immediately just pick up and utilize because I'm already proficient with most of the concepts. So now just continuing to reference the first presented here. Look at the delivery. Perfect. All right, bodies tell the story, wicks do the damage. Inversion here, so we'll see if that holds. Like I said, I want lower prices. It's about to be 330, so maybe we can get a 330, run lower. If not, as we say, we wait till 350 and then we look for something then. So 330 now. We've closed underneath the first presented. Let's see if we start running. If we were to come up and through this and then back down and into it again, I'm expecting consolidation until 350. Oh my, stop. Let me delete this. Thank you. So at this point, I kind of am watching this here, this little fair value gap that was created. It's aligned with the midpoint of the first presented. So I'm more so kind of relying on the midpoint, right? Using the fair value gap as more as just the visual aid. But really looking at, yeah, midpoint over there. I guess we'll just do that since that's what I'm really looking at. Go like this. Normal RR for me would be, I try to go 1 to 3. Usually 1 to 2.5 at least. choppy markets, I'll go even 1 to 1.5 if it's like little easy base hits, right? But on average, I would say at least a 3. But hey, you could be wildly successful 1 to 1. What did you do when live trading? What helped you with your strategy? What did you do in live trading? What helped you? Loaded question. I guess a few things. One was committing to the trade idea. Right, plan the trade and trade your plan. So early on, especially as I started getting better at being an analyst, right, I would understand where price may go. But then when I would enter, I would almost psych myself out of entries, right? So I would like get entered, I'd have a set stop loss, but then as the candlesticks moved, I would second guess myself and I would move my stop loss or I would manually close and then price would run to where I'd expect. So just letting the trade pan out, right? That was a big one. What else? I would say this is kind of a cop out, but just showing up every day, right? As we say, you have to just watch the candlesticks print. You can't expect to learn through only back testing. So you can't, right, continually try to like back test the model and then just expect to know it. You have to see the candlesticks print out in front of you every day. So time, just time in the market is going to help. Having higher time frame reference points, that's going to be key. As I started getting proficient with the lower time frames, right, as I started first kind of messing with them, I would get into a lot of false moves because I was relying only on 1 minute candlestick structure, when that's more retail trading, right? That's kind of just reacting because patterns are forming in the chart, and that's not what you want to do. So what you want to do is you want to wait for those patterns or those PD arrays to form inside of higher time frame key areas in price, right? So like, here's a perfect example, right? We're trading this not only because it's a fair value gap and it's a breaker, but because that fair value gap is anchored to a higher time frame reference point in the form of the opening range gap. The exit, right? It's anchored to the first presented. The shorts here, right? Yeah, it's a bearish fair value gap, but where is this bearish fair value gap? Well, it's anchored inside of a first presented. That's going to be key. Right, so kind of picking and choosing where the important PD arrays are going to form is very important. Right, same idea here. Yeah, sure, this is an inversion. It's a simple inversion play, but more importantly, why am I going short here? Because the inversion is being created perfectly on the previous day high, a very higher time frame key area in price. So when the 1 minute aligns with the higher time frame, those are going to be the very important, right, setups. And that's why you see once we get in on this, I mean, we haven't even attempted to get up there. That's pretty much a zero drawdown entry. Is there any way you predict, sorry, I gotta catch up on these, let's see. 1 to 3 is quite big, doesn't mean your win rate is rather low. Yeah, it's about 50. I mean, if we're being honest, I would say it's not always 1 to 3 because I'm taking partials. So like the original framework will be a 1 to 3. If we could even use this here. Like original framework for this, right, all the way down here, 1 to 4 about. But I'm partialing along the way. So like it ends up really being more like a 1 to 2, or like if we do get here, this will probably be a 1 to 3. But that's kind of why the win rate is a little higher, is because the partials are adding to that. So I very rarely ever take full pools, which means like entering here and exiting the full position at the TP. I hardly ever do that. I'm always taking partials at predetermined areas in price. Is there any way to predict when 350 will have a big expansion? Yeah, so as we said, if we're consolidating all of power hour, I usually expect 350 to make a move. So like right now, because It's 336, so we still have some time, but as we said, if we were going to go up and down inside of this first presented, I expect that to continue until 350. So like right now, my expectation is we are probably going to consolidate until 350, which at that then point, we may get some type of movement. What do you mean by the first presented? The first presenteds are the very first fair value gaps that get formed after the 930 opening. So 930 opening, first fair value gap. $930 opening, first fair value gap. 930 opening, first fair value gap. So it's a very specific fair value gap. It's the first fair value gap that is getting formed following the 930 open. Do I use the first? Yeah, sometimes I do. If it aligns, right? Like the first presented fair value gap from this afternoon for us here. And that's what we use to get long. So at 130, after coming off of a discount, holding the breaker, we displace with the volume imbalance. That's what holds us perfectly. And boom, now we accelerate. And that's also why I would want a retracement. So we're really, man, it's a great stream. Because 130 was one-sided, that is why I'm also looking for price to revert into that. Because that is now our afternoon, think of it as like our afternoon midnight, our afternoon power of 3. So we often would expect off the opening for price to venture below and venture above, and then maybe revert or do whatever it wants. Because we've only been one-sided following the 130 open, right, look at that. Matter of fact, it didn't make any wick at all to the downside. So as soon as we opened at 130, it's been all bullish. We haven't retested that once. So to me, I think we are trying to at least reach back down. We may not get all the way there, but right, it's just a magnet that's going to draw price to it. Add to the fact that once again, equilibrium, low to high, is perfectly aligned with the opening range gap. That's just why I like that as an exit there. Every macro is different, depends on where we are in price. Yep, definitely. Might got to be fluid. I use the first presented from each day. And I have it all spread out, or I have them all on the chart. Right, and then obviously I have like the indicators set so I can just hide them. And that's usually what you guys are seeing. Like once we're in the entries, I'll hide them just because it's cleaner. But that's like our secret power. That really is what they are. The hidden gems in price that even ICT has said, right? He's very recently only started teaching these things. Because like before, right, I would be looking at this. I would be looking at this and I'd be thinking, I wouldn't know why price is hesitating here. I'd think, oh, well, it's probably just the 1 minute that's holding us up. And I guess we do have this inversion, so that makes sense. But the key area that this is actually the area of consolidation is because it's our first presented fair value gap. Price is going to continue to reference this. Matter of fact, let's watch this now, okay? So as we leave the first presented, this is the first candlestick that closes below its consequent encroachment. And we've actually left a bearish fair value gap. So these are kind of the PD areas I want to see hold. Like if we're showing a lot of signs of consolidation and then we get some type of break of that consolidation, even if it's just mini, I want to see what happens on that next candle. This will be rather interesting though, because we did open with the bearish volume imbalance that is completely negated. So one candle's opportunity, we may negate this candle here, which will then kind of invalidate this whole setup anyways. But if this can actually hold, remain bearish, as you said, we would expect lower prices. Thoughts on NQ not having a daily bottom wick. Is that true? Was it up? Ooh, that's extremely bullish. Yeah. I don't have too much thoughts on that, to be honest. I guess that's expected, right? As we said, in consolidating markets, we'll tend to open below liquidity. So that's kind of like, it looks like that's what happened. Yeah, right. We create that liquidity, we immediately open below it. And then from there, since we've already swept the liquidity, we don't have any need to get back underneath. So I don't really put too much emphasis into that. Like it may be a target later on, but for me right now, I'm not really thinking about it too much. At this point, yeah. So as we said, 350 will probably give us what we would want to see is 350 to run these highs. In my opinion, unless I guess if we're like here and then 350 can tap this, that'd be good. I'm actually going to target this swing low. But if at 350 we ended up wicking lower first, more than likely we're actually going to reverse to attack the highs. So we'll see what we get. What threw you off? Hourly looked like institutional order flow at noon. Let's take a look and see what you're referencing. What? What do you mean? Noon. Oh. Here? That 1 hour fair value gap? Is that what you mean? Or what you mean, Hefe? Okay, I see what you mean. Yeah. Okay, so this wouldn't be institutional order flow, I guess, really. Because when we created this wick, the hourly had already traded through it pretty aggressively. Like if we were going to trust that that hourly was going to act as an institutional order flow, when we tapped it first, we should not really trade into it at all. Like we should barely go into it by a handle or two. That's the true like institutional order flow entry drill. Is that we would have seen this candlestick barely tap that and run. So like, let me bring that up on the 1 minute real quick. Where's that hourly at? I mean, I guess we still did use it, right? Just barely. But the fact that we fell through it immediately, that to me tells me that I'm not going to necessarily trust this as a legitimate area of support. Because when we trade into it, price shows no willingness to even respect it. Falls right through it. And that's why I'm not trusting, right, a huge run higher. Falling through it without any hesitation for it the very first time to me indicates that price's ultimate goal was to run out that low again, which is why we exit at the high there and then take the shorts back down into the low. Yeah, what Ray said, right? Institutional order flow is when price barely wicks into it before reverting away. Think like, even that's not because we hit that fully. I'm just trying to find one. Today we haven't really had, because you're only going to find those in like very trending environments. So obviously if we're not trending, it's not going to happen. So we're coming off the low of this 1 minute now. That's fine. First presented still here. Okay, so yeah, I mean, if we could start going higher, we got 5 minutes. So if at 350, I'm gonna leave that. Oh, excuse me. Oh, geez. Probably gonna leave the stop loss here. Yeah, like that. Leave the stop loss up here. Because we'll probably try to, like, I think at 350, especially if we're going to stay inside here, it's probably going to try to hit yesterday's high again. And at that point, it's either going to blast right through this fair value gap that it's been holding at and attack the high, and that'll be the objective, right? The consolidation, the short-term low being cleared, holding the discount, and then buy-side high is the objective for today. However, I just think that we should go lower, because if we do run this high, that's going to be right. The weekly candlestick will be closing on its high, which sure that happens, but I mean, let's just look at the past weeks, right? How many times has the weekly candlestick closed on its high? You'd have to go back. What? You see what I mean? Like never, almost. It never has done that. And I want to see this week, as we said, I want to see previous week's high hold. So yeah, that's what my objective is there. Is to close below. I would expect closure below, right here. This level in price. That's first presented. Don't really need any of this. Sell side. Yeah, I'm not a crypto guy, I'm sorry. Nothing against crypto, I've never really invested much time into it, so couldn't give you confident analysis or information. I mean, I'm sure it still moves like normal. Do I even have Bitcoin on here? What's like the handle for that? There's futures on Bitcoin? See, that's crazy. Yeah, I could not tell you, brother. I mean, I'd probably lower prices. Who knows? Inside daily fair value gap, actually. So maybe we get highs. Look at these equal highs. That might be what we're trying to do. Go up for the highs. So yeah, just as we said, right, we're going to continue to consolidate until 350. And now this will be a pretty good indication of that 350 macro that we speak of. This will be the one day it doesn't work. Right, what we would expect is now, if we're going to continue this choppiness, I would want to see price run higher. What higher time frames do we have? So we have the high of that. That's last week's low. So either run higher or just at 350, just take us out, right? Deliver into the sell side. Because if we did that, I think we would actually hit that sell side, hit this opening range, and then reverse back into the first presented. So two possible opportunities. Let's see what we get. As we often say, 350's first movement will be the false movement. So that is why I think if we were to immediately clear us out, we'll probably just bounce and then revert into that. Let us see, let us see. So maybe I go two. Should we try that actually? I might put 2 contracts here. Just to play there, that'd be fun. And we shouldn't break this low to come back into that. All right. Up first is fine. Up first is preferred. Because then actually holding that right, I would expect to see the false move higher, followed by the actual break lower. Mm-hmm, 350. I like the 350. So we said first movement was up. Yeah, we're going to try to exit and actually add here. We're going to try to be a little nimble. Expecting a bounce to get back into actually close like right on the previous days. That'd actually be filthy. How many? That'd be 5 handles exactly. Let's try that. So now at this point, if we get back above, Yeah, especially because we wicked that first. I'm fine break even. No need to take a stop out now at this point, okay? As we head into the close. Expecting weekly candle to wick underneath last week's, maybe clear the liquidity and close on last week's open. Or last week's high. Yep, dead macro, huh? We had the original stab up. Usually though, we would be met with an aggressive move lower. So if we're gonna keep pushing up, we may come back up here. And yeah, just continue the consolidation. Okay. So for us, I don't even want to actually enter that. Let's just get out at the low. If we can get that low, we'll be content. Weekly high there. Still content with that. We could easily reject from here. Break. As we said, break even all the way up here. If we get to 4 o'clock and we're just inside the first presented, we'll just manually close at that point. Respect the 930 and 130. It sure did, huh? Held that opening nice. NQ's also hitting this opening range gap too, so. Closure above, so actually watch, we'll probably expand from here, let's see. Unless this next candle can negate that and get back underneath, we may actually come up for this high to close out the day. Short-term lows cleared, failure swing to clear the low, respecting last week's high. Let's see how the weekly candlestick closes. I think weekly candlestick closes under last week's, that's what I want to see. So actually we'll go like this. And that'll give us, what did that last one be if we can get it? 9. Let's go 10. 10 handles. A lifetime? I do not have a lifetime for the Discord actually. And that's more so just because I don't know if I'm gonna be doing it forever. So I don't want to like make y'all pay and then it dies at some point in time. I have it yearly because I know for sure I'll be doing it for the next few years, right? As far as public teachings and things like that. But no lifetime. Once you progress in learning, you'll be able to trade and make models off of that alone. Facts. Because ICT has what, 81 entry mechanics? Okay, so it looks like we're going to want to get the high or close on previous day's high as well. We'd have to reject from this high. No discounts at the moment. As I said, the private Discord is really like, you don't even need to be in it. It's for those that want to have more access to me, have access to kind of old videos I've posted of how I use the concepts, or like my journal template and old journal entries. It has older live streams from before. So it's just a more, I guess, deep database of things from me. But as I said, right, the live streams will be on YouTube. So for the time being anyways, you could just come sit in. You need my mentorship, Destiny? That's funny. Hey, we'll come every day, brother. Watch me live on YouTube. Or as I said, right, join the Discord for a little bit more access to things. Appreciate that, Savage. No hate on 180 or no discrediting their teachings, but I think I'd agree. I've just been doing it longer. That's really all. I've just had more time than them to get familiar with the concepts. I've just spent more time in front of the chart, so just makes sense that I would be a little bit more depth and or have a deeper understanding anyways. So as we said, right, we're gonna go with that weekly high. It's about to be 356. Yeah, we should get that level pretty good. Oh, it's playing. Closure below that first presented, we should be alright, but we'll see what we get. The actual market closes at 4:15, so we may even have to wait till then. Or no, 5 actually. Wait, 5, huh? The biggest thing, as we say, you can't cheat the market experience, so. Dun, 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 dun. And I've always kind of had like a mathematic analytical mind, so maybe it is just easier. Like my friends and family have always said, I pick up on things quickly, so maybe that helps me in the learning and being able to articulate what is taking place. Because that is one thing, like, right, the entries may never be perfect. We're for sure not winning 100%. But very rarely is there a price movement that I don't know why it's taking place. And as we said, that doesn't mean you're involved in every movement, but we've gotten to the point to where I could pretty much understand any price movement, what it's referencing, where it's reaching, right, why it's doing what it's doing. And that's also why, like, some say like it's calming, like I'm a calm trader. It's just because I'm at peace with pretty much everything that happens. Like I'm never surprised, thrown for a loop. Consolidating right inside that sucker. We do have a swing low here, so I'm still convinced. As we said, we're break even, so you either get break even or you get exit. That's always a fun place to be, right? Risk free. And I mean, that entry was pristine. That's pretty much high of power hour. That was the power hour high, actually. Entry 617.25. High of power hour 617.25. Random. And oh, perfect. Nice. Oh, give me the swing low. Hold up. We got to get that swing low exit. That'll be the way to end the week right there. Let's see. Let's see. That's fine. Keep going. Let's get the sell side, huh? Let's get equilibrium. I know you want equilibrium. Opening range. If not, leave that low. Yup, go bullish. That's pretty. No, hold bullish. Okay. Previous week high. Use it as rejection after breaking below it. Use it as resistance to get us into midpoint. If not, we catch the swing low and the swing high. So that'd be best case for us. But it seems like we're going to want to use that to now send us lower. Use the key weekly higher time frame to send us, right? As we say, equilibrium is just too clean. That's to be expected. Equilibrium paired with sell side, paired with opening range gap, paired with the 1 hour high. Oh my, hello. That's a magnet. 8 seconds though. We might get the swing low still. Don't you do it now. Oh, count it. We're gonna break it, but that counts. Swing low. Nice. So let's wait till 4:15. I want to see how we close. Or actually, we'd have to wait till 5. Okay, we're not gonna do that. We've already been here for fucking 8 hours. Quite literally a 9 to 5 job this morning. Where is the... What time does the market close actually? Yeah, it does close at 5. Okay, so we'd have to wait. Yeah, we ain't doing that. Oh wait, no, 4:15. Okay, okay. So regular trading hours is 4:15. We'll do that. Because we won't actually have extended trading hours because it's the weekend. So yeah, 4:15 should be the close. And as we said, I think we close right on that weekly high. I just want to see how close we get to that. My expectation, we clear out the equilibrium first, we bounce off the hourly, and then we come back up to actually close right near previous week. Dubs, baby, dubs. Hell yeah, fellas. Good day. Let's see, let's get the questions. We've been missing some. My opinion on trading owned capital instead of prop firms. So I think that prop firms are a step to get you into your own personal account. I think the long-term goal should always be to have your own account and be trading your own money, because it's just going to be more freeing, right? It's going to be easier. You aren't going to have the rules that these prop firms place on you. At the same time, I think prop firms are probably one of the biggest advantages that new traders have. Like when I started, the only prop firms out there were, we had FTMO, we had MyForex Funds, which is now goodbye, and we had the 5%ers, which is still around, so some OGs. Right, you definitely didn't have the opportunity to get into trading like you do now. Like the barrier for entry for actually being profitable in trading is so much easier now than it used to be. Because before, right, you would have to first learn how to trade, and then you would have to somehow get your own capital that you're okay with risking, and then you would have to build a small account over time to be able to actually put decent risk in the market. Whereas nowadays, right, if you know how to trade and you learn the actual skill set of trading, these prop firms can fund you immediately, and then you just have more leverage. But I think you got to use both. Use the prop firms as a way to gain capital to then transfer it into your own personal account and trade that. Whatever you guys can see in prices, your charts. True. Whatever thing pops up easiest to you, right, that's what you should focus on first. What up, MT? Still with me? I like it. I like it. I'm gonna have to take some time off, huh? Been grinding. You trade your own money? Yes. Only options though. So I don't day trade my own funds. For day trading, it's purely the props. Extended hours will still close it. Oh, will it today? Okay, okay. Yeah, 4:15 is true close. I didn't think extended hours took place on Fridays, but I haven't been here for that long on a Friday, so I wouldn't know actually. This is, or I guess we could just go back. How about that? Let's look at last Friday. Last Friday, what time did we actually close there? 6? Oh yeah. Okay. Well, I don't want to wait that long. We'll go 4:15. Next stream will be on probably Monday. Let me just see what we got for high impact news next week. So we have nothing on Monday, nothing on Tuesday. Ooh, it's a CPI week. So usually I don't trade until CPI, but as I said, I'm trying to grow the YouTube, so we're just gonna be, we'll live stream every day. Fuck it. Fuck it. I'm confident enough that, right, we'll be able to find or at least point out setups regardless of what's taking place. So we'll come back on Monday at 9:25 Eastern. That'll be the next time we're live. Did you struggle with any mental game issues at the start? Oh yeah. I mean, that's all you're going to struggle with personally, right? Lack of discipline, breaking rules. My biggest two were I never really went on tilt. So I've kind of been lucky that I never really had that issue too much. But for me, my biggest issues were for sure lack of discipline and breaking my own trading rules, which of course leads back to the lack of discipline. And I've explained it before, like the biggest issue I had was not letting my trades pan out. So once I was in the trade, I'd be so quick to try to either move my stop or go break even. And then I'd get stopped at break even, and then price would run in my direction and deliver to my original target. And that happened so many times, right? And that would piss me off. And eventually the pain of that happening, I guess, would outweigh the pain of me messing with the entry. So eventually I got better at letting it play out. And that doesn't mean that, I think a lot of people think that like, oh, one day you just stop having those feelings and you get better. And that's not how it is at all. Like for me, right, I would have the feeling of being anxious, and that would cause me to get out of my trades early. Over time, I started to realize that this was only making things worse. So when I would get that anxious feeling, right, I still had to deal with it and I still had to sit in it, but I got better at actually not letting that dictate how I execute. So I would be sitting in here in front of the chart, and yeah, my heart rate would be racing, right? I'd be kind of anxious and I'd be looking, but I would sit on my hands. Quite literally, I would just sit on my hands, as ICT would teach. And I would just look at the chart. And if I got stopped out, I would explain how that made me feel. I would journal that. But I often found that more often than not, the trade would actually go to where I was expecting. And had I actually tried to manually get out early, I would have missed being able to take profits. Right, so you just have to get comfortable with being uncomfortable, to be honest. And then over time, as you continue to sit in that uncomfortable place, right, it becomes more familiar. And then you really just stop feeling those feelings. Which is why I say now, like, I'm very ever high or low when I'm looking at the charts. It's always a neutral, right? Calm baseline. Yep, this is right saying, right? Comes down to you guys. At the end of the day, trading is so hard because it really reflects on you and only you. And you start to see that, or at least this is my own personal history, the better I got at being able to analyze where the market will go, it didn't necessarily make things easier. If anything, it made me realize that I'm the actual issue, right? Because so many times I would be like, okay, my analysis is spot on, but my executions are wonky, or I'm not able to capitalize on the analysis. And that's where like the own personal issues come into play. I mean, anyone that's ever had success will say, right, trading holds a mirror in front of your face. And unless you can master your own self and your own mind, you're never going to really have success in the markets. I'll be trading on live, or yeah, I'll be on YouTube pretty much every day for the next month. I am moving in a month, so it'll be like a week or so that I may not be streaming as often, but until then, we'll be live pretty much every day. Do you use dealing ranges? I mean, yes, but not, I mean, like, yeah, but I use dealing ranges in the sense of, I guess, equilibrium. So like our current dealing range right now is this low to this high. How do we go about finding that? Well, you find a swing low that cleared previous liquidity. So this low clears a low here and a low here. And then this run clears a buy side high as well. Right, so that's our current dealing range. And now how I utilize that is I look for, right, first equilibrium to see if there's any PD arrays that align with that. Notice how equilibrium of this current dealing range is the hourly and the opening range gap. So then I use that as a target. I also use it, the anatomy of it, right? So not only is the midpoint important, but also the quarter levels. So I was looking at this all day, but I wasn't really explaining because, I mean, there was no need because we're using the first presented. But the reason that I'm so keyed on this first presented, besides it being, right, a first presented fair value gap, is that it's also the upper quarter level of our current dealing range. So that is why I'm telling you guys I'm expecting consolidation to continue here, because we're at a key area within the actual dealing range low to high, to where if we're going to struggle and it's going to be high resistance to return into equilibrium, consolidation takes place at the quarter levels of those ranges. But yeah, I mean, dealing ranges are key, knowing how to utilize those. Da, 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 da. Oh, we're about to close. If we close on that, I mean, that'll be too perfect, bruh. Right as we would expect. Right on that weekly. That's the beauty of it. Not gonna lie, you're a superhero. I love that, MT. Thanks, man. You're hyping me up. I'm not, though. I'm just a guy that spent too much time looking at a chart on his computer. That's really it. Just a dude with no life who spent a few years staring at candlesticks go up and down. $4.15, we're out of here, fellas. Oh wait, no. I've never had 1,000 views total. I might have to wait. We're at 954. Fuck it, we'll just go till I get 1,000. I guess we could do a little recap real quick so I can post that. We'll just do this little PM session. So we had the understanding that we just wanted to see equilibrium. So this first entry, we're trying to turtle soup this buy side. But as you guys saw, we ended up going long. So as we come off of the first presented, we get back above opening range. We take a long, we partial out inside of an opposing premium. We partial out at a swing point, and then we exit fully at first presented, catching the swing high. We then expect price to start trading lower, so we're simply following. We see displacement through another first presented, textbook short for us into this low. So we get short here, partial at the first presented, close fully at the low. We then expected price to bounce, so we get long, partial here, and then we actually got stopped break even. So this was just right, we moved to break even a little bit too quickly because I wanted to see the actual first presented hold us. Instead, we actually revisit the low of it, get stopped. So idea was still on point, just too early. As we said, we tried to turtle soup, immediately get stopped. We're waiting for buy side to get traded into. What happens here? And as we said, we create a discount perfectly aligned with the previous day's high. So after clearing out buy side liquidity, if we're expecting price to move lower, we want to see discounts get invalidated. We do that here. We then leave behind the inversion paired with previous day high. And for us, that's a pretty clean entry, right? Clear cut entry. So we get short there. First partial inside first presented. Second partial, first presented again as we continue to consolidate. And as we said, final exit just comes on that weekly level. And now at 4:15, if this candlestick closes right on that, boy, that should be beautiful. Give me the 4:15 close right on the weekly high. Oh yeah. Oh, it wanted to. Good try. Could you review how you use fair value gap in relationship to displacement? Yeah, I mean, a lot of the times displacement is what is creating the fair value gap. So I guess we could use it interchangeably, right? Like when I'm saying I'm waiting to see displacement away from an area, I'm often meaning I want to see a fair value gap get formed as we move away. So like right here, right, this would be displacement through a high. We're displacing above a high, leaving the fair value gap. That is the displacement to me. So when I see something like this, if these areas can get inverted, I'm a little more keen to want to actually use those as areas of entries because these are going to be the key levels in price. Right? Whereas like, let's say, like just notice when we're clearing lows, like when we clear this low, right? It's just a wick. No displacement or anything. The displacement comes as we move away. And that's why we actually hold that fair value gap for the time being. Granted, we are in consolidations. That's why it's ugly. But displacements, yeah, displacements are usually what are going to create the fair value gaps. right? Displacing through old levels. And one thing that you can really look for, like for continuations, or I guess reversals either way, is displacement above highs or lows with the fair value gaps. Those are almost like always key areas. So like here, we're breaking through a high, displacing through it as we break the high. Hold on, let me hide this. So as we break through the high, right, we're leaving behind that fair value gap. That's what holds us. As we break through the high, we're leaving that fair value gap. That's what we retrace into. Do you find the staggered liquidity voids in the gap to be a magnet? Yes. If you're referencing as far as like the untapped inefficiencies, or you mean the volume imbalances, I'm guessing actually, is what you're referencing. So if you're talking about like these, yes, I like volume imbalances a lot. So I'll also use those in reference. If we have multiple though, that's where it gets a little fishy. Right, I won't always use multiple in a row like this. I simply use that more as a order flow confirmation or a tool to use to gauge the order flow. But like here, like the one that we were using this morning, right? This was a key one because it was the only one, and that's a true liquidity void. So that's a lot different than like a normal volume imbalance. As we said, a normal volume imbalance will look like any of these in here, to where when the candlestick opens, the first movement will be to tap the actual close. So immediately reprice that volume imbalance. Where these ones are true liquidity voids, and those are always going to have higher priority, and that's why you see, right, that's the actual one that is what price uses to get lower, right, to trade lower. But yeah, what did we close at 415? The 415, oh, we almost did. So I mean, that's pretty much textbook, right? Let's kind of look at this now. Hide everything. The weekly range, huge expansion, all bullish delivery, clearing the weekly high. However, the weekly wick will always be presented, so we can expect to revert into the previous week's high. And I mean, if we just looked at this like that, look where we're sitting, perfectly there. So that's just how we can anticipate, right? What leads to anticipations, how we can expect where price will go. 985, we got 15 more. At this point, we're stalling. We're just stalling, waiting for the 1,000. Is there any other questions? We're in a full Q&A mode at this point. If not, I'm just letting this up. Just more so going for the personal best stream record. And on the day, I guess, how much we got on the day? 1,300 on the day. With everything. So this was the full day's execution. So you're seeing it all. 2 turtle soups. Didn't work out. Few break evens. But the winners outpaced the losers. And that's usually how it always is. How did NQ play out today? Still never got that high, so yeah, we just kept that SMT. So we might actually, let's just like forecast ahead. Sounds good, Savage. I will see you Monday, brother. Yeah, you guys can bounce at this point. We'll be pretty much done. Just forecasting some moves. I'm just gonna set up actually my kind of charts for next week. That's what we'll do. So what I like to do is I like to go fresh restart to clear it all. Fresh restart. Let's see where we're at. So in a weekly sense, select this. Right, daily high. buy side. Gonna want this daily up for next week. Keep walking down 4 hour. So before we get there, we've already gotten above. Last premium prior to the liquidity becomes important, especially if we have yet to get into that. So yeah, I like that. Especially because, right, notice we hold once, reject, we hold, reject, we hold, reject. Now that we've closed above, that should be actually a key area. So watch that. 4 hour, daily. Walking down, that plays nicely. Okay. So I'll have this going into next week. Right, these will be our areas of interest. So we have our liquidity pools that we can target. That's aggressive. This is pretty clean. So within, if we're going to kind of venture into the daily, we're going to have sell side. Appreciate you, brother. Appreciate the kind words. I'm glad you find it helpful. We're just trying to provide value, so I'm glad if you guys find some value in it. $9.99, one more view and we're done. We're almost there. I know some random guy's gonna pop in. As far as the 1 minute, we never got into this, did we? So actually, I think that may be a good target for next week. The NFP fair value gap was never breached or never retraded into. So actually, yeah, move this 4 hour. I want to see how this. I'd like to see that sell side right there. Cool. And we're there. All right, everybody. Well, 8 hour stream in the books. No, it wasn't that long. More like 7. How long was it? It was long. That's all we'll say. If you guys were here the whole time, y'all the troopers. If you weren't, anyone who was here, I appreciate y'all hanging out today. And yeah, we'll be back on Monday, 9:25 Eastern. So until then, have a great weekend, everybody. And we will talk next week. See you guys.